When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From government.
Back with India Market Open right here on NDTV Profit. We'll have a small dip on Open. The question only is, does it get extended or will it get bought into? I think remains to be seen. And we'll talk about that too. But just a special focus on autos before we kickstart the main conversation around what the trade could be like today. And for that, I'm going to get my colleague Puneet in, because what's happened, viewers, is that the auto retail momentum has possibly remained strong in May because the Vahan registrations have risen YOYS. So Puneet, we've spoken to a bunch of managements who expressed this as well, but what is the hard data telling us?
Well, thank you for that. As you rightly mentioned, it's been a strong month for the auto sector and it's still not over. So it's already crossed that 19.7 lakh mark, and this is the highest sales that the whole sector has done essentially in May of 2026 compared to the last 8 May. So we've analyzed data over this time frame, almost since May 2018. This is the highest record figure at 19.75 lakh units. This, of course, includes all categories, all company vehicles that are registered and actually sold to the consumer. So this is actual retail sales and not the one that goes to consumers. And the trend is visible on your screen as well. The last time this number came through was way back in May 2018. Since then, we saw the dip during the COVID years of May 2020 and 2021. Then that recovered through yet again. So last was also May 2023 was also a strong number, but a very, very strong session yet to end the month, of course. But already signs showing of continuous momentum in the auto sector yet again, despite 8 months post the GST rate cuts. I also just want to highlight the category-wise data as well, because two-wheelers continue to dominate the news flow at this point of time. And that's the comparison that we've done for both April and May for 2026 compared to the last year. So that trend is showing for both two-wheelers, for passenger vehicles also a very strong number at 8.78 lakh units, as well as for the CV makers, where you've seen that number being higher compared to the last year, despite 3 to 4 days more left for May. And finally, in terms of what we've seen on specific players, now when you look at, of course, the next 3 to 4 days will be crucial in terms of registration, but most players have already achieved 85 to 95% of their last year May 2025 sales. So when you look at the number, barring Hero MotoCorp, which is at 81%, all other players at 89 to 80%. What this means is, in the month of May 2026, the last 27 days essentially, they've already achieved 85 to 95% of the sales of the whole month of May 2025, and the trend visible for each player on your screen right now. Notable ones are Maruti Suzuki, which is at 95%. That's one of the highest ones that they've seen. And for Mahindra and Mahindra, that continues to be at 80%, and Hyundai at 87% as well. So this is just a trend of the retail sales, the actual sales visible, and the player-wise data that we're presenting for 4 more days yet to go for the month of May.
Okay. Okay, thanks a lot for that, Puneet. I really appreciate. Let's get in our guests on this conversation, and maybe, like we said, first start with autos. Avinash Gorakshekar, founder and head research of Avinash Mentor Research Services, with us on the show. In a bit, we'll of course talk to Kush Bora on the charts as well for the market, right? But since we're on the topic of autos, Avinash, good morning. Great talking to you as always. What do you make of autos? Is there merit in trying to own them? Do you like the data that has come out, and is that good enough for you to make fresh investments?
Yeah, good morning, Neeraj. I think, looking at the trend in the month of May, I think markets continue to remain strong because on ground, demand has not come down. And despite the fact that steel prices have gone up, there could be a little bit of margin pressure in the Q1 of FY27. But I think overall, volume growth has been very strong. And I think noticeable players like Maruti, Mahindra and Mahindra, Tata Motors, PV, these are the companies where I think the Q1 should be reasonably good. I don't think you're going to see any letdown in demand. And overall, I think, Mahindra and Mahindra is sitting on a very strong order book of its electric vehicle portfolio. The tractor business is also doing well. And plus with a good monsoon, hopefully, I think rural demand is also going to benefit them. So I would say that, yes, I think Mahindra and maybe, Tata Motors PV could look interesting at these levels. Mahindra stock has corrected from highs and I think definitely looks attractive from a medium to long term kind of time frame. So I think gradually one can take positions here because as I see the Q1 is going to be very selective for few sectors, and auto is one of the sectors where possibly we could see the strong momentum continuing even for the Q1 of FY27.
Okay, I want to come to Kush on what he's seeing on the charts. 24,000 to Delhi dur hai and 24,000 is becoming a pain.
I'm not starting with all of that today. Not a chance. Did you guys hear? Tamanna won an award last evening.
Which one? What?
आप लोगों ने नहीं सुना?
Good morning,
कौन
Kush.
सा वाला?
Morning.
कौन सा
Oh,
वाला?
कौन सा वाला? There is a
बहुत
list
देख
of
लिया
them,
है।
is it? ऐसे कौन celebrate करते? There is no confetti. I thought there'll be a big Tamanna poster, in the
No,
background.
we thought you would make that entry.
If I knew I could have, I would have. And at the very least, मतलब एक coffee तो होना चाहिए, right?
Your coffee is
We've
coming.
been promised
Kush.
that.
Your coffee is coming thanks to quick commerce and food delivery apps. Your coffee is on
we've
the
been
way.
promised that अगर 9:30 तक मुझे thank you करने के टाइम मेरे हाथ में कॉफी कप नहीं हुआ तो you know कि वो promise fulfill नहीं हुआ है, ठीक है?
It's on its way. It's on its way. But
But all of that on a lighter note, thank you so much, Tamanna, for the coffee. But many congratulations.
Thank you.
And I know for a fact that this is 200% very well deserved.
Thank you,
this is just the first of many to come. So congratulations once again.
Thank you, Kush. Thank you for that.
Now over to markets. Mixed cues ना सिर्फ geopolitics में नहीं है. Nifty में भी mixed cues आ रहे हैं फिलहाल, right? You asked me yesterday, is there a big rally in the offing after hitting the 24,000 mark? Let me just give you a flavor of those mixed cues, right? So yesterday's consolidation was very much on expected lines. We've had a good run for the last couple of days and then a brief pause, right? But look at this, a bearish engulfing pattern, which typically signifies exhaustion, at higher levels. That was made on the daily charts, but the 20-day moving average was respected. Nifty fell down, but so did the wicks. Again, contrarian signals. The indicators, the technical indicators are largely neutral to positive, right? But nothing rara to say that, this is a big breakout rally, in the offing. So from a very near-term perspective, I think the range play on the Nifty will continue. Of course, the good thing is that the range has shifted higher, right? So now you've got supports at 23,600, 23,700 and immediate resistance at 24,100, right? So maybe you could play the range, on the Nifty for the day. But, as the saying goes, when in doubt, stay out. So I really wouldn't suggest trading on the Nifty, from a positional standpoint. Intraday trades are fine. Bank Nifty, that's the one that we've been talking about for a while, has done rather well. Yesterday consolidation was very much on the cards. But just a quick question, guys, on something related to Bank Nifty. Of course, you speak to so many people. Have you heard anyone put out a banking stock call off late? Does it sort of ring a bell?
Apart from Parag
Bhai, of course. Apart from Parag
Makes up for everyone else, but yeah, he's gung-ho on banks.
Especially ICICI and HDFC, like we know, right?
And Kush has been gung-ho on banks too, right?
On Bank Nifty.
Yes.
But see, here's the thing. Even I, have not really, with all the enthusiasm and optimism that I have on Bank Nifty, and it's run up 2,500 points in the last 5 sessions or so, haven't put out a single banking call out. The reason is that the structure, when you look at the components, isn't all that great. The private banks rebounded from oversold levels.
No, so then what is pushing the bank nifty?
Yeah,
you like the index, but you don't like the individual counters.
Counter logic, but somehow that's what it's played out. See how fragmented the move is. One day you've got the private banks doing their thing, and then the next day the PSU banks take over. The leadership is also changing there. So, like I said, since the structure on the bank nifty itself technically is positive, we will remain positive on bank nifty for higher targets of 56,200, 57,400 until one of the big boys, HDFC, ICICI or SBI, gives you that big breakout and that big moves and takes charge. But like I said, the move is still fragmented, but the structure on the index remains positive. So we remain constructive on bank nifty. If you have a position, you could trail your stop loss to 54,200, 54,400 levels. So that's the word on the indices.
Okay. Since we have been speaking about auto as well, and you're not so excited about banks, what is the view on auto on charts? Because a bit of a debate there as well.
Yeah, and I don't think I'm going to help clear that debate up. I'm probably going to bring in more confusion. But I have a tilt towards the bullish side now for a very simple reason. Neeraj, I'm sure you'll recall, there is one auto OEM that I'm actually short on, or my view. Hyundai, absolutely. The view is starting to turn constructive because there is a higher high, higher low formation that is on the cards. Moving averages being crossed, and there's a falling trend line resistance that is being crossed. So when a prime shorting candidate, and a big one at that, starts to turn a corner, you might want to perhaps reconsider that view. So hence I'm considering that, short trade on Hyundai, it may not be really valid anymore. Like I said, there is a good traction that is building up in the OEMs, but the auto ang space has been doing very well. I will keep an eye out on some of the big names on the auto space, especially the OEMs, but I still favor the auto angs.
In fact, there's a brokerage note today. I think JP Morgan has come out with a note on Hyundai, and their target prices are higher as well. So interesting bunch of data out there on autos today.
Yeah, interesting bunch of data on autos, but on auto ancillary, you have been positive as well. At the moment, with the kind of run-up that's already come in, anything specific that you like?
Hiral, that's the beauty. They just continue to do well. In fact, one of the picks that I have today, and I'll share those as well, Samvardhana Motherson, remains a buy call despite having hit the target 1 and target 2. The kind of momentum and strength that there is, there's a good possibility that it might actually continue this run. Gabriel India, Bellrise, some of these are anyway stocks that we've discussed, and like I said, there is still strength in a lot of these names, so I continue to remain bullish, and I'm a big fan of following strength, not momentum, but following strength, and there's definitely strength in some of these names. Now, just to complete the discussion with the stocks today, the 3S calls today I have incidental: SAIL, Samvardhana, and Samman Metallics. One of them is an update, by the way. So SAIL, did well. We've seen the stock resist around the 200 mark, but yesterday the closing was comfortably above this 200 level. The momentum could well continue, and metals anyway have been doing well. So 209, 214 are your targets. 199 is where you keep that stop loss. Samvardhana Motherson, the reason I mentioned this again is because 135, 139 were our targets before. 135 was hit comfortably. You could still stay on or get into a fresh trade for targets of 140 and 144. Stop loss at 132. Sham Metallics is a call that we discussed yesterday. First target 985 hit. Again, good momentum, volume action day on day getting better. So 1008 and 1035 are your revised targets. Bump up the stop loss to 955. One quick update on a stock which did phenomenally well yesterday, which is Marksans Pharma. Now, the reason I mentioned this is because 2 weeks ago, this was our weekly pick. उसी हफ्ते में target 1, target 2 सब hit हो गया था, but I think yesterday was a result impact because of which the stock did what it did. If you have a position, not a bad idea to at least now go out and book profits. I think our second target was 225.
Okay. Meanwhile, the other big story, of course, is the Coal India OFS. And in case you missed it, this is news that you heard first on NDTV Profit. It is a khabar confirmed. We reported this from our Delhi bureau as well. Coal India has launched an offer for sale with an issue size of 5,000 crore rupees and an additional green shoe option of 2,500 crore rupees. Samit Sarkar joins in with more details. Samit.
Well, yes, 5,000 crore is the total OFS size. Base issue is 2,500 crore, while there is an additional green shoe option of 2,500 crore. The price is at 412, which is at a discount of nearly 10% compared to the current market price. So this big discount could be an overhang as per Morgan Stanley. Now, this is not the first time where Government of India is looking to sell stake in Coal India. They have done it multiple times, including the IPO amount. So far, the government has mopped up nearly nearly 47,000 crore rupees by selling stake in Coal India over the last 16 years. And if you add this 5,000, the total amount would increase to close to 52,000 crore rupees. Now, the IPO of Coal India came in back in 2010 at a price of 245, while the current market price is close to 450, 460 rupees. And the biggest OFS in Coal India was back in Jan 2015, where it was close to 22,000 crore rupees, where the government sold close to 10% stake at a price of 358. After that, the couple of OFS that the government had done were at a lower price. In 2018, they did it at a price of 266. In 2023, they did it at a price of 225, 226. And right now, they are doing at a price of around 412 rupees. 5,000 is what they're looking to mop up. 2% is the equity that the government will be selling via this OFS, and this OFS will open for non-retail shareholders today and for retail shareholders a day later on 30th of May.
Okay, so thank you, Somit, for that. In fact, a question I want to take with Avinash also on this. If you talk about the OFS, it's at a steep discount to the current market price. What you're talking about, a 10% discount. And that's what Morgan Stanley is also highlighting, that this could probably be an overhang in terms of the stock price. And if you see in terms of the way the stock has moved upward around 20-21% in the last 6 months, Avinash, do you think this could be a major overhang in the near term where you could see heightened volatility when it comes to the stock price, but fundamentals still remain intact because lots brewing when you talk about gasification as well?
No, I think, Hiral, you're right that normally whenever OFS is announced, you see that in the near term, the stock price trend becomes relatively weak. I would say that despite the fact that, the stock is going to be offered at a reasonably good discount, there could be a little supply overhang in the short term. In fact, you could see a little bit of selling pressure ahead of the OFS. My sense is that, markets are definitely expecting better numbers from Coal India, in Q1 of FY27. But in the near term, the stock could see a little bit of correction because the OFS actually does not add any value to the company. The money goes back to the government. And I think this kind of supply overhang definitely will have some impact, at least in the short term. So I think, avoidable for investors as of now. I think let the stock settle down once the OFS is complete. And then I think one can take a, call, hopefully, on the hope of better Q1 numbers.
So, similar to what Coal India is saying, Morgan Stanley is saying on Coal India, similar to Avinash's view, they've maintained an equal weight with a target price of 420 rupees, less than the current market price. They're saying that the floor price is at a material discount to CMP. It should act as an overhang, and we expect the stock to remain volatile in the near term. Anything exciting on the charts to write home about on Coal India?
I think this dip should be bought into, maybe not immediately.
Oh, interesting.
I'll tell you why, because this stock is no stranger to a dip of anywhere from 10 to 15%. Even now, if you see from the recent highs, it's already down about 8-9% or so, right? If it comes to the price that is just mentioned here, as the OFS price, the drawdown could be about 15 to 18%. Like I said, the stock has a tendency of dropping 10 to 15% and then rebounding. So still has that rising trend line support. Close to the 420, 425 mark, I agree with that view. 420, 425 mark, this does become an interesting buy. Keep your stop losses just under 400 in that case.
Okay. But Somit Sarkar still with us. Somit, that is one cover confirmed. What else do you have on your list today?
Well, firstly, couple of aluminium names, Hindalco and Nalco. There are buy flows on the institutional desk. Both foreign and domestic institutions have been accumulating this counter, and dealers indicate some aluminium capacity curb might come in China, which in turn will benefit the prices and will benefit aluminium producers as well. For Paytm, there are buy flows on the large HNI and PMS desk. Dealers are expecting some positive news flow here. And then when it comes to PG Electroplast and GMR Airports, there are sell flows on large HNI desks. Dealers are expecting weak Q4 numbers. Specifically for PG Electroplast, they're expecting a big miss compared to what the street has been anticipating. So keep an eye out for PG Electroplast as well. And lastly, when it comes to NMDC, multiple dealing rooms are recommending buy calls to their clients based on charts. So keep an eye out for NMDC as well. And Coal India, as you mentioned, we did this in our cover segment on May 14th, where we did indicate to you first that the OFS will be launched anytime soon. And yes, the OFS has come out today.
So that is definitely a cover confirmed from Somit Sarkar. Somit, you can smile about it. That was a good news break that you got in place. Okay, there you have it. Pulling that smile out of Sumit is very, very difficult. But yeah, it goes
2 rubber bands on each side.
no, but a small one goes a long way in terms of his smile. Okay, JP Morgan on Hyundai. Since we had so much conversation around auto, I thought this was interesting, and you know, we're talking about sustenance, etc. JP Morgan has maintained an overweight on Hyundai with a target price of 2,135 rupees. They're saying domestic demand is likely to remain strong in the near term. Multiple drivers of exports in the near and medium term. Ambition to have an EV mix at least in line with or higher than the industry. The company has multiple levers to protect margins and capex to support new model cycle and capacity expansion. Hybrids need more time to become mainstream in their view. Avinash, Hyundai is a stock that you like?
See, I think looking at the trend in the passenger car sector, I think Hyundai is now coming back with a stronger kind of volume growth trajectory. So I think, yes, I think from a longer term perspective, you know, I think one can definitely look at it at the current level. I would believe that the financial year FY27 should be significantly better. Most importantly, you know, I think new product launches have also boosted the volume growth. So clearly at 1800 odd rupees, one can take a long-term call, but I think Maruti definitely looks better. I think Maruti could possibly outperform Hyundai in terms of volume growth, margin expansion. So I think within the given choice, I think Maruti could be a better choice.
Okay. You know, the other cohort of stocks which has done so well is Adani Group stocks, and standard disclaimer, of course, the Adani Group owns NDTV and you're watching NDTV Profit. But Adani Enterprises hit a level of 2959. And you know, this is the point that we were making the other day, right, when Parag Thakkar was here, that at 2700, people may not feel, oh, 1850 se chala hai, to ab kya lenge? But the momentum was in favor. Now, my question is the momentum still in favor for you to create fresh positions? Because, I mean, even if you're carrying an existing position, Kush, you're effectively saying what? Betting on the position continuing. So, no, I'm making a fresh position or continuing an existing position. So, that argument is gone. Should people bet on any of the Adani Group stocks, or is it time to take some chips off the table if you have longs?
So just yesterday, incidentally, I was looking at this cohort and this group of stocks, and just for the first time, I was wondering कि काश इसका weightage index में थोड़ा ज़्यादा होता. Look at the kind of stellar moves that they've made, all of them, right? And you know, I think Adani Enterprises was close to about 1900 or so, or 2000 or so when we said कि यहाँ से breakout है, और वहाँ से you're looking at about 3000 odd levels right now, right? Near term में Adani Enterprises पे overheating, and I'm speaking specifically about Adani Enterprises right now. Near term में overheating है, but the trend has changed after a long period of consolidation, and when that happens, the breakout also is bigger, right? So I think this move is here to stay. अगर आपने बहुत नीचे से position बनाई है, not a bad idea to partially book and then maybe re-enter. But the interesting setup is on some of the other names. Adani Ports, Adani Power. You know what happened here? The stocks fell about 4 to 5%, maybe 6%. But the excessive cooling or excessive overheating just cooled off. And then you had this next leg of up move in the last couple of sessions. I think if you want to consider positions even now, you should look at Adani Ports, you should look at Adani Power. These are some of the names that have strength even from these levels. Adani Enterprises, like I said, if you do get a pullback, close to say about 27, 25, 27, 50 odd levels becomes a good entry point. So I think this is a big breakout after a long period of consolidation. Moves could very well continue.
What about Adani Total Gas with the surge that we've seen in yesterday's sessions? Very smart moves. They have got a new CEO, so I mean that could be one of the triggers. But what are charts indicating for this one?
So the move on this one hasn't really been as one way as it has been in some of the other names. It's had its fair share of ups and downs. My suggestion right now, if you did have a position, you could book profits partially, but even this one's gone above that resistance level of about 685, 690. So from a medium term perspective, it could do well. Near term, there is overheating on this one as well. Hence, I'm suggesting partial profit booking in a lot of these names and not a complete exit. So Adani Total also looking good. My preference still remains with Adani Power and Adani Ports, and Adani Enterprises on declines.
Okay. In fact, there are a whole host of other results as well that we're focusing on today. And of course, standard disclaimer on the coverage that we just did. You're watching this program on NDTV Profit, which is a part of the Adani Group. It's a subsidiary of AMG Media Networks, which is an Adani Group company. Let me go across to Mahima now, who's talking about all of the other earnings and stocks that should be on your radar. Good morning, Mahima.
Good morning, Tamanna. So I'll start with what earnings fared well. So there's Senco Gold, strong Q4 numbers on the back of good festive season demand plus top line driven by gold prices. In terms of Phenolics Industries, revenue was largely aided by better realization. So this stock could also see some positive action. PNG Health, very good set of numbers, beat in terms of all four metrics versus the estimates. Cararo India is the other one where strong export performance has driven the Q4 numbers and aided the top line as well. In terms of landmark cars, after sales, strongest ever quarterly performance is what this company has seen in Q4, and Gandhar Oil has seen a turnaround quarter for Q4 FY26. Just Engineering is the other one where there has been improvement in terms of where operational profits go. And lastly, in terms of where stock that could see some negative action, there is Equace where losses has increased on a year-on-year basis, and that's why it could see some pressure in trade today. So this is an entire list of some stocks that you could keep your eye on the back of numbers.
Okay. Thank you for that, Mahima. And, so maybe a video that has been doing the rounds for the last few days and has become very exciting is of Vector Technics. It's India's largest indigenous drone motor manufacturer, producing 5K motors a month. Now, why we thought this story was important and interesting is because we're speaking so much about Atmanirbharta at this point, and this sort of leads into that. So we've got a great conversation lined up because we have with us not just Vector Technics, which has become India's largest indigenous drone motor manufacturer, producing 5,000 motors per month, but also Zentech, which holds 51% stake in the company. So Ashok Atluri, Chairman and Managing Director of Zentech, with us on the show now. We also have Prudvi Raj Pakalapati, please pardon me, Mr. Prudvi, if I've said your name incorrectly, of Vector Technics, who is joining in to talk on this. I'm actually going to go to Mr. Prudvi first to explain why this is an important landmark.
Oh, thanks for getting my name correct. So
fair enough, close enough, and apologies if I didn't.
No, it's perfect. So coming back to your question, it's such a landmark because when the world was looking at drones, and majorly when we are becoming a drone hub for the world, we need to have our foundation solid, and we are fortunate enough to become the solid foundation underneath the drone company. So we are the subsystem company specifically focusing on propulsion, which accounts for about 40% of any drone. Because the entire industry was primarily being very import driven because of lack of subsystems in India, that's where the focus point was for us. And we did a lot of research since last 7 years. And with recent funding and mentorship from Zen, we were able to make that a reality. And whatever you see in the video is just built in last 10 months. And we have huge traction. We have to thank all of our Indian customers and few of our export customers elsewhere. So yeah, we are truly being the part of the global manufacturing hub for the world. India not just being the service export, but will be a product export country very soon.
Okay, Mr. Atluri, you've been talking about this subject for a while now. Multiple conflicts across the world have showcased the importance of this ecosystem development as well. Talk to us about what, of course, Prithvi just mentioned, and what are your thoughts on what this particular company does, of course, Vector Technics, or the ecosystem is doing right now?
Yeah, I mean, we have always held the view that, it should not be just make in India. It should be design, develop, and make in India. This is the company that is completely ground up built. They famously say from metal to motor. So, so I think we invested in this company and we are very, very impressed with what they are delivering. And, Prithvi is being a little, not overstating it. But the reality is that the product that they are making, there is, a lot of inquiries coming from Europe, from America, and the team from Prithvi and his partner, they have been to US and they have said that there's nothing, what we are making in India is, way ahead of what's there in other parts of the world. So I think this is a very, very big story. And I think, these guys will be expanding rapidly now, scaling up rapidly.
Okay, thank you so much, Mr. Atluri, for joining in today on this, and of course, best of luck Prithvi as well. But let's talk about JK Tyres, and that's the big one this morning, isn't it, Neeraj?
Yeah, Tana. And as the markets start up as well, but JK Tyre, the stock should come up because it's 9 a.m. And I wonder if there is a bump up there. Yes, there is a bump up here. It reported a strong fourth quarter numbers. Let's get in Anshuman Singhania, Managing Director at JK Tyre, for a quick conversation. Let's start with whether, Anshuman, thank you so much for joining in. Congrats on a good quarter. Let's start with whether whatever happened in quarter 4, is that continuing on the ground in quarter 1 as well?
Well, we are very happy to report that in terms of our consolidated revenue, we've had the highest revenue for FY26, and we've had an 11% jump. Even our absolute EBITDA for quarter 4 jumped to 42% on a year-on-year basis. And right now, we are seeing that the momentum of demand is quite intact, and we are seeing that even in the OE and the replacement market, there has not been much disturbance, and this is all led by the reforms of the GST, thrust on infrastructure led, and the consumer sentiment. I hope this holds on, but we don't see any much disruption right now.
Because we had a CEO yesterday who said, Sandhartek, I think, that May is superb, and if it continues, it could actually be really good as a record year of sorts. Would you second that? Is the India business continuing to do well and outperform on the current scenario on the ground?
Well, current scenario is good right now, and I would say that there has not been any major cuts by OEM, be it the CV, be it the passenger radial, in terms of our tire inwarding. So that momentum is good, and any which way, April, May, June is the highest month of selling for tire industry, and even in the replacement market, which is the aftermarket, we are not seeing any much of disruption or the demand slowdown.
All right, Anshuman, I repeat my question though. Could this turn out to be the best year for autos? There are managements who are saying this. Would you second that?
Well, this year was very strong for the OEM segment across the sectors, in the trucks and in passenger, even tractor. With such a high base of double-digit growth coming in, this year could be little muted. I would say it will be a strong single-digit coming in this year.
Got it. Anshuman, the other aspect is the raw material cost, right? What is the impact of raw material cost for you? And have you taken any price hikes? Would you need to take more price hikes to offset that?
So in quarter 4, there has been a 1% price increase compared to quarter 3. And now we are seeing going forward in quarter 1, there is a price increase of almost around 18 to 19% price increase. On that, we have already increased our price in the aftermarket to 4 to 5%. We have another 4 to 5% price increase going forward. And we have already increased our price to about 5 to 7% in the export market. And OE is always linked to raw material prices, so that's always a lag effect which we will get.
Got it. Anshuman, and one is, of course, the raw material impact, but two is the overall impact that you're seeing, right? Shipping, costs, so on and so forth, disruptions, etc. What is the impact of the US tariffs as well as this conflict that is on right now, and what does that do to your business strategy?
Yes, you are absolutely right. Because of the West Asia crisis, the export to Middle East is definitely hampered, but there are still export which is going on at a low volume to the Middle East. There has been disruption in the supply chain, And so we are taking care of the supply chain, making alternative arrangements and price corrections. There has been also, we have also shifted to a lot to east in terms of our raw material sourcing, and even using alternative sourcing materials in our product lines. So in a whole, I would say that right now we are fine, but if this goes on, quarter after quarter, then definitely there will be some kind of a disruption which will be across the board for everyone.
Got it. And Anshuman, I would just love to know, COVID taught us a lot of things. What is the biggest learning from these times? What are the measures that you're taking in place, keeping in place to, move the continuity of the business? And if there is a guidance that you're giving for FY27?
Well, you are absolutely right. In every crisis, there is an opportunity to learn, an opportunity to retrospect. And I think the most important thing is the agility to adapt to this changing environment. And our use of alternative raw materials, approving sources of from the east very swiftly has definitely helped us and is going to continuously help us in strengthening. And I would also say that there has been a degree of uncertainty which lies in terms of how things will pan out going forward. But with some demand which is there already in the domestic market, underlying demand, because the structural reforms have definitely helped in this momentum. And I think that the silver lining is going to be that the domestic demand should be on a positive outlook. So that should definitely help us in navigating through these difficult times.
Yeah, well, all the best for that and more. Thank you so much, Anshuman, for joining in and giving us the perspective. Really appreciate your time. The stock at the end of 8 minutes seems to be doing okay. 5.5%, actually better than okay. 5.5% higher, so not bad going. I wonder if some of the other tire stocks are doing the same. Chandan Taparia, Head of Technical and Derivatives Research at Motilal Oswal, joins us on the show. Chandan, great having you. Thanks for joining in. Before we talk about the markets, and frankly, talking about the Nifty seems to be almost pointless these days. But since we're on the topic of tires and JK Tyre just finished their interview, I wonder if you're constructive that bucket. Apollo Tyres, JK Tyres, Seat, what have you?
Yeah, good morning. Thanks for having me. So yes, most of these counters are forming the bottom. Earlier, we have seen some profit booking when the crude prices were surging upwards. If I specific on JK Tyre, it witnessed a corrective move in last 4 months, corrected from its high of 610 to 357. But in last 3 days, it has bottomed out and forming the higher top, higher bottom. Even on the weekly chart, the stock has turned with bullish divergence, which indicate that some recovery could be there in the counter. So as of now, with support of 383, it can head towards 424, 45. If I look at the other name, whether C8 or counter like Apollo Tyre, same kind of setup is visible. But given choice, I think JK Tyre is well placed and all set to see the movement of 10 to 15% altogether if someone is looking for 1 week to 1 month kind of point of view.
Space is going to be absolutely interesting because if you're seeing some good momentum in terms of OEMs, your ancillaries will also tend to move. But moving on to a big brokerage call for the day, you have Jefferies, which has maintained a buy on Hitachi Energy. And Hitachi Energy, if you just look at a 5-day chart of this company, you'll see the kind of moves that have come in on this counter. Sharad joins us with more details on their rationale. Sharad, good morning. What are you picking up and why Hitachi? Because we've seen a good run up in terms of all of these energy companies.
Well, interestingly, Hiral, the target price is something which is very surprising. They have maintained a buy rating, but look at the target price hike coming in from 25,000. They're increasing it to almost 43,145 rupees, and they have given a very large range of EPS growth, for the next 2 years between 10 to 27%, and a structurally important growth story. Overall, the demand trends are important, and also the HVDC projects. That is where it's going to get margin accretive going ahead as well. They recently announced an additional capex as well, because to meet the higher industry demand coming in, data center and exports, that is where the bullishness is coming from the broking houses, and also add your transmission and distribution demand to it as well. A 58% EPS CAGR expected next 2 years, and also a 35% CAGR expected in terms of earnings going ahead as well. And because of these lofty outlook going ahead, they have increased the target price significantly to almost 43,000 plus.
Okay, Hitachi Energy showing some action today, but obviously some of the run-up has already taken place. Look at what else is buzzing. I want to pull up a Finolex Industries. Look at a Coal India. We talked about that OFS and how it could have been an avoid, according to Avinash Rakshakar. Kush Bora said that on dips, look at it as an opportunity. In the pre-open session is closed about 6% down. I wonder what you think about Coal India on the charts, Chandan. You're going to see pressure because of that OFS. Is it a buy?
Yeah, so if you look at the counter like Coal India, yes, some sort of decline could be there, but the good part is that supports are intact. In fact, we have noticed some recovery in last 5-6 months. The stock really do well from 370 to 490, but from last couple of days it has been consolidating, holding above 50 DEMA. Due to the corporate action, if it comes down towards 420, 430, I think that could be the best zone to buy for an upside target towards 480 to 500.
Okay, the other winners, Finolex Industries, in back of a good set of numbers, about 6% up. And you're seeing this now as a trend where mid-cap companies that are performing well in this quarter are being rewarded robustly by the street because the underlying corporate performance has improved. JK Tyres, we just spoke with JK Tyres exclusively. You heard how positive the management is. That's also about 6% up. Brainbees on our watch list, despite the high cost of diapers and competitive intensity there. That stock about 3% up. They've performed well this quarter. There's a order win on KEC International, which is showing some excitement there. So those are some of the winners this morning. But otherwise, a fairly muted view. Chandan, any of your picks that you'd like to highlight, once now that the pre-open session is closed, and what is on your radar?
Yeah, so if you look at my preferred name, then positive view on almost all the power companies, especially entire the Adani group of companies. So I'll recommend here to go long on Adani Energy Solution, one of the strongest counter, which really do well in last 2 months, and given a consolidation breakout of last 20 trading session. Yesterday it headed higher, has been making higher tops, higher bottom on the daily chart with surge in the trading and delivery volume. So Adani Energy Solution could be on radar with support of 1445, looking for an upside target towards 1540. Vogue Pharma is one of other name which looks quite decent for the next leg of rally. On monthly and weekly chart, it has given a consolidation breakout. Just a couple of days back, it headed towards 1778, then remained range bound. Now again, giving a positive momentum with bullish crossover on the mechanical indicator. So one can buy with support of 1685, and this pharma counter can rally by 4 to 5% to head towards 1770.
Okay, so, a couple of pharma names that we're talking about, just a couple of minutes away from pre-open, but a few stocks that come to my radar. Finolex Industries is up 6%, JK Tyre we've already spoken about, Procter & Gamble reacting to numbers that lower 4%, Brainbees Solution as well. Chandan, any of these earnings that you like from a Brainbees to a Procter & Gamble?
Yeah, let me first comment on the Finolex cable, where I see the positive price pattern. In fact, a consolidation has completed. Major trend is positive. We have seen a decent run up in last 2-3 months, and now this pause invites the fresh leg of rally. So even if opens positive, use any small decline to buy with support near 183. It can head towards 195 to 200. So one should focus on the same. If I add one more name, that will be the PNB Housing Finance, where I see a major consolidation breakout with support of 1065. It can head towards 1140. So I think these are the couple of names. And KC Internet also could be on radar where we are witnessing a supportive trend line.
All right. Well, a lot of ideas, but let's talk about what the markets will do this morning. And we'll start off lower. The question only is, can we build on from there, or will we have some pressures? I think that's the key question. Well, we're starting off flattish, about very, very flat, with the bank nifty 0.19% or 0.24% lower, but the mid caps are doing okay. I wonder if the small caps are doing fine, because the market breadth is looking fine too, 0.2%. So no complaints with the breadth. Again, goes to show the nifty may do what it does. There will be individual movers and shakers which will actually could do well. Let's put it that way. But it's a flat start, at least for the headline indices. Let's get the heat map up on the screen and show you what's moving on the Nifty 50. More green than red, so which means that some pressure points, and HDFC Bank has that news flow, which is why it is down about 2%, and we'll talk about it a bit. ITC down 2%. Coal India, obvious pressure points here, 5% lower. There is weakness in ONGC, down about 3%. Some profit booking maybe in Adani end. But you know, look at this. There are 4 names which are cracking, and then the list of losers isn't too bad. So, and there are a lot of winners too, by the way. Hindalco up 3%. There is strength in JSW Steel, Tata Steel today, Eternal, some gains, etc. So pretty interesting. This market behavior is interesting. If you can just pull up the points contribution on the Nifty 50, because it will show you what's happening. It is essentially 4 stocks and the pressure that they are putting for having that stress on the Nifty. Otherwise, the rest of the market on the Nifty 50 is not doing all that badly, by the way. More winners than losers. And Tamanna, I reckon that's the case at the broader end of the spectrum as well. So, interesting beginning. It is not a simple market open. A lot of pressure points here, particularly by HDFC Bank and Coal India and ITC.
Okay, in case you're wondering what's happened with HDFC Bank, the Indian Express has put out a story this morning saying that an internal probe found that some amount spent on marketing to the tune of about 45 crores was camouflaged by the bank. We don't know if this is true or not. This is a report by another publication, but that is one of the reasons you could see some pressure on HDFC Bank. Having said that, if you look at the Nifty overall, now in the green, so not as bad as what the indicative open or the implied open was telling you. It's flat, and the advanced decline ratio is not bad at all. I want to pull up the mid cap and the small cap index, about 0.25% up. On the mid cap 150, a little more than that. Small cap 250 is actually doing much better, and this is in line with what every analyst is saying. Look at just what Lawrence Blanco is also saying this morning, and he's saying that the breakout is going to happen in the mid cap. It's the small cap that's roaring right now. Let's pull up the sectoral heat map if we can, and look at what's happening there. Metal stocks are firing. Everything else is just along for the ride and slightly muted. Oil and gas seeing some pressure. That's largely ONGC, I'm sure, and that's possibly the case for the CPSE index as well, and the energy index as well. So big weightage of an ONGC overall. I don't know if you can pull up a chart of just the ONGC before we get to some of the other stocks that we're looking at, and look at what's happening there, because it's results, it's lower production in the last quarter, and ONGC with its presence on 2 or 3 indices would pull everything down. It's about 4% down right now. But let's look at some of the other stocks that we have on our radar this morning and what's happening with that. I'm going to look at the results first. Right, JK Tires. We spoke to the management exclusively. You heard them on the channel at 9 a.m. Just doing very well, 6% up. Phenolics Industries, good set of numbers. Brainbees actually inline set of numbers, but they have indicated that higher costs might hurt further. That's why about 2% down. Stock was doing well in the pre-open session. Senco, I want to look at Senco Gold. It's been a rather decent set of numbers for all jewelry companies, but I think the impact of the government coming in and not really encouraging, or should I say discouraging gold imports would be wearing down, 2% down there. Landmark Cars, another robust set of numbers. I want to look at Aegis, which is a relatively recently listed company, not a great set of numbers. Ion Exchange, adding that in terms of the impact that you're seeing for earnings, and these were not a good set of numbers, so you're seeing that kind of an impact. Let's pull up KEC International. An order win has come in, about 0.5% up on the stock. Coal India, I want to look at as well. An OFS has been announced. It's weak, about 6% down. And let's see if we can look at Delta Corp, or maybe Hero can pick up Delta Corp. Supreme Court has ordered a order on states ban on online games played for wager, bet and money. So there is going to be some maybe relief there coming in for Delta Corp, 6% up this morning. So those are some of the movers, but it's a very individual kind of a move, isn't it?
Absolutely, Tamanna. Very stock specific, and that's what I think all of us have been talking about over the last couple of days, that there is no particular trend that's emerging in any of the sectors. You're seeing absolute stock specific movement that is coming in there. Transrail, a 6.5% downtick coming in on that one as well. AstraZeneca, we've already spoken about, which is reacting to the weak set of numbers. So few of these names are interesting, but with regards to HDFC Bank, as Tamanna was mentioning as well, let's just pull up that one on the screens once again. A 1% downtick, but the kind of impact that is having in terms of Nifty 50 and Bank Nifty, that is the key concern here. Where the bank has, the news media reports are indicating that the bank has camouflaged crores as marketing spends, and this is to pay higher interest to State Farm. In March, you had the HDFC Bank chairman who actually quit, citing ethics. And what the bank didn't reveal, they're saying, is its probe found that violating RBI bank's norms, they paid 45 crore extra interest to Maharashtra State Road Development Corp, and this was given out as sponsorship to for road safety norms. So that is probably the reason why you had a HDFC Bank react, but from the opening levels, it's recovered quite a bit as we speak. Let's just once again pull up the broader markets as well and see what's happening in terms of the indices, if any momentum picks up there as well. Mid-cap, 0.5% uptick. So clearly, mild bit of outperformance coming in on that front, and the small cap index, which is up 0.7%. Chandan, with the way markets have opened up, what would your top pick be at this moment?
So two topics I've given. Apart from that, I discuss about 3 to 4 ideas, and all the stocks are firing up. If I talk about the Adani Energy Solution, I think this stock is up by more than 3%. Given the target of 1540, I think that is on the way. Those who have bought can trail the stop loss to 1475. One of a classical breakout here we have seen. Apart from that, I've given the recommendation on the Vogue Pharma. The counter is up by around 3%, has given a fresh consolidation breakout. The target was given 1770. It can head towards the target as well, but one can trail the support to 1715. Apart from that, positive view on entire power space. CZ Power is one more name where I see a major consolidation breakout with coal unwinding and put writing at 900 strike. So with that, it can head towards 925 with support of 885. So these are the name one can focus, and PNB Housing all set to start the next leg of rally with support of 1075. It can head towards 1140. Cummins looks good. So I can see this is the market where you are getting so much idea where the headline index is consolidating in a range, because the Nifty mid-cap index itself has given a major breakout. So it's good time for the stock, those who are having the ideas in the mid-cap, small pick, and the selective sector and stock specific. I think party is there even after the major momentum in headline index.
So interesting names there. Kush, anything on your radar once the markets have opened up? Because a lot of individual stocks are firing. Are you seeing any opportunity of profit booking in any of the names or further momentum?
Yeah, I think I'll go with the latter, which is the further momentum bit. A lot of names that have opened, opened with perhaps a flat to negative bias, and then are now starting to pick up some ground. So I think it's a good idea to focus on the stock specific action. SAIL, Samvardhana, in fact even Shyam Metals, all the 3 stocks that we spoke of are holding on to their opening gains, or probably just building on to some. Not a bad idea to maybe consider a long trade. Do you want to take these overnight because tomorrow's a holiday? That's the only question. Structurally, they look good, and Nifty consolidating with a mild positive bias, I'll take that.
I think the point about a bit of nervousness before a market holiday is definitely something that's playing out, because otherwise there's no real reason for how muted the Nifty is right now.
In fact, Tamara, who would have thought that the Nifty mid-cap index will be hitting fresh all-time highs when the Nifty itself and even the Bank Nifty is so far away from those levels, right? So I think there is a bit of faith and the confidence that's already there in the markets. It's just not translating into the big boys' names. That's all. Otherwise, the stock-specific action is beautiful. I mean, you have to focus on that side of the market. Let the big boys do their own thing for now.
Big boys and big girls.
And big girls, my.
at least
for today, I should not have it.
Let's talk about it. Okay, now stay on with us. The next story is an exciting one. You may not be seeing too much happening on the stocks right now, but it's all over, and I think it's worth being highlighted. Eli Lilly is testing a path-breaking drug to cure cholesterol, because this is not a goalie that you have every day. It's a one-shot injection. If it works, there would be no need for regular medication. It's truly path-breaking. Varsha joining in with more details. Varsha, why is this such a big deal?
Absolutely. So India may become, or rather the world may become free of cholesterol, I would say, because this injection will actually cure your cholesterol, which is being, developed by or currently tested by Eli Lilly, which is the global pharmaceutical company. Well, the company is testing a new one-time injection to reduce bad cholesterol permanently. Now, how this is going to work is it switches off a gene in the liver that makes cholesterol. And this is done once, no need for regular medicines. Results so far, well, they've tested in 35 patients with genetic high cholesterol. The cholesterol dropped by 62% at highest dose. Effect lasted for up to 18 months. Current drugs, if you see, reduce cholesterol by 50 to 60%. This drug is slightly better and long lasting. Now, why this matters is, of course, many patients stop taking regular medicines over time. This one-time treatment can avoid that problem. Talking about the safety, earlier version had liver issues. New version, which has been developed, looks safer so far with better delivery. Now, this is for? Of course, mainly younger patients with lifelong high cholesterol. Older patients may still use regular medicines. What's the next step? Well, Eli Lilly plans next big trials this year. Now, talking about the impact of on Indian company, because that's where investors are interested. So currently, no impact as of now. Why? Because this will take at least 5 to 6 years for US FDA to approve, and once approved, this will be priced very expensive. I mean, analyst or street is expecting $50,000 of that injection. Why? Because the cost of manufacturing is also high, and this is just a one-time injection. You don't need to take again and again, and hence that expensive price that we may see. Also, this is a cure and not treatment. But US FDA, is cautious when it comes to these things, considering this will change your genes, and hence this will take 5 to 6 years. But yes, a path-breaking drug, I would say.
Yeah, no, it's a big deal. It's a big deal, and this is not something where you might see stock impact right now, but can change lives. Avinash, just a quick word before we wrap up your session and get to our corporate conversations. We have some very exciting corporate conversations coming up next. But on the direction for the market, and what would be one big idea you would look at the way the markets have opened today?
I think, Tamanna, clearly the markets are going to remain range bound, and I think largely stock specific. I think, something which we like from the mid cap space is a company called Diamond Power. The company came with a very strong set of numbers. I think, the financial year FY27 is going to be much better. Sitting on an order book of almost 2,000 to 3,000 crores. And I think within the power and cable industry, this is a very strong player which has emerged in the last 2 to 3 quarters. So I think clearly a 60 crore profit in one quarter clearly indicates the kind of traction the company has recorded. So I would not be surprised that this mid cap stock could actually get re-rated significantly over the next, say, 12 to 15 months.
Okay. Some interesting calls over there. Kush, what is your big call? And you have received your coffee, as you can see, and as promised. What is your big call after the opening session?
My big call is I'm going to enjoy this coffee. My early weekend has started. So
you have to tell something for the viewer.
Promise delivered. I am telling it for the viewers.
Early weekend, we are here back Friday, no?
हाँ तो ठीक है ना एक दिन तो ज़्यादा मिल गया. See, there's someone else behind the camera raising his coffee. Thank you so much, Tamanna, for this. Like I said, promise delivered. No, but I will go stock specific. Index not doing much. That's a good thing. That's not a bad thing, and it's respecting a lot of these support zones. Even the Bank Nifty supporting. Looking at this 54,600, 54,500 support zone. Nifty also 23,800 being respected. So I'll take this as long as it gives that permission for the rest of the market and the stocks, to fly the way they are. So focus on stocks, index, let them consolidate.
Okay. Chandan, what about you? Your big call after the
counter, all set to head towards new all-time high or almost trading at all-time high. It surpassed 2024 high of 874. So now 874 will be support for next move towards 930, 940.
Okay, thank you so much, Chandan, for speaking with us today. Avinash, have a great day. Kush, you too, have a really good day. Let me go across now to Shivam, who's joining in to set up the next conversation. It's a big development for MobiKwik, and we'll be speaking with the management in just a bit. But MobiKwik is accelerating its offline merchant payments push after securing an RBI approval for a payment aggregator license. The company is targeting aggressive growth across small businesses, organized retail and fuel outlets over the next year. Shivam is joining in with why this is significant for the company. Shivam.
Well, yes, MobiKwik has received approval from RBI for its offline license for its offline payment merchant business. Now, the company is targeting a growth of around 10 times in its merchant payment business. Now, the three segments that the company has identified are the small businesses, oil and gas outlets, and organized retail. And the company targets to expand its market share in all these three segments over the period of 18 to 24 months. Now, the company also aims to significantly ramp up the soundbox and EDC deployments, as the company believes the offline merchant payments is a large and under-penetrated opportunity. In terms of outlook, the company has given for FY28 is that the company is targeting 10 times gross merchandise value ambition by FY28. And in terms of UPI transactions, the company is targeting around 4 times the transaction growth over the next 2 years. And also the company is looking forward to scaling up the core operations and few growth engines such as offline and online merchant acquiring, lending through its NBFC arm, and AI powering remains in key focus.
Okay, Shivam, thank you so much for that. Upasana Taku with us, co-founder, CFO and executive director at MobiKwik. Upasana, thank you so much for coming in, speaking to us exclusively this morning. Just tell us why this is such a big deal. How does this payment aggregator license push and propel your strategy further?
Yeah, hi. Thank you so much for having me here today. I think that we've been talking about earlier in our earnings for Q4, that we want to increase the pace at which we expand in the merchant payments business. Merchant payments business specifically in terms of physical offline merchants, which of course consists of small businesses, kirana stores, petrol pumps, oil and gas outlets, and also some amount of regional organized chains. Now this business is something that we've been developing for the last 1 or 2 years, but this license is actually required if you want to do your own acquiring for these merchants, as in you want to go and acquire the merchant and either deploy a QR, soundbox or EDC. This license did not used to exist before. It has come into the play in the last couple of years itself. And, we had also made an application for this business. I think our vision is very simple. We want to build merchant payments as a pillar of growth for MobiKwik. We are already very strong in consumer payments, which delivers 75% of the revenue of the company. We also have a lending credit distribution business, which delivers 25% of the revenue of the company. Our aim is that this merchant payments business can also become a sizable vertical in the next 2 years, which is why we have said that we aim to scale this merchant business in terms of revenues 10x in financial year 27 and 28 combined. And our main aim is to get to the under-penetrated, markets, which are outside of the key urban centers, the big cities. And I think this license really strengthens our ability to do that and sets the right foundation for us to scale in a consistent manner so that it can compound for long term.
Got it. Okay. Upasana, how does, in some sense, good morning, this is Neeraj here. How does this shape up? Because I think in the past when we've spoken, there have been times or two wherein you've spoken about how a development or two that has happened has actually been a landmark development and much more important for MobiKwik than what the markets realize. Could you tell us, therefore, what is or how do the next 6 months look from a development perspective and events perspective, and what it does to what is the impact that it has on the underlying growth trajectory for MobiKwik?
No, absolutely. I think that, regardless of how people perceive it, I'm a fintech entrepreneur and have been building this for the last 17 years, I can tell you that every license that is approved or granted by a regulator in India is an extremely important milestone in the development of any fintech company. So to that extent, we are very grateful that RBI has been reposing faith in us, and it also definitely sets the tone in terms of the governance standards and the compliance standards of the company. I'm also happy to inform you that from last April till now, this is the 4th license that the company has received. April last year, we received the payment aggregator online, which is for e-commerce merchant acquiring, which is the payment gateway business. Then we received the broking license, sometime in July. I think just few weeks ago, we've received the NBFC license. And now we have received the PA physical license. So it is definitely a big shot in the arm in terms of the ability to be dependent on your own license and not be dependent on anybody else to expand this business. It validates the progress that we have already made in building the right foundation of this business. See, what happens is that when you want to scale this business, people look for credibility. So if I want to tie up with a large oil outlet, whether it is Indian Oil or BP or HP, they definitely want a licensed and regulated entity to partner with them. If I want to go to any large merchant, and let's say, I'm just saying hypothetically, go to a chain of coffee shops or a large chain of pharmacy, which is a pan-India chain, they definitely want to make sure that, hey, do you have the licenses and everything that is required to scale this long term? Because nobody wants to partner for 6 months or 1 year. And to that extent, this is a massive shot in the arm. It will allow us to scale up our merchant acquiring in a big way. We do expect that we will deploy 5x, 6x device deployments in terms of Soundbox and EDC. And also from a revenue and monetization perspective, let me be very brutally honest. Consumer payments consists of wallet, UPI, and bill payments, out of which UPI is the largest payment method, but it derives zero MDR. So merchant payment as a category is very strong. There is rental income from the devices, there is MDR income, and of course there is the merchant credit income that follows.
Okay, so Upasana, help us understand, two-part question I have over here. The first bit is when you talk about execution and unit economics over here, because there will be a customer acquisition cost for deploying any of these sound boxes, the EDC machines, specifically when it comes to tier 2, tier 3. So what is that going to look like going ahead, number one, and the kind of payback period that you're looking at on this aspect? Then I will take the next question with you.
No, absolutely. See, as part of our IPO back in December 24, we had raised a substantial amount of money for device deployment, and we still have most of that capital available. Because, we have not yet done those deployments. We were also waiting eagerly to get the final license here before we expand heavily. I think that the manpower cost in terms of reaching, parts of every city and state, and especially like you mentioned, our focus is the tier 2, tier 3 market, which are completely underpenetrated right now. So it does cost, it's a few ₹100. We've not given the merchant acquisition cost as a quarterly disclosure yet, but in the upcoming quarters, you should expect we will give more disclosures on this business. But typically the device rental as well as the MDR from CC on UPI transactions or RuPay credit card transactions and in EDC all card transactions are able to suffice in terms of contribution level profitability. But of course, the scale up and then further monetization from giving merchant credit to some of these merchants, is really the icing on the cake and delivers very good margins. And to that extent, we have already publicly disclosed in our Q4 earnings that we expect that the business will take almost 18 to 24 months to scale up to a 10x level. And in this time frame, it will also break even. So the way we go at it is very systematic. When we enter a state or a zone, it takes us few months to do the heavy deployment and engagement. And I think within 6 to 8 months of that, those sectors start becoming break even for us. And we intend to replicate this over and over. And on a pan-India and overall category level, we do expect that when it comes to March 28, not only will this be a sizable business in our pie, but it will also be a profitable
business. Okay, Upasana, it will be sizable, it will be profitable, multiple licenses that you've got. You're talking about a payment aggregator now, which is physical. Online came in the past. You've got an NBFC license also, which was in April. Another, I think a small bank license also, which is, the license has not come in, but the approval to apply, I think, has come in, right? If I'm not mistaken. And you had a stockbroking registration as well. So licenses are in place. The question is, when does this translate into revenues? When does this translate into profitability? Because that's what investors want to know.
No, absolutely. We are gunning for growth. And in India, fintech is heavily regulated. Setting the right foundation is what will give us long-term compounding and therefore will give our investors long-term compounding. I think you should expect growth from MobiKwik in FY27 and 28 both. We have committed that we will intend to be profitable at the bottom line level as we grow through this and build out these businesses in 27. The major reaping of the benefits of these investments will deliver in FY28. So the profitability should go up in FY28. FY27, because our core businesses will be generating margin and we will be burning money in building these new businesses. So while we intend to be profitable, the profitability might be much lower in percentage as compared to FY28, when these businesses would have delivered and the investments that we are doing this year will definitely start, showing up by the 18 to 24 mark, which is by the time we are, in the second half of FY28, the profitability gains should go up significantly.
No, so Upasana, 4 licenses that you talked about, and that's very heartening. You talked about investments. Can we put some numbers to these points that you're making? What is the kind of investments you need right now to make the most of these licenses that you've got? How are you funding them? And if we can get as many specifics as possible, when you're saying that you will see profitability coming in by FY28, what is that looking like to you? What is it looking like on the top line?
So firstly, Tamanna, we are profitable in Q3, Q4 already, both at EBITDA and PAT level.
Agreed. I'm talking about the additional tailwind that you're getting from all of these licenses.
Yeah, absolutely. So I think firstly, I want to say that I won't expect anything from the build out of the broking business because that business will just literally launch by the end of this year. So my expectation from that will be pretty low. That we'll start seeing some impact in FY28. Now coming to both the payment licenses, the payment aggregator online, which we received earlier last year, and this payment aggregator physical, both of these businesses, we are gunning for 10x revenue growth. So if we are doing X crores per month right now in single digits, we are definitely expecting double-digit revenue from both of these verticals. And they will therefore directly impact the revenue as well as the bottom line of the company. Our intention is that merchant payments itself should become 20 to 30% of the revenue pie of the company very soon in the next few years. So that's what I can tell you. Currently, it would be sub 5%. It would be very small, maybe single digits, even less than 5%. In terms of lending, now lending is an established business of the company in the digital credit distribution. And here, we will benefit from the NBFC license substantially. But first, there is a lag time because first we have to move it, which we are literally doing. We are moving it to a wholly owned subsidiary of MobiKwik, the credit distribution business. We already have capital for all of these businesses. For the payment aggregation business, we've already taken money in our use of proceeds. For the merchant payments device, we've already taken money in our use of proceeds, and we are sitting on 424 crores of cash as of end of March. So we have all the capital available to make these investments. We are expecting FY27 uptake in revenue and profitability.
Perfect.
We are expecting more uptake in revenue in FY28 and stronger profitability in FY28.
Wishing you all the best for that and more, Upasana. Thanks so much for taking the time out and being with us today.
Thank you so much.
All right, from one important conversation to another really important conversation with Saurabh Gupta of Dixon. Now, before we get in, Saurabh, let's get in my colleague Puneet to set up the conversation for us. Puneet.
Thank you. Thanks for that. Just 4 key points, in terms of the conversation. One, of course, has been the memory chip prices, which have been increased dramatically, how the company is navigating those. Point number 2, on volume guidance for FY27, the company did 32 million smartphones in FY26 and has guided for a flat volume growth, essentially. The growth will be driven by value because of higher memory prices. So that will be point number 2 in terms of discussion of how that navigates through. And this volume guidance is excluding Vivo. So a flat volume guidance for FY27 is something to watch. Third will be on mobile PLI that got ended on March 31st of 2026. That was PLI 1.0. 2.0 is something that, the management has also spoken about. A big export opportunity is expected, but nothing yet from the government on that. And the fourth key point is on Vivo. The JV was expected, announced on 15 December 2024. Approvals are still awaited, and management had guided for the deal being very close post Q4. So these key 4 talking points at this point of time from this conversation.
Well, thanks, Puneet, for that. Let's get in Saurabh Gupta, ID and Group CEO, CFO, Dixon Technologies, of course, Director on the board as well. Saurabh, great having you, as always. Thanks so much for taking the time out. We didn't get a chance to talk to you on your numbers, but before we do that, your sector and your business in particular, by you guys being in a leadership position, are always in news. Let's try and peel them off and try and understand one news after the other. First, the PLI scheme, right, nearing an end. Is there a sense that the next one could be could happen without there being a gap between the ending period and the benefits accruing to companies like yours? 2, could the PLI come to brand owners, not necessarily to back-end manufacturers? What's happening out there?
Yeah, good morning, Neeraj. Thanks for having me. Absolutely, Neeraj. We feel that the PLI 2 should definitely come in. We are very closely engaged with the government. Government is working on PLI 2 because clearly mobile PLI has been a big success for the government. From a net importer of mobile phones in 2014, India started exporting almost $30 billion plus mobile phones. And we feel that should definitely come in. We feel that it should be linked largely to exports and localization. One has to see the final guidelines as and when it comes out. Not sure about exact contours of what the guidelines would be, but we feel that it should come out and it should be retrospective. It should be prospective, not retrospective. So there will be a gap between the sunset of the earlier PLI and the new PLI.
Okay, so Saurabh, what happens in such a scenario? I mean, again, one hopes that it comes in sooner rather than later. But if there is a gap and if it is prospective and not retrospective, what does it do to players like you versus smaller players who are trying to gain that market share at cutthroat prices? Is there a market share shift in that interim? And even if there is a market share shift, is that a perma shift, or do you believe that somebody who's lost out may be able to recoup that market share once the PLI benefits accrue to them, if they do?
No, Neeraj, I think so. We have maintained our market share. So if you look at this year, because of this memory price inflation and the shortage of memories, which has been there for the last 6 months, and we feel that scenario should continue for some more time because a lot of these memories are getting allocated to AI-based applications. So despite a lot of this reports projecting a 13 to 15% drop in smartphones this year, we are still maintaining an outlook whereby we are maintaining a flat growth. So 33 million smartphones is what we did in 25-26, and we are maintaining a similar number despite the contraction in the industry volumes. So we have 5 deep relationships, anchored relationships with 5 of the largest brands, and we are working towards it, not only sustaining that numbers, we are working with them to increase our numbers with them. We're also working with some more addition of volumes for some large brands, some more ODMs. And we feel that as and when the PLI comes in, there can be an upside of anywhere between 3 to 5 million volumes, which will happen on the smartphone volume, on the export volumes. So clearly, we feel that if you are able to maintain even a flat volume at a much higher selling price, clearly we feel that we have done a good job.
Saurabh, hi, good morning. Tamanna here. What's happening with Vivo? Any visibility there? It's sort of, sort of when we speak to you, sort of striking off all the laundry list because there's so much anticipation and waiting with all of the things you have up in the air. So people want to know where all of those things have landed. So let me ask you about Vivo. What's happening there?
Yeah, Vivo definitely has been delayed much beyond our expectations. You're absolutely right. Your colleague mentioned that we had mentioned previously that it should come in soon. So Tamanna, we still maintain that stance that there is no bottleneck as such. Government is absolutely, we are very deeply engaged with the government, and we still maintain that it should come in soon. And because because there is no bottleneck as such, there is no, and all those things have been well settled and agreed with the government. So my sense is it should come in soon.
So, I mean, that is always a hope, and it could or it could not. We don't know. Just want to understand what is the impact that you will see of potential delays and further delays in Vivo being tied up. Because if all had gone as per the plan and as per the timeline, the Vivo opportunity coming in right now, even as PLI scheme and this version of it is ending, would have been ideal, isn't it? So what is the impact that you will see of this delay?
Yeah, as part of the understanding with them, so Vivo is the #1 smartphone player in India. They do almost 35, 37 million smartphones out of the 153 million smartphone market. And our understanding with them is the JV that will be formed, almost 67% of the volume should be transferred to the JV. So on an annualized basis, we were looking at a volume of closer to 22 odd million with a much better selling price as compared to our the selling price that we have for our existing portfolio. So clearly assuming that it comes in couple of weeks, months, and then we'll take another 45 days to consummate this transaction. So we will have a proportionate impact of those volumes for this financial year. But on an annualized basis, yeah, it should give us almost 25-30,000 crore revenues, which will possibly happen in next financial year.
Okay. Saurabh, just a quick clarification here now. You're saying that the volume will pick up in terms of FY27. And if you have to look at ex-Vivo volume growth, what will that look like in terms of FY27? Taking the assumption Vivo is not on the cards right now. Once it comes in, we will see that addition coming in. What will those two numbers look like?
Yeah, so the numbers, as I mentioned, should be on the lower side, should be closer to 33 million, which is flat. Okay. And on the upper side, we feel 37 million, which will potentially get triggered once the PLI 2 comes in, because PLI 2 we understand will be largely linked to exports and localization. So we feel that with some of our anchor customers, we can look at getting those additional volumes for exports. So this should be the number 33 to 37 million. But I feel that the selling prices should be at least 12-15% higher, mainly because of the memory prices going up, and memory prices now constitute almost 20% plus value of the overall bill of material.
Okay. And overall, Saurabh, the other aspect over here is, will there be a change in terms of pricing strategy as well with the clients? Because as Neeraj was mentioning, you have a lot of smaller players who are coming in. We have seen the market share erosion that has happened for a Dixon as well. I think from a 37%, it's come down to 30 to 33%. So is there a strategy shift on the pricing front, number one, with the clients? And two, in terms of the inflation that the semicon industry is facing, the inflation that is coming in over there, what happens on that front? Because both of them are like a double whammy.
Yeah, so this is a prescriptive business for us. So any change in the price of commodities are passed through to the customers. As I mentioned, the revenues go automatically. The margin can optically reflect lower because we get a per piece kind of a conversion charge, or MVA, which we call in our industry. So the margins can optically marginally look lower because of the increased selling price. But we feel that Dixon, being the largest player in this EMS industry, in the mobile phone industry, we have the largest capacities. We have a great team, and we have of course, we are now increasingly putting more money and investments in the backward integration strategy of our displays and camera modules, which again enhances our stickiness with the consumers. So we feel that as compared to the competitors, we are far more frugal in our cost structures, and we have been able to maintain our market share, except for something. And we feel that this year we should be able to take our market share up. So we are not worried about the competitive intensity. Of course, competitive intensity is is most welcome in any business. But clearly we feel that we should always continue to take higher share of wallet from our existing customers.
Saurabh, one of the beliefs, and because you mentioned backward integration, one of the beliefs is that the backward integration could actually, after this 1 or 2 or 3 quarters period, would actually boost margins for you. So if FY27 margins may come off optically or otherwise, would you believe FY28 to be a year wherein actually there could be a margin recoupment or a margin outperformance?
Yeah, absolutely, Neeraj. So clearly both this play on camera modules as well as display. Camera modules already will get ramped up by Q3 of this financial year. Display should start from Q4 and then the ramp up should happen from Q1 of next financial year. So next year, Neeraj, we feel confident that we can expand the margins by 50 to 70 basis points from FY 25-26 level, which had a PLI element included as well. So we feel absolutely confident about it. And not only in mobile phones, also in IT hardware, we are focusing on displays, we are focusing on SSDs, power supplies there. That also will have a positive impact on our IT hardware business margins as well.
Just one last point, Saurabh, is about the EMS opportunity. And I think this is something, and actually appreciate that it was a very honest commentary coming in from the management that was a bit of a missed opportunity on EMS. How do you aim to recoup? Because the volumes on the mobile handset business are there, it'll come in with Vivo, but how do you now recoup some of those, I would say, dark spots in opportunities in the larger space?
So what we are doing, we are putting up an infrastructure for that. We have already had a very senior person on that from the industry. We are working with a global consultant. So the idea is to work on this high-end specialty EMS business, which includes your aerospace, defense, space, medical, and the precision components. So we are evaluating some M&A opportunities there. We are also working on some JVs partnerships there. So clearly we feel that we are working towards it, and we feel strongly about it that in next couple of years we can scale up this business, and this business of course will come at a much higher margins for us. Our balance sheet is in a much better shape. We're sitting with a good cash balance. So clearly we feel that we can deploy that cash balance to get into these opportunities.
Sort of a question I have again on the backward integration that Neeraj spoke about is, now the display plant trials, which I'm not mistaken, are slated for June 2026, and there is a press note 3 approval which is on the cards as well. So with this, in terms of the display plant trials, what's the kind of margin benefits that you're seeing, and do you think post the trials that integration will happen immediately and start benefiting from FY27 onwards?
Yeah, so that display business for us has been delayed. So as against June 26, now we are looking at trials in Q3, and the production should happen in Q4 of this fiscal year, and then the ramp up should happen by next financial year. So we feel that the display full impact should come in 28-29, but 50 to 60% of that impact should start reflecting in 27-28. As far as the camera modules is concerned, that would largely get reflected from 27-28. So full year impact should start coming from 28-29 is what we feel.
Okay. And lastly, in terms of the non-mobile segments, Saurabh, I know 90% of your revenues do come in from the mobile segment, but that scale in terms of, say, IT hardware and laptops, your washing machines and consumer electronics, how big a business is the plan? What's the plan in terms of scaling this? And do you think it could start garnering a larger chunk of the revenue pie or the profitability pie over 3 to 4 years from now?
Yes, so apart from mobile phones, which contributes 70% to our business, IT hardware, last year we closed at somewhere closer to 1,500 odd crores. We have acquired all the large 4 marquee brands who have a 60-65% market share in India. And clearly we are looking at almost a 3x growth this year. And we feel in the next couple of years, IT hardware can potentially become a $1 billion plus kind of an opportunity for us. So after mobiles, that should be the second largest trigger for our growth. Also, and it will be linked and it will be focused more on the backward integration as well, which will help us expansion margins. Our telecom business, which is a JV with Bata India, has in the last couple of years has increased from 700 crores to last year we closed at closer to 5,500 crores, and this year we are already looking at 7,500-8,000 crores. So that business also continues to do well. We continue to do more volumes for Bharti Airtel, and increasingly we are now moving to beyond Airtel and beyond the CP products that we do for Bharti Airtel. So that business also continue to do well and will continue to show a double-digit growth for us. As far as the other business is concerned, refrigerator, washing machines, lighting, again we are significantly expanding the product portfolio, getting into more premium products, focusing more on backward integration. So all those businesses will also witness a double-digit growth with expansion in margins.
Okay. All right. A strong track record for this company, for Dixon, and a lot of it came because of the tailwind of PLI. But is that trajectory going to continue is the question. Saurabh, thank you as always for coming and taking all of our questions. We always enjoy our conversations. All right, on to the next one. This is an actually interesting story that we want to highlight. The Ministry of New and Renewable Energy has announced that there will be no blanket extension of the deadline for applicability of approved list of models and manufacturers, list 2 for solar PV cells beyond June 1st. Now, what does all of that mean? That essentially means that after June 1st, 2026, anyone who wants to import solar PV cells will have a tougher time doing it. The idea is to increase or reduce dependence of imported solar PV cells and increase opportunities for domestic makers. We're going across to Varsha first for details on this, and then we'll have a detailed conversation of what this means for various players. Varsha, take it away.
Well, no extension simply means that the solar projects will now have to use domestically approved solar cells. And why industry wanted extension before? One is because developers were of fear that shortage of domestic solar cells and concerns over high cost and project delays were also some of the factors. But government says that India wants to accelerate domestic solar manufacturing and focus remains on reducing dependence on imported solar cell, and hence this no extension. Who will be the key beneficiaries? All the modules and cells players will be the key beneficiaries, including Satvik Green also. You have Wari, Vikram and NV and Premier Energies, which will be benefited from this no extension plan by government.
Okay, Prashant Mathur, CEO of Satvik Green Energy with us. Rupesh Sankhe, Senior Vice President, Research, Elara Capital, who looks at this space with us. I'm going to actually go to Rupesh first to give us a broader view before I speak specifically to Prashant. So just please bear with me. Rupesh, what is the opportunity for domestic players on one hand, and the pain points it will create for those who are importing these solar modules from the 1st of June with this kind of a notice?
Good morning. First of all, it's going to be good move because government has given clear signal that if you are going for backward integration, domestically manufacturing ecosystem, you will get benefit out of that. Because most of the module developers is now going into solar cells, wafer and ingot. So direction is very clear. Now coming to the demand supply dynamics, now the solar cell capacity is ALCM approved is close to 30 gigawatt, and annual tendering related to the net metering projects like PM Suryagar, Kusum, or some sort of small open access consumers, that is going to be around 20 gigawatt on a SC level. And in the next 6 to 12 months, we can see around 20 gigawatt of capacity addition on the solar cell side. So effectively, solar cell capacity will go to close to 50, 60 gigawatt. So we have a very good supply coming in on the solar cell side. But the move is very clear that the wafer ingot will also come in by June 2028. So clearly the companies with a strong balance sheet, strong operating cash flows, who have entered into solar cell manufacturing like Wari, Premier, Vikram, MV is going to be a beneficiary in the short to medium term perspective. But over a 3 to 4 years time horizon, the supply will come in like a module capacity and margin will come under pressure. But in the near term, if you look at China, we are importing cells at a 6 cents per watt. Now the domestically cells are available at close to 11 to 12 cents. So clearly this company will get better margins in the near term from next 1 to 2 years perspective. But from a medium to longer term perspective, margin will come under pressure. But certainly it's a positive for equipment manufacturers.
Okay, so, equipment manufacturers, yes, it becomes a positive. Rupesh, stay with us. Let's get in Prashant Mathur, CEO at Satvik Green Energy as well. Prashant, welcome to NDTV Profit. This is Hiral on this side. My question coming to you is, we're talking about the kind of benefits that do come in on the back of the, structure that we are seeing right now by the government. For a Satvik Green Energy, what are the kind of benefits that do flow in and which segments of business that get benefited?
Yeah, good morning and happy to be on the show. So yeah, it's a very welcome step which the government has finally taken, and from 1st of June, ALMM2 is getting implemented. From a Satvik point of view, we very much support this move. It also shows that there is a consistency in the policy. So this was announced long back, and government the ministry has managed to maintain the due date of 1st of June. Satvik has been in ALMM list 1. We also are starting our cell manufacturing 6 gigawatt in 2 phases, 2.4 and 3.6. So the first phase is going to start very soon. And so it benefits us because, cell manufacturing is a highly capital intensive project. So, when you have this kind of a consistency, it gives us a lot of confidence to manufacturers like us that we can expect that ALMM3 is also going to be implemented in June 28. So when you have a consistency, we can manage to get our manufacturing backward integration and size of manufacturing and investment. So all this couples up and really helps manufacturers, to develop the ecosystem which the ministry is also focusing on.
Prashant, so what happens for Indian manufacturers like you? Because at an earlier point of time when the US levied some additional duties, one of the companies had come in and said that for India, we are using the Indian-made modules. For US, if you are exporting to the US, you can buy the modules in a country which doesn't have such high duties, and therefore it is not subject to the Indian duty, but the point of origin duties. Is the market open for both in Indian use as well as exports out there for a company like you?
Yes, the market is open for both US and India market. But if you see, US has other complications as well. There's a lot of local module manufacturing has also come up in US lately. And also there are a lot of traceability document requirements which are there in US. So India market has been quite strong lately. For last few years, it's been consistently growing. And with the current energy crisis which we see, it's a reminder that we need to quickly become energy independent, focus on building our own capabilities. And, renewable energy, we have so much of abundant sun and wind energy. We should definitely capitalize on that. So if you see India market last year was about 45 gigawatt AC, which translates to about 57 gigawatt DC. Before that was about 36 gigawatt. This year also we feel that it is going to be in the mid 60s, the kind of demand which is going to, and then over a period of time, AI and data center and electric vehicles, cooking is moving towards electric. So there's going to be huge demand. So for manufacturers like us, India market is our priority. And US market is definitely our second priority. It's important to focus on that market as well. But India market remains very strong.
Prashant, in real terms, after this comes into effect on June 2026 and users have to move their requirements domestically, what is the kind of upside it opens up for you, or the potential market size it opens up for you? And are those conversations already starting in the last couple of days?
Yeah, it's the demand is supposed to be huge, both on the top line as well as bottom line. And for last few days, yes, the demand for Indian made cells is getting very high, and it will probably increase the prices for a short period of time. But
to what extent, Mr. Mathur? And if you can give us any specifics, we love numbers over here. So when you say demand is high, what does that mean? You say the potential is great. What does that mean? You say prices could increase by how much?
difficult to say, but as my panelist earlier was also talking, Mr. Rupesh, that there is about 30 gigawatt of solar cell capacity right now. Market, as I said, is going to be 60 gigawatt. Though there is a transition period between the domestic cell and the imported cells, so it's going to continue. And I think the primary reason of putting solar cell ALMM2 from 1st June is that the government is saying to us to scale up our solar cell manufacturing also and create the ecosystem by also setting up ingot and wafer. But
what are the timelines to scale up this manufacturing and the spends?
Yeah, so for the interim, when you have a market which is 60 gigawatt and you have cell capacity which is 30 gigawatt, you're bound to see the demand to be very high for domestically manufactured cell. So the prices, obviously project prices are also, there is a limit how much you can increase the prices, but I think the prices would increase by about at least 5 to 10%.
And is where you see the prices going up. Okay, we finally got a number out of that conversation, because mood is great, but numbers are specifics. Thank you so much for speaking with us today, Prashant and Rupesh, for coming in and explaining to us what this opportunity means. We'll take a very short break, but on the other side, we're coming back with a great conversation. Vinod Karki of ICICI Securities is going to be joining us on Talking Point. Stay tuned.
Investments in specialized investment fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy related documents carefully before making the investment decision.
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
Investments in specialized investment fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy related documents carefully before making the investment decision.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices.
And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global.
All right, welcome back. Welcome back. Our markets are doing okay. Broader markets actually better. And some recovery there seen in the Nifty as well. But Vinod Karki joining in, Senior VP Equity Research at ICICI Securities. Vinod, great to have you on. We always enjoy our conversations. What are you making of the ongoing result season? Are you discounting the fact that things have changed dramatically for a lot of companies and around the world after the quarter that is being reported right now? Or are you seeing some solid green shoots?
Yeah, thanks for having me on the show. I think two, three things are clearly coming out from this results season, which are in fact encouraging. One is what was expected and what the results are. So clearly there are more beats for sure. But if you look at the fundamentally is the demand showing up in terms of volume growth, especially. The volume growth has been quite robust across manufacturing companies, and the credit growth has been quite robust overall. And the best part is that the outlook so far given by these companies, both manufacturing and the lenders, where the bulk of, if you see when the crisis started, what really sold off big time was financials and some of these domestic cyclicals, industrials and all. But going by how their numbers have panned out in terms of volume growth or the outlook for FY27, things look encouraging so far. Let's see. So I think I remain optimistic about the overall the growth and outlook demand. But what is also helping, I think, can help, which is kind of not looked deeply, is that we had very low inflation earlier, which was bringing down the nominal growth to 8-9% odd overall, which was reflected in earnings growth also, 8-9% thereabouts. So if we have this environment where the volume growth remains reasonable, and you get some kind of a catalyst from the inflation, nominal numbers will start looking quite robust in FY27. But this all hinges on the fact that demand doesn't collapse. So far, there are no signs that demand is collapsing.
Vinod, good morning. Hiral on this side. Demand is not collapsing. Okay, that's one part of the story. Where do you see that value? Where do you see that growth coming in from? Because that's the next thing that investors want to know, that if there is something positive in the markets from here on, if someone is positive on the markets, where should we look at?
Well, see, as I said, started my opening remarks, it's all about this crisis. The biggest drawdown was in financial companies and industrial stocks and some of the domestic cyclical consumption stocks like auto and all. So I think if you make this argument that demand is going to be reasonably okay and you're going to get some kind of a catalyst from higher inflation, which means that nominal numbers will be good, then it is very clear that opportunity has been created in these spaces where demand is going to be reasonably good. But because of this crisis, there was a big drawdown in stock prices in these areas. Rest of the market more or less remained where it was, So that's how I look at it.
Vinod, good morning, Neeraj here. What happens in that period? Because you look at cycles and multiples very closely, what happens over the course of the next 2 or 3 quarters? I'm deliberately choosing a short-term period where the outcome of the conflict is not quite known. The outcome of the way funds will move towards the AI trade or away from it finally is also not known. So do markets like India, which at the receiving end of both sides, continue to get the bitter end of the stick? Or is there a turn underway? Because already people are talking about how tokenization or using tokens is getting expensive. Can we see the anti-AI trade play out?
So this AI trade, in my view, started when the big tech in US bottomed out in 2022, when the big rate hikes, jumbo rate hikes started in the US, and some of these big tech stocks were in single-digit P, like Meta and all, at that point in time. So it's almost like 3-4 years of continuous performance, and now the Asian AI stories also taking part of in that, and some cracks have started developing on the fundamental and valuation angle on this. But it's very hard to say. I mean, if you see historically capital markets, momentum when it breaks, it's very hard to say basically because these companies still don't have any bankruptcy risks or thereabouts. The balance sheets are pretty okay that way, and they are able to raise capital. So it's very hard to time it basically, But clearly, what is important to note is that at least the US big tech may be losing steam in terms of their outperformance. So if you see every year, 23, 24, 25, now this year, the absolute performance of the US big tech is slowly fading away. And this year, at least till some time ago, the S&P 500 X tech, big tech, was actually doing better. So I think clearly momentum is losing over there, and there are some fundamental cracks developing, but no one can time it perfectly. But whenever that happens, India should get some flows.
Yeah, but usually you time these things very well, which is I was hoping for an answer from you. Chalo, if you also don't have that answer, then it's fine. In which case, the other question that I have is, Vinod, in that ensuing period, what within India do you reckon has both the cycle, the multiples, and the flows on its side? Which are those 2 or 3 themes?
Well, see, I think flows angle, if you see the FII flows have been something which is kind of, a big problem for India's performance, especially on the financials side, large financial companies. So while the financial space, in my view, because of the Gulf crisis, there was a big drawdown in stock prices across the board. So if the crisis is not going to lead to NPAs for the lending space, and the credit growth and the NIM compression cycle is done, I think this is something which was sold down, and the outlook is better. So that clearly seems to be the one space where I think alpha can be created. And similarly, some of the other stocks and sectors which got beaten down because of the Gulf crisis, be it in some of these discretionary consumption space, auto, and some of the industrial companies, which actually will not get much impacted by this going forward. I think these are spaces where this crisis has created opportunities, in my view. So I think these are the spaces, and discretionary consumption, industrials, and financials, notwithstanding the FII outflows in some of these areas still continue, at least the large financial space and all. So I think that these are spaces I would be more positive if this crisis slowly fades away.
Okay, so Vinod, what are the spaces that you are finding exciting right now? One thing is for sure, even when this ends, it's not a matter of if, it's a matter of when, there is going to be lessons learned, and this will include getting more self-dependent. We just had a conversation before we got you on solar modules, which will now, need to improve domestic requirements. We spoke with Dixon talking about the next leg of PLI schemes, etc. What are the themes and opportunities there that are investable today, in your view?
Absolutely. So from so we just actually released a note yesterday where post this Q4 results, companies which have given a robust capex outlook for FY27, so obviously if they are giving a robust capex outlook, obviously they see demand. So what we observed was 2-3 themes were coming out very clearly from that. One is that this, recurring geopolitical issues, right from Russia-Ukraine war, then tariffs, and now this, and something else keeps coming up. I think this has resulted in a secular demand for one, defense, second, energy reliability, and ensuring reliable supply of critical minerals, raw materials, and all. So I think these areas, which is basically power, energy, defense, and chemicals and those kind of metals. I think we have clearly seen in this quarter, the FY27, 28, and there and beyond, the capex outlook actually strengthening, getting better. And the other theme is basically the areas where capex is being, the capex has been hiked, is in areas which are autos, EVs, and some of these new age areas like data centers and semiconductors. We've heard of those projects. So I think so that chemicals and all. So I think these are the spaces where I think the growth is there clearly. Growth outlook is improving, and companies are willing to invest, going by their guidances so far during this quarter.
Thank you so much for speaking with us. We hope that enthusiasm continues. We're actually showing it on the screen right now. If you look at the improvement in the markets, there is a bit of an uptick coming in, recovery in the markets, nothing major on the Nifty, but if you see from the lows, it's definitely looking better. But that's pretty much all the time we have on India Market Open. Stay tuned for Ask Profit coming up next.
Investments in specialized investment fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy related documents carefully before making the investment decision.
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
Investments in specialized investment fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy related documents carefully before making the investment decision.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices.
And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
And the award goes to
Tamanna Inamdar, Managing Editor, NDTV Profit.
Leading the newsroom, shaping the narrative, from stories to impact, a voice that matters. Tamanna Inamdar, among India's most influential, power, purpose and perspective recognized. NDTV Profit's editorial force gets industry-wide acclaim. He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel.
Welcome, you're watching Ask Profit here at NDTV Profit. I'm Mahima Vachharani, and with me as always is Puneet Zaveri, and it's a very range-bound trade to say the least, right? The Nifty 50 is trading just about 0.2% higher, just about an uptick of around 49 points is what we're seeing on the benchmarks. Same goes with the Bank Nifty as well, hovering around the 55,100 odd levels and just an uptick of around 0.1 odd percent. Let's try to pull up the heat map for the Nifty 50 and see as to what are the counters that are doing fairly well. It's Hindalco leading that chart, up 4 odd percent, followed by Tata Steel, JSW Steel. So metal names shining in trade today. There's Eternal, which is gaining by about 2 odd percent today. Power Grid, Tata Motors, NTPC are some of the other names that are also doing fairly well, but ONGC continues to be under pressure on the back of its Q4 numbers. I think it was the gas part that did not do well for them, and exploration costs have also gone up. ITC down 2.6%, Coal India, HDFC Bank, as well as some names like HDFC Life Insurance and Max Health also under pressure. So that's with regards to where the Nifty 50 goes. Let's try to pull up the sectoral heat map and see as to what sectors are doing in trade right now. Metal, like I said, topping the charts today and shining in trade, up 2.6%. You have media, which is also doing fairly well. Realty, again, has bounced back, seeing an uptick of around 1%, and energy doing also fairly well. But oil and gas, clearly the top losing sector on today's chart. So that's with regards to where the sectors go. And the advanced decline ratio, if you can try to pull that up, because the broader end of spectrum is doing a tad bit better than where the benchmarks go. Let's try to pull up the advanced decline ratio. There you go. And that gap is widening in the favor of the bulls as we speak, Puneet, and almost a 2:1 ratio is what we're seeing.
Yeah, I think that's the one good key part as of now for the broader markets. And what's also interesting, I think because it's a market holiday tomorrow, I think the market is in a Friday mood. So you're not seeing any kind of moves as such which are driving the momentum today as of now. Just on the Nifty 50, though, we are up of almost 80 points in the last half an hour. So we've come up from about 23,870 odd levels and gained in the last half an hour or so. Let's see if that sustains. So you're seeing that middle of the range, build up essentially on the Nifty 50, and hence we spoke about the movers, of course, but that's happening on the Nifty 50 in terms of the mid cap 150, the small cap 250 as well. Those are showing some signs of momentum being continuing at this point of time, and that was also visible on the advanced decline ratio. And finally, the BSE 500 as well. We are at the fag end of the earnings season, so you're not seeing so many reactions on earnings specifically, but PNG Health, Finolex Industries is one of them. Sterlite Tech just continues to be in another stratosphere of its own. yet another upper circuit. Adani Total Gas for the second consecutive day is up 7% as well. And Delta Corp and Jindal continued their momentum as well from yesterday. Shoppers Stop up 4.8% as well. And on the losers, Polymed continues to be down for the third consecutive day post as a result. So markets not having two bits of this of the company, and this was the result at this point of time as well. But those were some of the individual movers as well. Let's now get into your stock related queries, and if you haven't already, do start sending them. You can also call us on the number that's flashing on the top of your screen. And to answer all of those queries, we're now being joined by Vaishali Parekh, Vice President Technical Research at PL Capital, and Gaurang Shah, Senior Vice President at Georgette Investments as well. Both of you, thanks so much for joining in yet again on this Wednesday morning. The first question coming on Ujjivan Small Finance Bank, and our viewer actually wants to invest into this counter at the current market price, and he's planning to buy 1,000 shares. And this is Shankar. Wants to know, a short-term view. What would you recommend here, Vaishali? Very good morning to you.
Hi, very good morning, Puneet, Mahima, Gaurang. Yes, talking about Ujjivan, I think the stock is shown good consolidation at 52 levels. So at this level, it can be a buy, and this can go, if it's a short-term view, near-term model comes at around 58. Above that, you can look for a target of 64 to 66.
That's the view coming on Ujjivan Small Finance Bank. The next one is from Ekambara, who's writing us from Hyderabad, asking about Varun Beverages. His average buying price is 540 and he's holding 300 odd shares and wants to know whether he can continue to hold, exit on rally. What's the 1 year point of view on this one? Gaurang, your view on Varun Beverages. A very good morning to you.
Thank you, Mahima, for having me on the show. Good morning to all the viewers of NDTV Profit, to Vaishali, to you and to your entire team. A small disclosure, which is mandatory, that all recommendations that I'll be sharing with you this morning on your show, Mahima, they are part of our fundamental research team recommendations from a long-term point of view. Our company, Georgette, or myself, we do not have any kind of personal investments, no financial interest, no conflict of interest, but we share similar investment ideas with our clients. They might have their investment interests. Good morning to Puneet as well from my side. So from a long-term point of view, we have, as a disclosure, hold recommendation on Varun Beverages. And recently, I think about 2 days back, Mahima, PepsiCo extended their agreement or understanding with Varun Beverages for another 10 years, if I'm not mistaken. I stand to be corrected if I'm wrong. And I think summer times are a time when a business for companies like Varun Beverages is looking quite strong. If I'm not mistaken, again, Mahima, there is no listed entity with whom we can compare Varun Beverages. So if you are invested from a long-term point of view, stay invested.
And yes, Gaurang, very good morning to you as well. So yes, as Gaurang has highlighted, that PepsiCo agreement going on till 2049, extended by 10 years, as he rightly highlighted as well. Let's go across and take the next question. This one's coming in from, on PG Electroplast, and continues to be a key stock, in our radar. Today as well. Priyank Ashar from Mumbai is holding 3,100 shares of the company at 521. Now, Vaishali, I think the results are expected today as well, and he wants a 6-month to a 1 year view. What would you recommend? I mean, I know you generally don't trade on the result day, but any view on the charts for the near to medium term?
Yes, so purely on chartical reading, I would say the stock is showing signs of bottoming out at 430 levels. So continue holding. Currently it's 474. The view gets negated if it goes below 430. But for now, the way I'm seeing the candle formation today, this can give a bounce perhaps up to 550 levels, because the stock has really seen a good corrective move right from 950 levels and to now at these levels. So I think a bounce back at least up to 550 can be expected with a support of 430.
All right, so that's the view coming in on PG Electroplast. The next one is also for you, Vaishali. This is on Tamil Nadu Mercantile Bank. Our viewer has Satish Roy, by the way, has 500 shares bought at the levels of 545. He wants to know the short-term target for this one. Your view, Vaishali?
Just a minute, I'll just have a seat. Look.
Yeah.
So it is 682. I think the stock is quite in a trend. It should continue to do so. So near-term support lies at 660, and once we see the stock goes above 700 odd levels, this can go towards 760 to 800. So for now, it is a positive view. Continue holding with a trailing stop loss.
Got the view, Vaishali, but let's go across to our first call for today, and this one's coming in from Bengaluru. Suhas has a stock query for us. Suhas, very good morning to you. Welcome to Ask Profit. What's your query?
Yeah, very good morning. I hold 278 Karnataka Bank shares.
Okay.
Recently, I had booked around profit for 200 shares. Total quantity I was holding was 478.
Okay.
So right now, my query is whether should I book profit or can I get 300 rupees in the near term? And I saw like the RSI on monthly, weekly, and on daily basis, it is above 60. So just wanted to check in the near term, can I see it reaching 300 rupees?
Got that question, Suhas. And firstly, many congratulations. Bought at a very attractive price, so just 73. But Vaishali, what would you recommend on Karnataka Bank? Because he books some profit at the current market levels. Is 300 on the cards?
Quite likely so, because of course rule out the in-between whipsaws. But right now, the way I'm looking at it, it's on a verge of a weekly chart breakout. So this previous high, what we are looking at is 290, 285, 290. So if it moves past that and sustains, then I think we are looking at 300 plus. So continue holding and look for higher targets.
All right, okay. The next one that we have is on Torrent Power. Our viewer wants to invest, Rishabh wants to invest around 50,000 rupees in this one from a 3-year perspective. Gaurang, would you suggest that?
Well, Mahima, to be very honest, power is something that I'm extremely excited about. And so is our fundamental research team. And the policies that have taken place by the government in the past, present, and likely future, my sense is that power generation is going to be in the spotlight for all the good reasons for a couple of years to come by. That's purely because of the new capacities that are coming up and the power demand that is going up on an annual basis. Extremely positive on Torrent Power. Start at current levels and add on dips would be the strategy.
All right, okay. So that's the view coming in on Torrent Power. I think we've got Anjali calling us from Bengaluru. Anjali, a very good morning to you. What's your query about?
Yeah, very good morning to all of you, ma'am. Thanks for taking my queries. I'm having the 100 quantity Pidilite at the 1370 average. So what is the, I'm holding from almost more than a year. Okay, so what is the target for short term and long term? What is the view on, I wanted to check with Vaishali, ma'am.
Okay, all right, Anjali, got your question. I'll take this up with Vaishali. Then Vaishali, what are the charts suggesting for Pidilite? Overall, fundamentally, this company, despite of macro levels impacting the entire space, has done very well. But in terms of where the charts go, what are the charts indicating?
So the stock has really got into a trend right from 1260 to now 1470 levels. I think now the near-term support lies at 1420, and once the stock gets into new round of momentum, going above 1500 levels, this can give you a target of 1600 plus. So in my opinion, continue holding. You may get good returns because in spite of all the choppiness and all the, I think this also is got to do with crude. So in spite of all the high crude etc., it has sustained. I think it should do well even in times to come.
Got it. Well, thanks so much for the view, Vaishali. But let's go across, take another caller now from Andhra Pradesh. And Man Singh has a stock query for us. Man Singh, very good morning to you. Welcome to the show. What's your query?
Good morning, sir. I'm holding Techno Electric Engineering 80 shares at average price 1200 rupees. Should I stay continue to stay in this stock, or I book book the loss and shift to Jai Bharat Maruti? Recently it posted good results.
Right. Well,
I want a long term from Gaurang, sir.
Got it. Well, of course, tough results there, Gaurang, for Techno Electric. I think stock was down 10%, another 6% today. But even if you don't have coverage, if you by any chance saw the stock, anything that you like from that space?
Well, so thank you so much for asking the question, Man Singh. And well, you're right, Puneet, we don't have coverage on Techno Electric. Numbers were very disappointing. And of course, the question that he has asked is whether he can book his losses and move on to something else. He named one particular company again on which we don't have coverage, so I won't advise that. But if he's open to looking at alternative investment ideas in different sectors, then I can share a couple of them. First one would be from the entire BFSI segment. State Bank of India corrected to about 960 levels currently. post the numbers because there was some disappointment on one or two fronts. So this correction, I view it as a huge buying opportunity from a long-term point of view. As a disclosure, we have positive coverage on State Bank of India. A conservative target, if I can put across right now, it will be about 1250, Puneet. If the numbers are better in the coming quarters, these targets would get revised upwards. So this is the first investment idea. Second one would be from the defense pack, Bharat Electronics Limited. I think the stock is consolidating very strongly between 400 and 430, 440 odd levels. Huge investment opportunity again over here, given the kind of correction. Order book, as we all know, Puneet, is very strong. So is the capability and capacity in terms of execution. And the third investment idea, if I will, from the cement pack would be Dalmia Bharat. Again, consumption of cement is likely to go up, and so is the possibility of cement back prices. So these are the three different sectors and investment ideas. You can pick any one.
Okay, all right. So that's the view coming in on all of these counters suggested by Gaurang. But it's time to take a look at the FNO space. And we have Sharat joining by to give us a perspective on what's happening there. Sharat?
Well, that's a pretty interesting take coming in. A little bit of, you could say, the markets are at that flattish levels. And remember, this is the start of the new June series as well. And today is a Sensex monthly expiry as well. But net, the technical setup is still stronger. If you have a look at it, look at Tata Steel, Power Grid. That's where a good momentum is coming in. Largely a very narrow range bound of movement, but Reliance not giving that support. It's still slightly, you could say flattish on the red side. But ITC and HDFC Bank, that is where that kind of a sell-off is happening, and that's kind of neutralizing the up move which was expected, in these benchmark indices. But net, let's see what the stock-specific moves are happening, which should be on your radar. Long build-up. Let's get those stocks in as well. We have CG Power, interesting in tube investments. I could say the Murugappa Group is actually doing well. A very strong rollover data was also there. We had highlighted it yesterday itself, and today we're seeing a fresh positions coming in. Stock is up 4% as well. Apart from this, short covering, we have Motilal Oswal. Interestingly, capital market theme stocks are picking up, and Siemens. Of course, a lot of sell-off already happened before the earnings, so a little bit of new positions are coming in this counter as well. Let's focus on the other stocks. This includes the long unwinding names. LIC is there. Starts down around 2% and Max Financial also. So largely adjustments which are happening on the trade. Nothing much to do about it. And also for short build-up, ONGC starts again. And of course, the street is fearing that there might be a lower crude prices as we move ahead. And Coal India also, some positions are getting reversed. There was a good up move in the last series. So these are the stocks. And remember, fresh positions are being added in the FNO segments.
Thank you so much for getting us those details. By that time, Chaitra, I think, is waiting by. Chaitra, a very good morning to you. What's your query about?
Yeah, good morning, ma'am. I'm having HEG at 200 quantity at 540 average.
Okay.
What is the long-term and short-term view on this? Shall I average if I want to add further?
So,
yeah, ma'am.
So did you see the charts while buying this, Chaitra?
Yeah, ma'am.
Okay. All right. Then I take this up with Vaishali. Vaishali, HEG is the counter that she's talking about. She's bought it at the levels of 540. What would you suggest?
It's consolidating right now. So I think if you want to average out 560, 540 would be a good level to start accumulating. And if you're looking for a long-term view, I think the stock is poised for a target of 750 or so. So yes, view is positive. Averaging out would be 540, 556, 560 levels.
Got that view, Vaishali. But let's go across, take another question from Rajesh Maheshwari from Indore, who's a regular viewer of the show. And he's been asking us a couple of times on Ola Electric. He's been holding 1,400 shares at 49, so currently sitting on a loss. And asking if in the current sense of things, does it make sense to stay invested? Gaurang, not sure if you have coverage on Ola Electric, but the recent up move, I think from 22 to 40 odd, and then just a small reversal from there. We put in that perspective yesterday on the show that there has been revival in volumes in Q1, but it's still early trends. And I don't know if you have coverage, but how do you view the current up move in the EV landscape, especially in the two-wheeler space? Is it as good as your pocket square as of now? How would you recommend that?
So, Puneet, we don't have coverage standalone on Ola Electric, but when the IPO was there, we had come out with the IPO note. And in that, we had given a subscriber recommendation. IPO, I believe, Puneet, was at about 76. Stock went up to, I think, what, 140, 150, and then all the way down to 22 sub the IPO price. And a lot of traders and investors have burned their finger. In fact, they've got an electric shock getting into Ola Electric. To answer your question, in the two-wheeler EV space, are there better players? So I strongly believe that there are much better established players compared to Ola Electric, likes of Bajaj Auto, likes of TVS Motors, likes of Hero MotoCorp, and of course, the recently EV two-wheeler launched by Eicher Motors, that is Royal Enfield. So these are investment ideas. Ola Electric, the problem is, first of all, the commentary from the management. Second is huge number of pile of consumer complaints of their vehicle going into the service center and not coming back. We have heard a lot of stories about Ola scooters, electric scooters being set on fire, etc., etc. And there is too much of overcrowding in this particular counter. If you ask me, as an investment idea in electric two-wheeler theme, the names that I've mentioned are fairly better placed from a long-term point of view. No specific comments on Ola Electric since we don't have coverage.
Okay, all right. So that's the view coming in on the entire auto space as well as Ola. The next one that we have is from Satyan. He's asking about KC International. What he's saying is that he bought this counter considering that it was getting a lot of orders, and he bought it more than a year ago at 680. It went up to 940, but he did not sell considering the order inflow and whatever advice that he got. But he's saying that now it's still getting orders, but it's come down to that 505 level. What should he do next? Continue to hold? Gaurang, any view on this one?
Firstly, the advice is that you invest into stock market, the Mahima, because you want to earn profits on it. And when you're getting those profits compared to what your expectation is, I think it is prudent to book profits, because if you having greed, then that greed is not going to let you book profits at any point of time or at any levels. Having said that, we have a positive coverage on KC International. We have an accumulated stance. He got in at 680, if I heard that right. Currently, the stock is trading at about 500, 505. If he has investable amount, I think it would be a very prudent and a must strategy to average at current levels in case if he wants to make a profitable exit, because our targets are somewhere close to about 700. So averaging would make sense. And at the same time, booking profits regularly also makes a lot of sense.
Got that view. And the company also, as a group, RPG Group, had the investor day yesterday where some commentary was strong on KC. They're seeing some good commentary on transmission and distribution in terms of order book, but remains mixed on the other vehicles, other verticals essentially like railways. Civil is okay. So that's Gaurang's also view coming in on KC. Satyan, hopefully that answers your question. But viewers, time now for the rapid fire round in this edition of Fast Profit. Vaishali as well as Gaurang, you know the drill. First question, coming in now. This one's from Sunita on MTAR Tech. She's holding 25 shares of the company and she bought it way back in 2023. So must be in, stupendous gains at this point of time. Is it a good time to book profits, Vaishali, from this one?
Yes, I would suggest book partial profit.
Okay, the next one is on Coal India. Sahil from Haryana wants to purchase 1,000 shares at the current market price for the next 6 to 9 months. Is that advisable, Vaishali?
Yes. Buy now.
Got it. Any short-term targets, Vaishali, on V2 retail? Our viewers bought shares at 210. What do the charts suggest?
So V2 retail currently 235. It would see a resistance at 250. So that is a short-term target.
Okay. Is this a good time to accumulate RFC, Gaurang?
Well, I will give it a pass. We don't have coverage, Mahima.
Okay, Vaishali, quick me on the charts.
Calculated risk, stop loss of 95.
Tanuka from Kolkata is holding BEL at 397. Gaurang, her question being if she can start a SIP for the next 18 months in this counter.
Make it a longish time horizon, Puneet, because defense is the long gestation period. We have positive coverage. Yes, you can add to it.
Okay, the next one is coming in from Srinivasa Reddy from Hyderabad asking about Sarda Energy. He's bought around 100 shares at the levels of 620. Continue to hold, add more, Vaishali?
Add more.
Sharda Cropchem Vaishali bought at 1193 by Soumya from Bengaluru, asking if she should average, currently sitting on a loss right now.
Average with stop loss 850.
Okay, the next one is on Piramal Pharma. Akash has bought 200 shares at the levels of 230. Continue to hold for the next 2 years, Gaurang?
A strong player, Mahima, no specific comments.
Next question, that's coming in now. It's from Sriram Raghuruman on Jayaprakash Ventures bought at 7.5. And the reason we're taking this query, he's been holding on for the last 4 years. Vaishali, anything that you would suggest is on the charts?
Well, I'm not tracking this.
Okay, Shipping Corporation of India is the next one. Our viewer Raja from Chennai has bought 19 shares at levels of 218. Continue to hold, book profits. Vaishali, from a short-term perspective?
Hold.
Himanshu has a query on NMDC. Gaurang bought at 81 rupees per share and he wants to know a 5-year view. If it's a good time to accumulate and hold that for that long term, would you recommend that?
So 5 years is fairly long. Keep track of earnings, but yes, we do have positive coverage on NMDC from a long-term point.
Okay, C Infosystems bought at the levels of 960. Peter says he's sitting on a loss of around 10%. Should he average, hold for a year or exit? Gaurang?
Well, again, a lot of competition, but seems to be a decent player. No specific comments, Mahima, since we don't have coverage.
The next one coming in now, it's from Siva from Hyderabad. He bought into HFCL at 87 rupees. We had a similar query yesterday as well. And he's holding 2,500 shares. What would you recommend here, Vaishali? Should he continue to hold or book out?
I would say continue holding. 171 is the resistance level. Above that, it's going to go to 200 levels. So keep a trailing stop loss and hold.
Okay, the next one is on Precall Limited. Our viewer Lalita from Bengaluru has been holding 20 shares at the levels of 670. Continue to hold from a long-term perspective. Gaurang, any view?
Again, a strong player, no specific comments.
Bharti Hexacom held by viewer Murli at IPO price of 570. Gaurang, should he continue to hold? Your view on the telecom space?
So if I recollect right, I think it's been a couple of years since they came out with an IPO. We had a subscribe recommendation, if I recollect right, from a long-term point of view. And this one also, in the telecommunication equipments, Puneet happens to be a strong player.
Got it. Well, that is the end of the first round of the Rapid Fire in this edition of Fast Profit. But a very, very short break. Gaurang as well as Vaishali stay on. Lot more stock-related queries on the other side.
Investments in specialized investment fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy related documents carefully before making the investment decision.
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
Investments in specialized investment fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy related documents carefully before making the investment decision.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
And the award goes to
Tamanna Inamdar, Managing Editor, NDTV Profit.
Leading the newsroom, shaping the narrative. From stories to impact, a voice that matters. Tamanna Inamdar, among India's most influential, power, purpose and perspective recognized. NDTV Profit's editorial force gets industry-wide acclaim. He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11:30 a.m. to understand your next big bet. New year. New power panel. India market open. Now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth.
Welcome back. You're watching Ask Profit right here on NDTV Profit. And if you haven't already, do start sending in your queries on WhatsApp. You can also call us for the same as well. Let's go across and take another caller now. Padmapriya was joining in for a stock-related query. Padmapriya, very good morning to you. What's your query?
Good morning, sir. My question is to Vaishali, ma'am. I'm holding OFS's 50 shares with an average of 80 to 100.
Okay.
So I would like to ask short-term and long-term view on this stock and the resistance prices. And can I, at what price can I exit?
Got it. Vaishali, on Oracle Financial, I think we've almost asked you almost every other week on this counter and it's just making new highs. Is this at 10,200 a good time to book profits or continue to hold for Padmapriya?
So I would say depending on your time horizon that you're ready to hold, because according to me the stock is showing good uptrend. I would say since she's already bought at a lower level, not to be in a hurry. Keep a trading stop loss of 9,500 because what I'm looking at even from a longer period time frame, this is ready to go towards 11,500 and perhaps higher, even up to 13,000 levels. So 9,500 should be a trailing stop loss and continue holding.
Okay, all right. So that's the view coming on Oracle Financial and top targets given by Vaishali. But the next one that we have is on TFS, that is Travel Food Services. V. Murli from Bengaluru is holding 15 shares at the levels of 1253. Says he's acquired this in the first week of May itself. Wants to know whether he can continue to hold this. Considering that the Q4 numbers were decent. I believe that this is from a fundamental point of view. So Gaurang, any view on this one?
Well, Mahima, again, no specific coverage, but no peer competition as well with this one in terms of the sector that it operates. Numbers were decent enough, won't give any specific ideas.
The next question coming in now on Solar World, bought by Mohammed from Dubai, and he bought shares at 233. Vaishali, this one has been a very volatile counter, but from that March end levels saw a very sharp uptick. Anything on the charts that suggests that the up move could continue?
I would say yes, it's gradually showing some strength. There is nothing really happening right now. So it's pretty much range bound. So I would say 200 acts as a support. Unless and until the stock sustains about 240, it's hard to tell. Right now, it's just a range of 200 to 240. So if it goes above 240, please be ready for a target of 260 to 80.
Okay, the next one is on HBL Engineering. Our viewer has bought 1380 shares at an average price of 530. Wants to know whether to continue to hold or sell. Sudhir from Bengaluru is asking this. Vaishali?
I would say continue holding because this is showing some strength. I think long-term horizon, if you look at it, it can go towards 1,000 odd levels. So in my opinion, please hold.
Got it. Also, Vaishali, a quick view that you can offer on Central Bank of India as well. We've been getting a few queries on this one. Vijay Kirti actually is holding shares at 40 though. So he's currently sitting at a 25% loss, but he's holding 2,500 shares as well. Is there any up move that you see for next 6 months to a year on this counter?
So, of course, the stock has been on a downward trend, but the contrarian view would be that it's got too corrected and too oversold. So, I think the downside is pretty limited. Keep a stop loss of 29, and I think this can give a bounce at least up to 33, 34 to start with, and from there on we can have a relook.
Okay, all right. Okay, so did we cover Blue Star?
No.
Okay, all right. The next one then is on Blue Star. Manju from Amritsar is holding around 393 shares of this one at the levels of 1800 and wants to know as to what's the outlook for this one. Gaurang, Blue Star, what's the view like?
Extremely positive. Yeah, extremely positive for consumer durable. Yes, there has been a little bit of supply side issues, and because of that, the prices have been increased even in the month of April. There is a price increase likely to come through for specifically for AC manufacturing companies. Continue to hold and take advantage of this price correction. If you have investable amount, you can add to it as well.
Got that view, Gaurang. But let's go across, take another caller now, and from New Delhi, and Sanjay has a stock query for us. Sanjay, very good morning to you. What's your query?
Yeah, my query is for Vaishali madam, that I am bought LIC 200 shares on 16th of April, birthday of my son. Now it is showing me a very deep correction, say about 780 or so. Today it has something come up. So what would be the stop loss, and will I be able to get some profit on it? 860 is my buying price for 200 shares.
Got it. Well, I hope, Sanjay, you also gifted something else to your son as well. And unfortunately, this LIC not working out. But Vaishali, any reprieve on LIC? Because I think we also have the bonus issue date on 29th, I believe, and hence I think the stock was started to see that up move since then. But should he continue to hold LIC at this point of time?
I would say continue holding. It's already rallied right from 780 to 850, 860 levels. 860 acts as a very crucial resistance. It happens to be the 200-day period moving average. So that's going to act as a resistance for some time. But I would say keep holding with a stop loss of 810. And once it moves past 860, he will be in profit going towards 900, 920. So for the safe side, do ask Gaurang also from the fundamental point of view.
Gaurang, anything on LIC that you have? Do you feel that the bonus issue and I mean the longer term 10% holding that the government has to dilute, I think that continues to be an overhang, right?
Thank you, Vaishali, for that. And yes, I would agree with you that something else would have been better. In fact, I would go to the extent that term insurance would have been better on your son's birthday. But nevertheless, from a long-term point of view, Puneet, we have a positive coverage on not one, but four life insurance-related companies. So LIC, not only the bonus, but the numbers were also a tag better than what the street had penciled down. Along with that, we have positive coverage on SBI Life, HDFC Life, and ICICI Prudential Life. And Puneet, one more thing I would like to add is that the entire thought process has changed in the way individuals like you and me used to take policy before COVID and post-COVID. I think the millennials have now got to understand this better. So we expect the run rate of new premiums to go up significantly in the coming quarters.
Okay, all right. The next one that we have is on Tata Capital. Pawan Kumar has bought around 3,500 shares at the levels of 342. Continue to hold or quit? Vaishali? He's sitting on a loss of around 1 lakh rupees.
I would say continue holding. Of course, I have limited data, but I would say continue holding because this has just got nicely corrected and now it's showing signs of reversal. So I would say at least till 335, 340 you may hold.
Got the view. Let's go across, take another caller now from Bengaluru, and Kumar has a stock query for us. Kumar, very good morning to you. What's your query?
Yeah, hi team. Very good morning. It's regarding about Balu Forge. May I know the entry price, at what price we need to enter? I'm a long-term investor.
Got it. Gaurang, not sure if you have coverage on Balu Forge, but do you like anything in that space currently that you also have coverage on that you would recommend, if not a direct stock recommendation on the company?
Well, we used to cover Bharat Forge, but our targets are in place. We have given a sell recommendation over there, Purit. I'm so sorry about this question.
No worries. Anything that that you see on the charts, Vaishali, by any chance?
I would say yes. If you have to buy, I think 460 is actually nothing much has happened besides Bharat Forge. But if you look at Ramakrishna Forging, Balu Forge, these stocks have really not participated right now. So I would say that yes, this is getting better. 460 acts as a support as far as Balu Forge is concerned. The near-term target resistance comes at 560, 570. Above that, one can look for a target of 650, 660. So according to me, these are very attractive levels to accumulate with support of 460.
Okay, all right. So that's the view coming on Balu Forge. The next one is on Vodafone Idea. Our viewer Ramana Reddy has bought 1,000 shares at the levels of 11 rupees per piece. Since 2 years, he's been holding this counter and wants to know whether he should book profits at the current price. Says he's a long-term investor on this one. Gaurang, your view?
So we have a neutral stance, Mahima. That means not much of movement is expected, but a lot of positive has happened over the last couple of months and weeks. And I am of a personal view that you need to have a couple of service providers in the cellular service provider segment rather than having a duopoly. But yes, things have changed. I hope that whatever efforts that have been put in place by the management in terms of improving the balance sheet, number one, and secondly is having more presence and penetration and stop losing customer base. That is visible right now. Won't give specific in terms of buy, sell and hold because we have a neutral stance on Vodafone Idea.
Got that view, Gaurang. But let's go across, take another caller now from Gurugram, and Siddharth has a stock query for us. Siddharth, very good morning to you. What's your query?
Yeah, good morning to all. I have a query related to LG equipment. I bought 300 shares at the price of 500 rupees. Can I keep can I book the profit or can I hold for some more time? Today there may be results.
Got it. Well, Vaishali, would you recommend that? Would you recommend booking profits? He's already up 80 rupees from his buying price. He's holding 300 shares. A part profit booking, would you recommend that?
Well, I repeat, I will not give a view, any view based on results, but what I see from charts, I think it is showing a lot of strength. There is increase in volume also, so I think 560 should be taken as a stop loss and continue holding because the way typical presentation is, it can go towards 620. So you keep a stop loss of 560 purely on the levels.
Okay, all right. So that's the view coming in on LG Equipments. The next one that we have is on ITC. Our viewer has bought 40 shares of ITC at an average price of 305 and wants a view on this from a 2-year perspective. Gaurang, what do you think?
The stock has gone ex-dividend, if I'm not mistaken. Correct me if I'm wrong, Mahima. And from a long-term point of view, yes, we remain positive. There have been certain negative overhangs in terms of prices of revision of cigarettes, first of all at the higher end segment and now at a lower end segment. But yeah, ITC has diversified business. We have positive coverage on ITC. Continue to hold.
Yes, and most certainly it's ex-dividend day for ITC today. Hence you're seeing that downtick of a similar amount as well. But the next question coming in now, it's from a viewer Suraj, and he wants to know a view on Exide Industries for a 2-year perspective. So he wants to buy into this counter, Gaurang. But Gaurang, I just wanted to ask you as well, because yesterday was Amar Raja results. I think the con call also wasn't the greatest, and I don't know if that has a direct relation on Exide being up 7% today. But any view that you have on the battery makers?
So positive on both. In fact, Amara Raja Mobility as well as Exide Industries, Puneet, and this is also, like tire happens to be a very important component in a vehicle. Battery is also relevantly important, not only for fossil fuel driven vehicles or CNG, but more so for the EVs. Both the companies have elaborated plans in terms of investing into R&D and increasing their capex. I don't know about yesterday, knee-jerk reaction could be there, but today actually if you go to see both Amara Raja Mobility and Exide are up and running. Have positive coverage on both Amara Raja as well as Exide.
Okay, all right. We've got Murli who is on the phone line with us from Hyderabad. Murli, a very good morning to you. What's your query about?
The query is from Lloyd's Engineering. I have been holding since 4 years, 350 shares, though I booked some profit at the average of 8 rupees.
Okay.
So what is the short-term or a near target upside?
Okay. Murli, just want to understand what was the thinking behind buying this at 8 rupees, because you've bought it at very attractive levels.
Yeah, that was 4 years back when I started small investment. I thought, let me start with a penny share. So I put some money in that and I saw it growing and suddenly it shot up above 40. I thought, let me hold it on.
Okay, very interesting. Murli, so, I mean, you've spotted it at the right levels, you've made profits, you've booked some, so, kudos to that. I'll take this up with Gaurang. Gaurang, any view on Lloyd's Engineering?
Well, he's lucky, Murli is lucky, Mahima, that he bought into a penny stock and it has turned out to be a gold mine.
Yeah.
Not many people who get into a single-digit stock or a low double-digit stock end up making the kind of profits that Murli has made. Unfortunately, we don't cover such stocks. I won't give any specifics.
Vaishali, on the charts, does it suggest that the up move could continue or should he book out?
I would say so. Actually, it has, in fact, as a disclaimer, this was our trading recommendation also. And I think we continue to stay positive on this. 70 now, keep a trading stop loss of 70 because you've really had a lot of patience and have been holding on for such a long time. So I would say keep 70 as your trading stop loss. And this is very likely to retest the previous high of 85 and perhaps go towards 100 levels. So the trend is strong. And it only gets weak below 70. So according to me, please continue holding.
Got that view, Vaishali. The next caller now from Bengaluru, and Shivanand has a stock query for us. Shivanand, very good morning to you. What's your query?
Very good morning, sir.
Good morning,
my query on Reliance Industries. I bought a quantity of 276 at the average price of 1474. Can I hold for 6 to 1 year?
Got it. Gaurang, would you recommend that holding on to Reliance Industries for the next 1 year? He bought it at 1454, so in the loss. What would you recommend?
Hold on, have a positive coverage, Puneet, from a long-term point of view, and change your time horizon from 6 to 1 year to maybe a little bit more if you really want to make meaningful return out of your investments in Reliance Industries.
Okay, all right. The next one that we have is on Pine Labs. Ram from Maharashtra wants to know if this is the right time and the right market price to enter into this counter. Gaurang, any view?
Well, so numbers were there, I believe, yesterday or today. I don't really recollect, but don't have any specific coverage, so I won't be able to give buy, sell and hold.
Right. The next question now coming in on Vikran Engineering. Now, let's pull out the 1 week chart. I think on results, stock had a really strong reaction. And, our viewer Rajesh actually wants to know if it's a good time to buy into this counter right now. So, there you go, up 15% this week, and you see that sharp jump that you saw on the stock today, I think on Monday and Tuesday, and the momentum continues. But is it a good time to buy Vaishali is the question. What would you recommend?
I would say so, buy in trenches, because the stock has already, as you spotted, has given a good run up. 70 should be the near term support, and keep buying at every dip, because what I'm looking at, even the recent development, it's just coming out of its range, and this can go towards 100 levels plus. So according to me, take 70 as your base and continue buying.
Okay, all right. The next one that we have is on KNR Construction. Our viewer Nayan has bought 100 shares at the levels of 134. Wants to know if this is a good time to accumulate more maybe of this particular counter. Any view on this, Gaurang?
So, well, we used to cover KNR Construction some time back, Mahima, but because of the underperformance and deterioration in earnings, we have removed our coverage on KNR Constructions. Currently, we don't have it because of our concerns in terms of performance. If you want alternative investment idea into construction infra play, then HG Engineering and NCC Limited are the other two alternatives.
Got it. Well, the next question now on Concord Biotech and Jaya from Bengaluru. Actually, before we take this question, let me actually go across and take a quick caller first from New Delhi. And Amit has a stock query for us. Amit, very good morning to you. What's your query?
Yeah, good morning. I'm holding Yatharth Hospital, about 100 shares at a cost of around about 820 odd.
Okay.
My plan is to hold hospital stocks. I mean, Yatharth is one of the topics I'm looking into for next 4-5 years.
Okay.
I'm looking good buy, or should I move towards any other hospital and ignore Yatharth in that case?
Got it. Well, thanks for calling in, Amit. But Gaurang, on Yatharth Hospital and anything that you like currently in the hospital space, what's your top pick? Also on Concord Biotech, similar kind of space, not exactly on hospital, of course, but if you have coverage of you on either of those?
Well, so, look, I also heard him saying that he's got 4 to 5 years kind of time horizon, Puneet. We do like healthcare, and we also believe, Puneet, that in the ongoing conflict in the Middle East, healthcare is one sector along with some other few sectors which are relatively insulated from external shocks. Apollo Hospital, Narayan Udalaya, Fortis Healthcare and Max Healthcare. And most of these healthcare related companies have elaborated capex plans, either existing capex into existing facilities or taking over other smaller or weaker balance sheet companies. My sense is that these 4 names are better placed from a long-term point of view.
Okay, all right. So that's the view on Yatharth Hospital, but it's time for our rapid fire round. So keep your answers as short as possible, Vaishali and Gaurang. The first one that we have is on Chennai Petrochem. Masta from Delhi has bought it at the levels of 932 and wants to know if she can continue to hold this one. Vaishali?
Hold for a target of 1200.
Gaurav Jindal wants to make a fresh entry into Senco Gold at the current price. Would you recommend that, Vaishali?
Yes.
Okay, the next one is on Shyam Metallic. Sai Kumar wants to know as to what's the view on this from a 1-year perspective fundamentally. Gaurang, any view?
Well, a strong player, but no specific comments.
JTL Industries, we don't talk about it, Vaishali, too much. Our viewer has bought shares at 80 rupees. And stocks are largely flat today, but any view that you can offer him in the near term?
Keep a strict stop loss of 65. Below that, it gets weak. So hold it, and it can come back to 85-90 levels.
Okay, Paisalo Digital bought at the levels of 35. This query is specifically for you, Vaishali. Abhi has bought 100 shares and wants a 6 months view on this one.
Continue holding. It's on a verge of breakout. It can go towards 60 levels.
Dheeraj is holding on to shares of HDFC Bank at 772. Gaurang, should he average now?
Fantastic level to average, and if somebody wants to make a fresh investment as well, Puneet, I would advise that we have positive coverage.
Okay, the next one is on Laurus Labs. Saurav from Jaipur has bought it at the levels of 1058. 25 shares is what he's holding. Continue to hold, book profits at this juncture, Vaishali?
Book partial profit because it's in deep overbought zone.
Alright, Sushant is holding on to shares of Apollo Microsystems at 197. So he's essentially doubled his money on his 500 shares. Gaurang, should he still continue to hold looking at the buying price?
Well, the buying price is very attractive. Again, we used to have positive coverage on Apollo Micro. Currently, we are under review, if I'm not mistaken, but a very strong content.
Okay, all right. The next one is on Coforge. 25 shares bought at the levels of 1440. Continue to hold, sell, maybe add from a long-term perspective. Gaurav?
Hold and add would be the advice. Approximate target, Mahima, is close to about 1700.
Is it a good time to enter JK Tyre is the question from Raghava. What would you recommend your Vaishali stocks reacting today on good results? Any view?
Yes, buy with support of 360 and keep it for a long term, and you may get targets of 550 to 600.
Bandhan Bank bought at the price of 190. At quantity is 1100 shares. Continue to hold, sell, Vaishali?
Hold, the near-term target comes to 220. Above that, it goes to 240 and so on.
Got it. A viewer, K. Parthasarthi, who's a senior citizen, is holding on to Engineers India, bought at 200 though. Vaishali, what would your advice be to him? Should he continue to hold?
Keep a stop loss of 220, and if the momentum goes on, this can go to 270, so hold accordingly.
Okay, the next one is from Savio. He says he's a fundamental investor and wants to know as to what fundamentals are looking like for Praj Industries. Any view on this, Gaurav?
Has been a terrible underperformer. Need to be very, very careful. Just because it has corrected 60, 70, 40, 50% does not mean it is a investable candidate. No specific coverage.
Sabish wants a view on Zentech for the long term. Gaurang, any coverage? If not, what do you like in the defense space?
Well, so defense space, 3 investment ideas, of course. BEL, MTAR Tech, as well as Mazgaon Docks. Would prefer this from a long-term point of view.
And what's your target, Gaurang, on MTAR Tech? Because you started to see a lot of questions on that as well.
I wish you would not ask me this question, Puneet, because it has actually overshot our targets, but we are still maintaining a positive view. Let's see how the earnings are, which we believe will be very, very strong for MTAR Tech.
Got it. But what was your target, Gaurang, which was overshot? Just curious.
Okay, to be very honest, it was somewhere close to about 3,720 and it has more than doubled.
Well, got that view, Gaurang. And of course, you know why I'm asking you this question as well. I think this stock has been in its own stratosphere. But thanks so much for joining in, Vaishali, as well as Gaurang, for giving us your views. Always a pleasure having you on the show. But viewers, out of time on Ask Profit. Stay tuned. KYC comes up next. And we'll see you with the rest of the stocks-related queries at 2 p.m.
Investments in specialized investment fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy related documents carefully before making the investment decision.
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
Investments in specialized investment fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy related documents carefully before making the investment decision.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
And the award goes to
Tamanna Inamdar, Managing Editor, NDTV Profit.
Leading the newsroom.
Hello and welcome to KYC. I'm Sharad Dubey and you are watching one of the best shows in the town, and we get you interesting companies, their stories and the outlook ahead. And today also I've got a very interesting company for you, a company in focus. I'll give you those details, but try to use your mind a bit. I'm going to give you a little bit of hints. The first hint, it's a healthcare tech company. There are 4 or 5 of them in the listed space. So let me make it easier for you. They recently acquired Arai and TrueBridge. These are some important AI related acquisitions which have been happening in this space. Of course, it's not a recent listing, but I would say that from December 19, 2024, the listing has been there. And if you look at the numbers from the March lows itself, there has been a good up move coming in. That's almost 29% of up move going ahead. But which stock is in focus? Try to guess. And the stock in focus is IKS, Inventurous Knowledge Solutions. This is the company we are talking about. But why are we talking about this company? That's the first question to be asked. First reason is definitely going to be on the acquisitions. इसमें synergies क्या बनती है? 2 बड़े acquisitions company ने किए हैं. One is ARIA, another is TrueBridge. And of course we'll try to understand, because last time also the management did speak with NDTV Profit, but we'll try to understand what's the integration looking like for this, what's the addressable market for this outsource segment. That's what also something which we'll be focusing on. And also if you look at it, the margin and revenue growth outlook going ahead. Remember, fourth quarter was a seasonally weak quarter as well. But question arises is how big this market is and what benefit comes in. Remember, इनका जो सबसे ज़्यादा धंधा है US से आता है, हेल्थ केयर सर्विसेज को ये प्रोवाइड करते हैं, एनेबलिंग प्लेटफॉर्म जो है उसे कहा जाता है. बट लेट्स सी अदर क्वेश्चन ऑल्सो which is important is AI, agentic AI, how much solutions comes in and what are the benefits from this segment. So we'll try to understand the business model, the growth perspective and also the market share. मार्केट कितना ग्रो कर रहा है और कंपनी क्या उससे ज़्यादा ग्रो कर रहा है, अगर कर रहा है तो क्या मार्केट शेयर गेन है. एंड टू पुट एवरीथिंग इन पर्सपेक्टिव विल बी जॉइन्ड इन बाय नित्या बालासुब्रमण्यम. शी इज द होल टाइम डायरेक्टर एंड द ग्रुप CFO at IKS. But IKS है क्या? What is this company all about? I'm going to give you all those details. No matter how technical a company is in KYC, we simplify it for you. It's a platform as a service, PaaS company. Interesting. Let's understand more about this. And it caters to the US healthcare provider segment. Also focusing on outsourcing routine course of physicians. तो physicians के धंधे को digitalize कर लेते हैं. ये है कंपनी का जो है overall मोटा मोटी definition है. Offerings include of course admin offerings and clinical offerings. Patient के जो पूरी journey होती है, that's what is covered digitally. To put that in perspective, and the company is behind it. 700 healthcare organizations That's one of the important reasons. Let's also talk about the employees. This is the employees number you're looking at, 13,331 of them. And then let's move on and see other key parameters. 90% plus revenue actually comes in from the repeat customers. So that is an important point to talk about. Also, let's look at the other key reasons to be focused. They have almost 450 plus enterprise level customers. And going ahead, if you look at it, there's a seasonal weakness. आप देख रहे हो fourth quarter में जहाँ पे impact आया है, वो देखिए, this is coming because of the seasonal weakness and of course the winter impact. Headcount largely up 5%, declined by 19% on a sequential basis. Operational numbers ठीक ठाक आए हैं. Tech employee cohort that is actually growing, going ahead. और जिस तरह AI आ रहा है, ये नंबर शायद और ज़्यादा बढ़ सकता है. But important thing, the first acquisition, RI Solutions acquisition, this is what we talk about. And over here we see their ontology segment is doing well. Roughly इस पूरे acquisition को $1.2 million ये upfront cash होगी. IP is your integrated property rights, which you are seeing on the screen. And also there will be a discounted ESOPs for the 4 years to align with the long-term interest. Apart from this, there is an $8 to $12 million of a build cost as well. Seems technical, लेकिन ये सिर्फ एक डील है. इसका फायदा क्या होगा वो आगे जाके बताएंगे. And this is the second acquisition I'd like to talk about. It was done in the month of April, a $565 million acquisition from TrueBridge. This is also a very important one. Why? Because इसमें system of record पे focus रहेगा. पहले वाले AI पे था, दूसरा वाला record पे था. And of course, this will be looking at for the rural and the community segment. The combined pro forma adjusted EBITDA margin as per the calculations comes at 26%. So there's a very massive acquisition by the company for this. US healthcare enablers, of course, looking at the industry, that's expected to grow at 12%. That's what the management commentary has been coming. देखा जाए तो $5 trillion का ये पूरा US healthcare expenditure is there. So such a big market, and there is everything for a lot of Indian players, not just for this company as well. The TAM is nothing but total addressable market. That's around $260 billion. And if you look at the outsourced market, that's roughly $34 billion. So there's a lot of coverage left for companies like IKS and its peers. And this is the numbers looking at the growth over the next, we could say from 2023 to 2028. This amount, of course, comes to 8% or 12%. So this is how the industry looks. But what are the key triggers ahead? और इसमें क्या मैंने positive भी रख लिया है, मैंने negatives भी रख लिया है. सबसे पहले, it's cautious but optimistic. That is what I'm going to say about this company. The debt and the return ratios, they are improving. So that is something to look forward to. But yes, it's not fully debt free yet. Integration risk is there of these large acquisitions. इसमें समय लगता है. And that is why clear timeline is very important when you're analyzing this. But the valuation, that seems expensive when it's compared to peers. So we'll be looking at those numbers as well. Analysts are bullish, especially on the the synergistic acquisitions to play out. So yes, Street is hopeful for this counter, but क्या ये भाव में दिखेगा? That's the big question. So let's try to understand, and to put that in perspective, let's get in the KYC ratings to show you 8 ratings where we track a company in the KYC segment. This of course includes your income statement, balance sheet, cash flow, and I'll say the return ratios as well. बहुत important होते हैं. Street cred, shareholding, that also comes in, and valuations, a very interesting take. I have got around 4 peers where we'll judge whether this company is expensive or not, and of course the outlook. What are the numbers looking like, especially the TrueBridge acquisition? We'll try to understand that. But let's start with the income statement and let's see what's happening here. Largely the numbers are pretty strong, but the thing which you need to look at is this: 47 to 45% the growth which is coming in, that is showing a lot of strength. And ये पूरे long term basis पे जो CAGR आंकड़े आप निकालेंगे, वहाँ पे देखेंगे कि अच्छी growth आ रही है. But let's talk about Q4 numbers. Q4 is seasonally, a little bit of weaker quarter. So of course you look at the numbers, it's kind of slight miss as per the broking houses, but net the numbers do show a good strength. आते हैं margins पे क्या movement आई है, and largely it is back to where it belongs, that 32-33% plus margins, and currently it's at 35%. So you're seeing the margins, the way they have moved is pretty much decent, and they seem to come back. Remember, 2 बड़े acquisitions हुए तो margins में और return ratios में pressure आया था. So it's a strong thumbs up when it comes to the income statement. Balance sheet, I had mentioned you the debt is reducing. That was one of the positive points, and this is what we are talking about. 2 साल पहले IPO आया था, almost 1.5 साल पहले, और अब देखिए 275 crore rupees this borrowings is there, and it's a decent funded 192 crores cash balance is there, and the business model is such that यहाँ पे cash में उतनी तंगी नहीं होती है. They have US clients, they do not have government clients, so balance sheet is quite strong. So it's a strong thumbs up. So we spoke about income statement, we spoke about balance sheet. Let's talk about cash flows, and interestingly, the cash flow conversion has been strong. If you look at these numbers, they seem really pretty good. Almost 120% cash flow conversions coming in, and those benefits are coming in. और याद रखिए इंटीग्रेशन का जो benefits है, जो acquire किए, उसके benefits अभी तक आए नहीं है. तो it's expected to improve going ahead in FY27, FY28. Also, it's a strong up move from this segment. Let's talk about the return ratios and see what's happening here. Largely return ratios, a slight pressure is there because of the acquisitions, and that's largely known. But ऐसे business model में भी 30% से ज़्यादा का ROE मिल रहा है, तो यहाँ पे आपको strength देखने मिल रहा है. And look at that. This is the momentum coming in. So I would be giving this, the entire business model itself, a strong thumbs up. So we did 4 ratings. Let's understand the shareholding, and remember shareholding का history थोड़ा कम ही होगा. 2024 के end में कंपनी जो है लिस्ट हुई है, and if you look at it, the promoters have kept their stake around 64%, and it's almost same out there. But FIs and DIs have started lapping up, and this is a good sign. Post IPO also good follow-on buying is happening. And if you look at it, around from 5% it has gone to 8%. From DIs also it has almost jumped 50% to 6%. So this is a very good sign. So I'm going to give this a strong thumbs up as well. And this is how the picture actually looks right now. So it's quite even Stevens, and post IPO also institutional interest has been there. So that ticks mark on my analysis. So of course shareholding is a strong positive as well. But let's talk about street cred. IPO के बाद क्या पैसा बना है, और if somebody has entered recently, have they made money? From March lows, everything went up, and of course the company also did well. So if you are a trader on this stock, you must have made 29% if you had come on the March lows segment. But if you are an investor post IPO, this stock has tested your patience. 1 year is just 5% returns coming in from this lifetime high levels, especially during its IPO time, where there was a definitely hype on the sector. That stock went up pretty high, but from these levels it's still down 23%, and from the IPO price 1.5 साल हो चुका है, it's around 24%. So it's a decent return if you're holding it right from the IPO, but after that, if you're an investor, the stock is testing your patience. So right now, let's give this a neutral rating from both the sides and keep it balanced. Now my concern comes in valuations. Is it the high priced IPO, or is there some other reason why these valuations are on the higher side? Compare IKS with their FY28 PE numbers. JM Financial के broking house के report से लिए हैं 20.5 times. This is the higher valuations coming in. But let's compare them with others. There is First Source, there is Sagility, there is Indigene. These are also the stocks, but there most of the averages is ranging between 13 to 16 times. And interestingly, other peers are also there if you'd like to focus on, and they themselves are trading on a lower side. So the average is around 15 to 16 is industry. So definitely stock is trading at premium, and it is not cheap. So it's a thumbs down when it comes to IKS. Let's talk about the outlook, what's happening here. The TrueBridge integration, that remains a key monitorable. But integration इतना बड़ा है कि समय लग सकता है, delays हो सकते हैं. So that risk you need to keep it, and that's of course the execution risk as we call it. Also, let's looking at the operational parameters. They are expected to improve going ahead as well. आपके free cash flow yields में भी improvement आए, and there's a lot of synergies and cross-selling also because of these 2 acquisitions which we are discussing. The company is saying it's growing faster than the market. That means there is market share gains also. The commentary in the con call was strong. Also, let's look at the outlook. Apart from this is the AI-led initiatives, especially जो ARIA का acquisition हुआ है, वहाँ पे agentic layer company के पास already था, but अब जो है एक smart R&D और AI का angle भी आता है, and it comes on the same product stack if you are a technical viewer for this. So this is the entire outlook coming in, but take things with a pinch of salt. Execution risk for these large acquisitions is always there. The finance costing and how things move ahead, that is also something which we'll monitor. So right now, I'm going to give this a neutral rating. The stock has done well in most of the parameters which we have discussed. So let's do a revision. एक revision करते कि इसको कितना मिलना चाहिए KYC के ratings में. Largely income statement, balance sheet, cash flow, return ratios, all of them have been top notch. I really like the shareholding also, where the DIs and FIs have shown interest in the company. Just the concern comes in is after its IPO, money hasn't been made if somebody has actually entered. So very minor returns have come in as per the expectations. Was the IPO expensive? That's the question. Valuations, that is where the expensiveness still is there if I compare it with with its peers. And outlook, two important acquisitions. Let's see what happens next. That's the big question. So overall ratings for this is 6 out of 8. It's largely one of the higher numbers at an average we give for a company in KYC. But to get more perspective in this, we'll be joined in by Nitya Balasubramaniam. She's the whole-time director and the group CFO for IKS as well. An interesting take. She's 16 years industry experience in Cipla, McKinsey, and also she is of course one of the, we could say a larger equity analyst, also a very respected one at Bernstein as well, education coming in from IIM Bangalore. So it'll be pretty much interesting to have a chat with Nitya and try to understand the growth prospects of IKS. Stay tuned to NDTV Profit. We are just coming after a break.
Investments in specialized investment fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy related documents carefully before making the investment decision.
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
Investments in specialized investment fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy related documents carefully before making the investment decision.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices.
And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
And the award goes to
Cummins India, Managing Editor, NDTV Profit.
Leading the newsroom. shaping the narrative. From stories to impact, a voice that matters. Tamanna Inamdar, among India's most influential, power, purpose and perspective recognized. NDTV Profit's editorial force gets industry-wide acclaim. He has been tracking markets for over a decade, spots the trend.
Welcome back to KYC. Now we are joined in by Nithya Balasubramaniam, Whole-Time Director and Group CFO at Inventurous Knowledge Solutions. Good afternoon, Nithya. It's always a pleasure to have you. And of course, the first question I would like to ask is, a lot of acquisitions are at play and a lot of numbers, it's mind-boggling and a lot of crunching is happening. Just I wanted to understand and simplify it for our viewers. First, the recent acquisition of ARIA, the rationale about it, and what are the key numbers about it. There's a lot of data thrown around. If you could just simplify it for us, and what does this mean for the company?
Thank you for having me, and happy to talk about the acquisitions. So our acquisition was more towards acquiring specific IP as well as the talent that came along with the company. What RI brings to the table is actually proprietary ontologies that the team has actually built. These ontologies are very simply knowledge graphs. And what these knowledge graphs are able to do is able to harmonize the data between EHR, the disease profile of the patient, the genomic profile of the patient. It's able to put it all together in a manner as to enable better clinical decision making. So that's the reason we're very excited about the RI acquisition. Of course, the two founders as well as the two chief scientists will be joining IKS and be contributing to our AI product development. And their technology and their skill set becomes even more important in the context of the other larger acquisition that we've announced, which is of TrueBridge, right? Remember, I said it's able to harmonize data from the EHR and multiple other sources. With the acquisition of TrueBridge, now we actually have a business where TrueBridge, 40% of TrueBridge business is actually selling EMR EHRs in the rural community health segment. So
That's
we'll
right.
now
Yeah.
get access to the data behind the EHRs.
Right, Nithya, I try to understand the synergies are there, but it's just such a big size of the acquisition you have announced for TrueBridge. And of course, there are some critics, about how the execution plays out. Especially everybody wants to know is what is the timeline looking like, and if any integration, if it happens, by when it happens, and by when we can see that in your numbers also.
So again, TrueBridge is a transformative acquisition for IKS. You will appreciate that it's two very similar sized organizations coming together. We did about $364 million last year. If you look at 2025 numbers for TrueBridge, that's another $347 million. So two very substantial organizations coming together, and any such large transaction, I think there is going to be a lot of work that needs to happen to be able to integrate the two companies. Integrate the systems, the processes, the people, the culture, which is possibly the most important ones here. But when we think about how we think about value creation with the asset now in the hands of IKS, we've actually put out what we believe will be IKS's true north for the next few years. What we have communicated to a street is what we are aspiring towards in terms of EBITDA as well as net debt position. EBITDA, our last trailing 12 months was in the zip code of 1,000 crores. And we are saying by FY30, through the synergy generation and being able to accelerate the growth of the combined entity, we should be able to touch 3,000 crores in EBITDA in FY30. And in the same time frame, while we are starting by assuming a debt of $600 million, we hope to be able to pare that down to net debt levels that we enjoy today. So as of FY26, our net debt levels was about $26 million, and we hope to be able to pare that down to similar levels by FY30 through cash generation.
All right, so that is how you're going to maintain your debt equity ratios. And I was just checking the numbers also. There has been an improvement in your cash flows, operating parameters and KPI as well. But let's talk about something short term. We spoke about acquisitions and long term, but short term Q4 is a largely seasonally mild or a weaker quarter for you or your industry as a whole. Just wanted to understand for the next 2 quarters how things are looking like. New billings start coming in, new clients come in, and of course now AI agentic orders are also coming in. Or is that order flows actually are delayed right now because of so much changes happening? Just wanted to give us a feel about the first or the second quarter now.
I think every quarter we actually talk to the street about new deal wins and new client wins that we have acquired. And you will see that the deals that we announced since Q1, Q2, Q3, and more recently Q4 as well, these deals will start to ramp up in the coming quarters. And when it comes to AI as well, I think we're very excited about the kind of products and automation levels that we have been able to deploy in our features. And that is also something that we continue talking to the street about on an ongoing basis. So more recently, we have launched a fully automated front-end platform. We have also launched a fully automated clinical documentation product. And there is definitely more and more to come with the kind of investments that we're making. So again, we don't normally talk about specific Q1 guidance or Q2 guidance. What we've always said is that we should be able to grow faster than the market given the differentiating features in our platform. And I think I will maintain that guidance.
So Nitya, let's just talk about market since you mentioned you will be going faster than the market. So by theoretical definition, you gain market share. So just give me 2 numbers, how fast the market is growing and what kind of growth you can expect. Maybe the market is 12%, so are we expecting 15 to 20% from you?
The market is growing at 12%. As I mentioned before, we should be able to grow faster. We really haven't put out a specific number out there. So there is also TrueBridge's the acquisition closure to look forward to in Q2. Of course, several regulatory approvals are now underway. Work is underway. And we're hoping that the closure happens in Q2. And I think once the integration happens, we will talk to you again about what the combined entity looks like and what will be our guidance for the combined entity.
Fair enough. So that gives a lot of clarity because, of course, a lot of investors are there. They have asked post IPO, larger acquisitions have come in, institutional interest is there. But definitely the clarity is something which the street still awaits, and hopefully in the matter of some months we'll be able to get it from you as well. But till then, a little bit of uncertainty would be there. And maybe for large deals, it takes time. There might be an execution risk also. But let's talk about the addressable market. You have been bullish on your presentation. I was just seeing the numbers also. On the outsourced service provider operations, does new markets open up for you now, or are you looking at something new apart from that? Because I know that your acquisitions quota seems to be full because a lot of balance sheet pressure can't be taken. But I'm just trying to understand, if you have to do something new, what will you do?
So what TrueBridge brings to the table is their ability to expand the addressable market. IKS traditionally has focused on the ambulatory segment or the outpatient segment. Physician clinics have been our primary customer group. TrueBridge, on the other hand, is always focused on the rural and community health hospitals. So with this acquisition, this now provides us an entry into the rural and community health segment market, which we didn't address before, right? And also in terms of new products and new features that get added onto our platform, we did speak about how the RI acquisition actually could potentially create, again, new product suites for us. And I think the most important thing with TrueBridge's acquisition is now our ability to create this AI training corpus, which will draw from the data sets that's sitting in the EMR EHR of TrueBridge. This is, of course,
fair enough. Fair enough. Yeah.
Data for us to want.
Right, Nitya. Very nicely explained, and it's a very technical industry out of which the acquisitions are quite technical, but you have simplified it for our audience at KYC at NDTV Profit. Thank you very much, Nitya, and best of luck for the future. And hopefully we get the numbers which we want going ahead for IKS. It's always a pleasure to talk with you at NDTV Profit. So that's the management of IKS. 2 large acquisitions, but we are still awaiting important guidelines or deadlines or the integrations. So stay put. That this story continues, and keep watching KYC at NDTV Profit.
Investments in specialized investment fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy related documents carefully before making the investment decision.
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Investments in specialized investment fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy related documents carefully before making the investment decision.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight.
Benchmarks trade in a narrow range today, with the Nifty as well as Sensex clinging to the gains. Broader markets slightly outperformed the benchmarks. Metals shine, and real estate as well as auto eked out gains. Oil and gas on the back foot today. Hindalco Industries and National Aluminium Company led gains in the metal pack as rising global aluminium prices boost the sentiment, pushing the Nifty Metal Index higher, with all constituent stocks trading in the green. Oil prices slipped again as markets weighed hopes of a possible US-Iran peace deal against the fresh military action near the Strait of Hormuz, with traders still cautious as the critical energy route remains effectively shut despite the limited tanker movement resume. It's an NDTV Profit Tech news break. Confirmed Coal India to launch a fresh offer for sale with up to 5,000 crore rupees worth of shares to change hands. Stock under pressure post the announcement. Hello and welcome. You've tuned into Markets at 12. I'm Nisha Podar, and let's take it straight to the market. And yes, there is a tinge of green today on the key indices, but take a look at Nifty 50. And here I would like to spend a little more time because the resistance or the gap between Nifty 50's current trading position as well as 24,000, which is a psychologically, sentimentally important level, that is not getting crossed. And the only reason for that is HDFC Bank, which has come under the cloud of governance issues once again because of some reports, and that's what is shaving off 50 odd points from Nifty 50. So if you really take a look at the constituents as well as the contribution to Nifty 50, barring HDFC Bank, it would have reached that 24,000 levels or closer to that. So keep that in mind. But of course, some of the other constituents like the metal pack, and in that specifically Hindalco, Tata Steel, and from the banking pack, ICICI Bank really doing well. On the downside is Coal India because of the influx of of that paper because of the stake sale coming in. That's really weighing on that particular counter, as well as ONGC. And of course, from the IT pack, Infosys is down. When we talk about the sectoral movement as well, do keep an eye out on that, because metal pack is the one which is really taking the charge. It has a lot to do with the global metal prices and aluminium prices really jumping up in a global scenario where the metal prices are going up, and that's what is the momentum that is being seen in the metal pack. That's a snapshot of where the market is. Let's get discussing more about the market momentum and how you should look at the trading as well as investment journey from here on. Nishchal Maheshwari, the market expert, joins in. Nishchal, always a pleasure to welcome you on NDTV Profit. Now, my first question, it has been a very volatile, past few days and a phase in the trading sessions. How do you keep your focus on the goals and the achievements as an investor and as a trader and navigate this kind of a market, Nishchal?
Afternoon to you, Nisha, and your viewers. I think it is now time basically that people should start focusing on the quality of the earnings which have just got declared in FY26 Q4. I think geopolitical has played its part. Yes, there might be some amount of volatility, but I think after 2 or 3 months of this kind of a prolonged war, most of the businesses, most of the countries across the world basically will start finding ways how to mitigate this issue. Now, I'm assuming here basically this is just going to linger on till we get to a final conclusion. If the final conclusion happens immediately, well and good. But I think in the next quarter, most of the countries and companies will find a way. Market is already discounting, saying that oil is going to remain at $100 on an average for FY26. And I think that is already got discounted. So I think move away. Geopolitics has been a part of the spoiling part has been done. Now you should look at the earnings of the companies. That's the focus one has to be.
All right, so the focus, Nishchal, according to you, now shifts to the earnings momentum, and the global uncertainty has already played its role. But one more aspect in terms of the macros and how it will really impact our overall market momentum, irrespective of the sectors and the fundamentals, is also how now going forward, how long the uncertainty really continues, and therefore our own fuel, shortages, and therefore the kind of burden that it's putting on our macros. How do you read into this situation? Because it is wishful thinking at the current moment that anytime soon the war is ending.
So I don't see any issue basically. I don't think that there is an issue as far as availability of oil is concerned. I think government has found other sources. If you really look at it, it's around 10% of the oil is out of the market, 100 million barrels a day, basically around 90 is already there, 90 to 95. So I don't see any reason basically to be worried about the availability. Now it is coming at a price is what is the issue? That the oil price is higher and you have to pay a higher price. And as you know, basically at $100, obviously some amount of the demand across the world will get curtailed, and it is getting curtailed. So whether by the push of the government or people doing it voluntarily. In India, it has not happened so because we didn't take a price hike, but now we've already taken, I think, 4 price hikes of around 8 or 9 rupees. And I think that should also start factoring in here. Basically, people start finding other ways and means or doing carpooling and all kind of stuff, basically. So I think the demand curtail. So the reality has to strike. We can't just move away and say, okay, no, oil is at 70 and that's the way the economy will work. So it is government is start taking increases. Basically, that will have some impact on certain industries, and that's a fact of it, basically.
All right. So, Nishchal, looking at one particular sector, which is the metal sector, and of course, it's the global metal prices which are really impacting. This is one of the few sectors, Nishchal, who gave a guidance of a higher than the present margins for the next earnings cycle, and that is because the full benefits of the higher prices will get realized. How to play the sector, because a large part of it is getting already baked into the stock price. Is there any headroom left, and what should be the play when it comes to the metal sector at high valuations?
So I think it's time to move away from non-ferrous to ferrous. Ferrous is still fairly priced. Non-ferrous is already, I think, run away quite a bit basically. And at these prices, basically, ferrous, non-ferrous is a high energy guzzling sector basically. So the impact on the margins will happen basically of a high energy cost. So I think it's time to move away from non-ferrous to ferrous metals.
All right, the shift from non-ferrous to ferrous metals. And yes, in ferrous metals also the companies have guided for a higher margin and better profitability for the present cycle, present quarter. When Nishchal, we look at the banking space, and of course HDFC Bank is an outlier. It has a different movement today, not quasi-India story and investment story that it is really reflecting because of its own corporate governance issues which have cropped up again. But how do you play the banking sector, which has been the bet on the economy as well, given the pressure points on macro and FII outflows still continue?
So I think fundamentally it makes sense to be in the banking sector, especially on the private sector side. Now you can avoid a few of them. I'm not aware what has happened today or what, because there's nothing which I read in papers. So not aware what kind of issues are there with HDFC. But I think if you really look at it across the private sector, I think they are at all-time low in terms of valuations, I think at least a decade low. So it makes sense basically to be invested. But what you have to be very clear is basically these are all trading plays. So good for a 50 to 20% upside from here. And that's it. So that's the way basically I look at on the banking side.
All right. And just very quickly, Nishchal, any themes that you're picking up which could be good investments at the current levels?
So energy theme still continues to do well. Basically, the current quarter numbers, I've heard a lot of these transformer guys, the cable guys, everybody seems to be very, very positive, saying that there is at least a 3-4 year cycle still on. So I think that energy theme has to play out. Now we have to see basically in India, how does it all play out? But the energy theme still continues to be very, very strong.
Right. So energy theme is what you're betting on. Nishchal, always a pleasure to take your expert view on the markets. Thank you so much for joining us right here on NDTV Profit. And let's take a look at crude, because that has been playing truant when it comes to the Indian equities as well as the currency market. And crude, yes, is a little downtick, a little over 1.5% down from the yesterday's levels, 97.98 when we talk about Brent crude. And that is a level below $100 per barrel level, and anything below 100 is definitely a good news. But remember, a few days back it was down 5%, and from there it has been now inching up strategically. So that's where we need to keep an eye out on, and US-Iran deal, peace deal, is the main aspect and the factor which is going to really impact or soften the crude oil prices. Let's move to another economic indicator, which is the auto sector and the auto demand. So auto retail momentum really remains strong in the month of May, with Vahan registrations really rising over 11% on a year-on-year basis, and also close to the record highs seen in the past 2 years. My colleague Puneet joins us with the key highlights from Vahan registrations data and what it means. Puneet, tell us.
Well, thank you for that. As you rightly mentioned, it's been a strong month for the auto sector, and it's still not over. So it's already crossed that 19.7 lakh mark, and this is the highest sales that the whole sector has done essentially in May of 2026 compared to the last 8 Mays. So we've analyzed data over this time frame, almost since May 2018. This is the highest record figure at 19.75 lakh units. This, of course, includes all categories, all company vehicles that are registered and actually sold to the consumer. So this is actual retail sales and not the one that goes to consumers. And the trend is visible on your screen as well. The last time this number came through was way back in May 2018. Since then, we saw the dip during the COVID years of May 2020 and 2021. Then that recovered through yet again. So last was also May 2023 was also a strong number, but a very, very strong session yet to end the month, of course. But already signs showing of continuous momentum in the auto sector yet again, despite 8 months post the GST rate cuts. I also just want to highlight the category-wise data as well, because two-wheelers continue to dominate the news flow at this point of time, and that's the comparison that we've done for both April and May for 2026 compared to the last year. So that trend is showing for both two-wheelers, for passenger vehicles also a very strong number at 8.78 lakh units, as well as for the CV makers, where you've seen that number being higher compared to the last year, despite 3 to 4 days more left for May. And finally, in terms of what we've seen on a specific, this is just a trend of the retail sales, the actual sales visible. This is just a trend of the retail sales, the actual sales visible, and the player-wise data that we're presenting for 4 more days yet to go for the month of May.
All right, Puneet, thanks so much for summarizing.
4 more days yet to go for the month of May.
All right, Puneet, thanks so much for summarizing all the data and also putting that into perspective on what it means for retail sales on auto. Let's get chatting about what this really means for the economy as well as the auto sector. Ashwin Patil, the head of fundamental research at LKP Securities, joins us on the phone line. Ashwin, good to have you on the show. Now, you heard the Vahan registration data numbers being spelt out by my colleague Puneet. What's your sense and what is it that you're picking up? Of course, record levels when it comes to the registration levels for the month.
Well, I would say that, the trend, the retail sales trend, which was seen in the month of April, it's getting continued in the month of May. But definitely, it is on a low base of last year. So that kind of numbers we are seeing, but definitely the demand is also quite strong as such, despite all those geopolitical headwinds, etc. That's not actually impacting the domestic demand. And if you look sector-wise, like if you segregate two-wheeler, four-wheeler, etc., then within two-wheelers also we can see a very strong demand in the EV space as such, and also in the premium space, because the 125cc space is getting very much crowded. So the growth is mainly in the premium and the EV space, and also because of the GST benefit, the low-end sales is also getting a good trigger. So, and also the marriage season is going on. That is one of the reasons April, May has been good, on that front as well. So that is one of the reasons. And secondly, on the low base, we can see the two-wheeler or, the overall auto industry putting up a very good show. Then coming to passenger vehicles, also the companies like Maruti, Mahindra, etc., they have come out with an array of new launches. They are like Mahindra 700, etc. They are like fetching a very good demand. And that's the reason why I would say that, before the monsoon starts, which is expected to be not that very strong, El Nino comes in. So the second half is expected to be not very strong on demand front. And also on the high base of last year. So I think, therefore the first half will be looking much more brighter than the second half. And the demand-wise also, like customers will be looking for, because everybody is aware what is in store for the second half. So, the buying, etc., will be happening in the first half itself. And also on the dealer inventory level also, that has also gone down significantly, which shows that even the wholesale sales will be quite stronger for the month of May. So, on and on, I would say that overall, the entire sector is looking quite buoyant at this point in time. But what's in store for the second half is like anybody's guess. But if the El Nino doesn't pan out, that stronger, then we can see a good growth in the second half also. But at this point in time, things are looking not really very strong for the second half. But yes, first half is very good.
Right. So not looking that strong for the second half, but of course, Ashwin, for all the consumption space companies and sectors, we have seen that the revenues had been strong, the demand had been strong for the earlier part of this particular year. But inflation coming in, and on the other hand, El Nino that you mentioned, and the third factor, let me also say, is the margin impact on the companies. Right. Putting all that together, how do you assess assess this data and give an outlook for the auto companies and also segregating the winners and losers for the next few months or at least next quarter?
Well, I would say that, as this inflation is going up, the fuel prices are going up, the companies which are having good, exposure to the EV space, like, the pure EVs like Ather, they will be facing good, they'll be having good times going ahead also in this scenario where the fuel prices are going up. Then companies like Bajaj, TVS, etc., which are having a good presence in the EV space, they are having a good, break-even, and they are getting a break-even in that space. That these companies will be having a good time going forward. Also, if the rupee is falling, then Bajaj, which is having a very good exposure to the exports markets, that will be, one of the stocks to look at. But on and on, if you see overall auto industry, the inflation, the fuel prices moving up, the RM prices moving up, the Middle East conundrum, you never know when it will, till when it will continue, etc. So all these will be the overhangs on those companies. So margins definitely will see some sort of pressure, maybe about 50 to 100 bips going forward in second half as well. But you never know, like, the strong demand for the vehicles and the new models, etc., at least in the first half will be, making up for the entire year. So maybe like second half will not be that strong, but first half will be still better. So companies like within the passenger vehicle space, we like Mahindra and Mahindra, but yes, I mean the El Nino factor is going to play on them as well.
Yes.
So Maruti is quite strong in that space,
Right.
followed by Mahindra and Mahindra. Even Tata Motors PV is strong. And on the CV front, I think Ashok Leyland and, Ashok Leyland is much better placed given its exposure in the export markets and its diversification in the defense space and then aftermarkets, etc. So Ashok Leyland is, much better.
All right. So M&M, Ashok Leyland and Maruti, some of the winners from this, but lots of factors really impacting. It's not just the demand. Thank you so much, Ashwin Patil, for joining in with your views on the Vahan registration data and what lies ahead for the auto sector. Remember, it's a key indicator for the macro trends also for the economy and needs to be kept a watch on. Moving on to another important development of the day, Byju's founder Ravindran has been sentenced to 6 months in jail by a Singapore court for contempt. Nimit Dixit is here with more details on the latest, his statement and the options available to him now. So Nimit, what are the options first? What's the way ahead? And then, of course, the background. Thank you.
Of course. So in a contempt proceeding like this, where 6 months jail sentence has been granted, Singaporean legal experts tell me that a person can only be arrested if they are within the territorial jurisdiction of Singapore. That means within physically present in Singapore. Beyond that, it's very difficult to enforce this. There is, of course, the extradition proceedings, but that usually doesn't apply for small cases like this. India does have an extradition agreement with Singapore, but that doesn't apply for cases where jail time is under 1 year. So Singapore legal experts tell me that it's going to be very difficult, firstly, to put him in jail unless he voluntarily comes and surrenders or flies into Singapore for some other work. So that's that. But to understand why this has happened, this is a case that arises out of an arbitration proceeding. A judgment came in 2024. It was by the Qatar Investment Authority, and an arbitration award came where it froze about $250 million worth of assets of Byju's and Think and Learn, which is their holding company. Now, after that, there was an asset disclosure requirement because these assets needed to be frozen and then liquidated for the purposes of serving this award. Now, once this asset disclosure was required, this asset disclosure is what Byju Ravindran did not adhere to over the span of 2 years. Many requests have been made to disclose these assets, specifically certain different assets over different jurisdictions, but Byju Ravindran has not disclosed those assets, and that's why a contempt of court order has been filed by the Singapore court, and is now sentenced Byju Ravindran to 6 months in jail. Now, what he says is that he's not been attending these proceedings or been making these disclosures because they're actually very close to a settlement, and he's actually shocked that Qatar Investment has approached the Singapore court for this kind of an order.
All right, so that's an important case, but also Nimit, India's online real money gaming industry is caught between a sweeping ban under the Online Gaming Act and also tax battle in the Supreme Court while the verdict is set to be announced today. What are we getting from there? And give us the case as well and what lies ahead for the gaming industry.
Yes, so the online real money gaming industry, while already halted now, this relates to a dispute, a tax dispute worth 2.5 lakh crore, several higher than the market cap of most of these companies. That's been going on for about 3 years. Now the Supreme Court is ready to give its verdict today at 3 p.m. Now what the dispute is essentially, companies like Delta Corp and Nazara, Gamescraft, Games27 have all been given GST notices from 2017 onwards worth 1.2 lakh crore. Now what the companies say is that this 28% GST is being applied to all the deposits made by players on the platforms, not to the actual revenue earned. Now if if I as a player deposit 100 rupees, then that 28% the government wants on that 100 rupees, not the 10 rupees that the platform is making on it. So they say this will essentially shut down the industry completely and not allow them to function as they do. And the impact is already clear. 1/4 of smaller companies have shut down because of this order. It's also very clear to see that the retrospective tax issue here is to be determined, because they say that these tax notices date back to 2017, while the new law for this GST was made in 2023. The gaming companies are hoping for a positive outcome here because they say that their very survival is at stake here. Companies like Delta Corp, which have a 33,000 crore notice, have a market cap only of 2,200 crores.
Yes, so this has been very, very disruptive for the entire gaming industry, and the small ones are already shut because of the pressure that was building. Thank you, Nimit, for breaking it down for us, and of course an important verdict today to be watched out for. In the meantime, Nifty 50 has lost some more ground. It's also on account of HDFC Bank that losing more ground, shaving off 56 points from Nifty 50, and that's where the market is. But lots to talk about market action on the other show. It's a wrap on Markets at 12. Thank you so much for tuning in.
Investments in specialized investment fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy related documents carefully before making the investment decision.
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
And the award goes to
Tamanna Inamdar, Managing Editor, NDTV Profit.
Leading the newsroom, shaping the narrative, from stories to impact, a voice that matters. Tamanna Inamdar, among India's most influential, power, purpose and perspective recognized. NDTV Profit's editorial force gets industry-wide acclaim. He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping.
Hello and welcome to NDTV Profit. You're watching Trending Stocks with me, Hiral Datia, and now again today, Sharad and I have the opportunity to be in the studio together because usually, as we know, he's always at the market pit. But interesting start in terms of the June series, right, Sharad?
Exactly, and of course, HDFC Bank and ONGC are dragging it out. But nevertheless, the technical setup for most of the stocks, especially in the small cap, mid cap, is good. New positions are being added, and of course, remember, tomorrow is a market holiday also, so there is a Sensex monthly expiry at play as well.
But what's interesting right now is, Sharad, that the markets are giving up the kind of, uptick that we saw in between. If you see from the day's highest levels as well, we are trying to plateau it out, inching lower as we speak, and that's the trend not only in terms of Nifty. A similar chart is what you will see in terms of Bank Nifty as well, and then in terms of broader markets. So that's what we're picking up. But apart from that, what are the cues that you're tracking so far?
Well, Hiral, the thing is that the range which is there for the resistance level for Nifty for the second or third straight day, that 24,000 mark is something where again the markets are seeing a little bit of key resistance coming in. Of course, a little bit of downtick coming in the mid cap and the small cap indices, but nevertheless the technical setup, at least in the medium term, is decent. Looking at the Nifty Bank resistance range, that's around 54,700 to 55,100. Of course, HDFC Bank is the key drag here, and of course we'll be tracking that. Metals are rising, and interestingly there is an angle to it. There's a dollar weakness at play, and overall we had given you earlier also that there are key reasons, the pricing, the realizations, they're expected to go well for most of the sectors, ferrous, non-ferrous in the first quarter. Power, capital goods, industrial, telecom, that's where a good technical strength is coming. And also the rupee, that's another interesting take. And 96 levels is trying to test. It's near the day's low, so that's a bit of concern. But nevertheless, RBI intervention is something we are hoping. Sensex monthly expiry today, remember, on account of holiday, trading holiday, which is there tomorrow. And of course we'll be tracking the earnings. We are at the fag end of the earnings. Largely a lot of mid cap, small caps will be coming, and they have been coming with good numbers. We focus on Cummins India, PG Electroplast and Bata India as well. So these are the important stocks. But Hiral, apart from this, what are the watch lists?
So interesting names on the watch list today. You have a JP Power, which is buzzing on the back of volumes. Apart from that, talk about Delta Corp and Nazara, a major overhang where the gaming GST dispute is in the Supreme Court. The hearing is at 3 p.m. So watch out for that one. PG Health, Finolex Industries,
Industries, you have Adani Total, again, all of them reacting to numbers. In fact, Adani Total, that stock is up 28% in the last 5 trading sessions. You know, a technical view on that counter is a must. Easy Trip, again, a volume buzzer. AstraZeneca, buzzing on the back of numbers. Coal India, under pressure on the back of the OFS because the pricing has been at a 10% discount to the current market price as on yesterday. Hindalco, you know, there's a Morgan Stanley initiation that has come in. You have Tata Steel also, which is in focus, ONGC, Siemens, Transrail, all of these counters that are reporting, reacting to numbers as we speak. So that's on the watch list. But Sharath, quick one in terms of the rapid fire with the guest today.
Well, exactly. And of course, we'll be joined in by Vishnukant Upadhyay. Good afternoon, Vishnu. It's always a pleasure to have you with us, and we start our rapid fire segment. Hiral and me were discussing, and PNG makes it to the list. PNG Health, of course, a very strong set of quarterly numbers coming in. Do you think that this will sustain going ahead? What's looking at the charts?
Hi Sharath, a very good afternoon. In fact, there has been two positive development on graph. First, the stock has started to form a higher high. Second, the stock is now above its 21-day exponential moving average. So on the basis of this technical setup, definitely the stock is looking pretty good. And on the higher side, 11,300, 11,400 sort of levels can't be ruled out. One can go long, maintain the stop loss below 9,700 and target, I've already discussed, 11,500, 11,400.
Right. And Vishnu, what about Finolex Industries also? We just wanted to see on the charts a very strong set of numbers. Do you think this will sustain going ahead, or a little bit of profit booking is also here at play?
Undoubtedly. In fact, sir, after witnessing such a huge rally, as the stock is now up, around 8 to 9% in today's trading session. But in last, few days, 4 to 5 trading sessions, the stock has gained more than 15 to 16%. So we can't rule out the possibilities of some sort of corrective fall in the stock, but technical setup is looking immensely well, and I believe this winning streak are likely to remain intact with a potential gain towards 230.
And Vishnu, chart check on Adani Total Gas. Of course, we have seen Adani group of stocks is showing a good technical momentum in the day's trade. Just wanted to take your views on this.
Yeah, definitely. In last 2 trading sessions, the stock has gain something around 20%, in fact. So there is my 2 view. One is a positional and second is a short term. So for positional view, stock is looking quite good on the higher side. 900, 950 levels will be definitely on card. But for a short term, the person one is holding the stock in the counter can trail the stop loss below 680 and can maintain the position. Right.
Standard disclosure also coming in for Adani Total Gas, which we're putting on screen. But the last one, AstraZeneca Pharma. Is this company showing signs of a breakout, Vishnu? And if yes, any levels to track here? Or actually break down, to be honest, its stock is down 5% on a weaker set of numbers.
Yeah, definitely. Until today, the stock was doing, immensely well, and we have seen stock, surpassing its the cluster of all key moving averages. But unfortunately, the stock is down around 5% in today's trading session. But technically, still the stock is still trading below its crucial horizontal support that aligns somewhere around 8,100. So I can say, as long as prices are trading above these set of support areas, one can hold the position with maintaining stop loss below 8,100, and on the higher side, stock has a potential to regain 9,000, 9,100 sort of levels.
Okay, so that's AstraZeneca. Thank you so much, Vishnukant, for joining in and for that quick rapid fire. But one stock that is in focus, Transrail Lightings, Q4. What's interesting is that in spite of the kind of pressure that we've seen in the fourth quarter on profitability and margins, if you have to look at FY26 as a whole, it shows a strong number coming in there. The second aspect is, if you see in terms of the working capital, good improvement. If you talk about the order book, good revenue visibility as well. So things are seeming right fundamentally, but where is that pressure point coming from in terms of the fourth quarter, and what is it looking like in terms of easing out in the first quarter of FY27 or even in the first half? Because across industries, your West Asia crisis, your tariffs, a lot of global factors that have had an impact. So I think there is no one who's been left out of that league. And to discuss more on this, joining us, we have Mr. Randeep Narang, MD and CEO at Transrail Lighting, joining us in the studio. Mr. Narang, welcome to the show, and it's always a pleasure to speak to you. This is Hiral here. My question to you is, FY26 overall seeming very good, right? The pressure point has been the fourth quarter of FY26. What has gone wrong there? What are the factors that have impacted there? And two, if you have to look at it getting into FY27, how much of it has been a carry forward as well in terms of the pain points?
So thank you for having me over, both of you. If you recall the Q3 guidance we had given, from a 25% growth over previous year, we had made it 27%. And actually we have done 30, which basically means that we bettered our Q4 in terms of revenue numbers. So actually what happened was that around 20 projects, transmission, substation, we've completed by December. So we knew that there will be a startup design engineering approval process in Q3. So that has slowed us down. There's a difference of only 80 odd crores versus what we did last quarter last year in Q4. And second was the disruption in the marketplace globally. As you know, supply chain got affected, supplies, LPG, labor, our supply chain, backward supply chain got disturbed. So all that, culminated into this. But my guidance was 30%.
So Randeep just a question, just a follow-up. Hiral had asked this. Does this pressure go more? Because March there was a little bit of impact now, but April, May we have seen a larger impact coming in. So will we see that pressure in the first quarter?
So I'll talk about the full year, then I'll come to first quarter. So we are looking at a guidance of 20 to 22% for the full year. And to us, we have an order book of 16,300 odd crores. Which is 40 international, 60 domestic. So we definitely are ramping up the execution of our projects. First quarter, we are looking at a stable quarter. We are not seeing disruption which is beyond control. So we are managing that disruption. And we feel that overall annualized basis, we will be good in terms of our guidance.
What about on the margin front?
A margin, we actually had given a guidance of 11.5 to 12% last year. We did 11.9%, which is very much within the guidance. So 30% growth, 11.9% EBITDA guidance. Now our guidance now, based on the disruption, the cost escalation, the energy escalation, the logistics and the overall energy situation, we have made it 11%.
Okay.
Now, if the situation improves globally and locally, we will definitely look at improving this.
So, you're saying margins 11% is the worst case scenario?
I would say around 11%, but look, I can't promise the
absolutely.
geopolitical situation, what happens.
Absolutely.
And
no one's going to
as
really
of today,
catch you by the neck on this because you're
but
being candid enough to come out and say that, okay.
And that's actually a good form of honesty.
Yes.
But just to put a little bit of perspective, आपके दो अलग-अलग customers हैं. One is international and one is your domestic.
Correct.
How are the demand trends looking like? Are the international ones delaying the orders or it's going as it is? And in Indian also, is there any kind of a delay here as well? Because at times orders get delayed also in this.
Yeah, I mean, here, the question is orders are very strong. The question is about execution. So are clients delaying execution?
So I won't say they are delaying. In India, for sure, there could be a right of way or some hurdle on the ground, which is a normal way of life in a EPC company. And all our clients are marquee clients, which is, the central utility, all top-notch private clients. So they are themselves wanting to expedite things, and we are supporting that process as professional people, partners working with them. Globally, we work with multinational funding agencies. We don't work with anybody else. So we are very clear that those World Banks and African Development Banks are very keen to expedite the project and close it with utility. So the execution may take a little bit of drop because of the geopolitical global situation. But we as a company, as a team, are very confident that we'll meet our 20% and we are good with that.
Okay. The other question I have for you is in terms of the order book. Now, 16,400 odd crores is what I'm looking at. Now, how much of this is actually a L1 pipeline and how much of it is actual orders which have already dropped into your kitty?
So actually all 16,000 is orders in hand.
Okay.
And my L1 is very small, at 50 crores.
Okay. And any further L1s that you're expecting in terms of pipeline?
Yes.
Number one. And two, within that pipeline as well, how is it going to look like between international and domestic?
So we have bid around 6,000 odd crores of jobs in the last quarter, which have yet to be, opened in terms of tenders, and we are looking at least 20% hopefully win ratio. It's pretty much split between domestic and international, 50-50. So let's hope for the best, and at least we should garner 1,500 to 2,000 crores of orders out of this.
Right, Randeep ji, apart from that, just wanted to understand what's your average cost of borrowing and debt levels, if any, and the debt reduction plans for it, because that's also pretty much important in times like this.
So actually we've reduced our net debt from 500 odd crores to around 274. So 274 is the net debt reduction we have done this year. We feel that we can maintain this. Net working capital days has come down from 91 to 81. We reduced 10 days. And our cash flows have improved. Almost year end was 800 odd crores against 400 odd crores last year. So we are very clear that financial strength of an EPC company is what we want to maintain and better, and we're looking at bettering our NWC days, sub 80.
Okay, that's very strong.
That's an important part.
CapEx, what does that look like? Because I think the Butiburi Greenfield plant is something that is awaited as well. So how are you looking at the CapEx on that front, or is it already incurred? And what's the peak revenues that you're seeing out of this, and by when?
So we have already started the work at Butiburi. The production has started as of end April. We've announced that. And this year CapEx, and that was part of last year CapEx, so there's no need for any new CapEx there. We have looked at 200 odd crores of CapEx. There is some plant upgradation equipments in the factories, which is around 30 odd crores. We also have TNP, tools, plants, equipments, to execute our 16,000 crore order book, which is around 150 odd crores. And then there is for our civil business some machinery we need around 20 odd crores. And then we have our IT and other expenses. So that's around 200 crores. But this is staggered. This is not going to happen immediately ASAP. And what is more important is that we are very prudent in terms of how do we look at internal accruals to fund this.
Okay, so good balance sheet strength is what you're seeing as well in terms of visibility, good visibility in terms of order book as well. So I think interesting setup that we're looking at from here on, though I think the markets are reacting to the way fourth quarter numbers have panned out. So I think that's what we need to take with a pinch of salt.
This was actually planned because I had given a guidance of 27%, we did 30.
So, okay, tell me one last quick question. What do you think are investors not happy with according to you?
I think they should look at the year picture, the promise, the guidance on revenue and EBITDA, which we have achieved, rather than just looking at a 3-month horizon, which has global disruptions and delays which have happened. So for us, I would request our stakeholders to look at the annualized numbers and the EBITDA, and we've kept our guidance and we will continue to do so.
Okay, looking forward. Thank you so much, Mr. Narang, for joining in. It's always a pleasure to have you as well. So that was the management of Transrail. In fact, let's get in Sonam Srivastava, founder and CEO at Right Research as well. Sonam, welcome to the show. Always a pleasure. My question to you is, you did hear the management of Transrail speaking to us right now. What is your assessment in terms of the stock and as an investment opportunity right now?
Yeah, I think, like the management was sort of mentioning, they seem to be positive about the particular stock. I really like the segment, right? I really like the segment of power transmission and then, heavy machinery sort of sectors where you have real assets. And, I think I would be quite interested in that particular segment. We don't have any existing positions as such in this particular stock, but yeah, I think I really like the segment that they're in.
Pretty interesting take coming in from Sonam. Hi, just let's focus on Hindalco also. The entire metal. First, let's just show the entire metal index only. See, a good momentum is happening, and then we'll of course go on to Hindalco as well. If you could just show the constituents of the Nifty Metal Index, look at that. Good momentum coming in most of the stocks. Of course, let's focus on Hindalco. Morgan Stanley initiates an overweight trading with a target price of 13.25. Medium term setting is good. Tighter demand supply balance should support the aluminium prices, and a strong growth outlook is driving investments in the capacity expansion as well. And of course, the free cash flow generation is something which they are bullish on. Hindalco India is also in a structural sweet spot, and we recently understood about the Novelis earnings also, especially on the early restarting of the Oswego plant. That is where the street is bullish, and today also most of the metal stocks are doing well. And there's also one more reason, that is a weaker dollar as well. So that is the why that sentiment is going up. Sonam, your views on Hindalco and of course the entire ferrous and the non-ferrous pack. Out of both of these packs, which would be your choice to look for?
See, I think I definitely do like the metal space, and we have allocated. I think Hindalco is one of the most highly rated stocks in this particular segment. I think they recently also we've seen a few upgrades coming in, and like you said, that Morgan Stanley I think has upgraded the particular stock. So I do like Hindalco, Nalco in this space. But even on the ferrous side, I think Tata Steel, JSW Steel, I think we would have a lot of interest. I think why you're seeing this rally in the metal segment, and why that rally might continue, is because of the nature of the whole geopolitical landscape right now. I think there's a lot of focus on hard assets, and I think that's where, and obviously the data center and the AI race is also creating a demand out there. So I would definitely be quite bullish on the metal segment. And yeah, I think these stocks like Hindalco look quite attractive.
Okay, so that's with regards to where Hindalco goes. But moving on, Coal India, that's an NDTV news break that has been confirmed. They've launched an offer for sale with an issue size of 5,000 odd crores. From the days, the stock is down, 2.5-3% as we speak. We have Somit who joins us with more details. Somit, over to you.
Yes, absolutely. It's an NDTV news break confirmed. We had first indicated about this on May 14th. It was part of our Heard of the Street segment where we did indicate that government will be soon launching the OFS for Coal India. Then on May 25th, we indicated to you about the size that could come in the OFS. And on May 26th at 5:22 p.m., we did give you all the details about this Coal India OFS that was launched nearly 2 hours after that. Now, if you look at what a government is looking to do, it's a 5,000 crore OFS, 2,500 crore is the base issue, green shoe option of 2,500 crore. Indicative offer price is 412 rupees, which indicates a discount of nearly 10 odd % compared to the current market price. And this is not the first time where the government is looking to offload stake in Coal India. They have done it multiple times from 2015 till now, and over these years, including the IPO, if you look at, the government has mopped up close to 47,000 crore rupees by selling stake in Coal India over the last 16 years. And with this 5,000 crore, the amount would increase to nearly 52,000 crore rupees. Now, Coal India IPO had come in at close to 245 rupees per share in 2010. Currently, the share price is close to 450, 460 rupees. Jan 15th is when the government has raised the most of the amount via OFS, close to 22,000 crore rupees by diluting a 10% stake at a price of 358. Post that, they have always sold stake at a much lower value. 266 was the second OFS, 225 was the third OFS. At 226, they had done a small OFS for the employees. And right now, the OFS price that the government is doing is the highest that we have seen in the history at around 412 rupees. So 2% is what government is looking to sell. Close to 5,000 crore is what they are looking to raise from this OFS.
Thank you so much, Somit, for that. Sonam, your view in terms of the Coal India OFS?
See, I think Coal India OFS, like you said, it is a positive sort of a move. I think Coal India as a stock particularly, hasn't been in our universe right now, even though, you can see a lot of rally happening in the commodity space. I think Coal India definitely, is going through a period of consolidation. So I would be interested in the OFS as an event, but I won't have a very bullish view right now on the stock.
What are your concerns, if I may ask, Sonam, with the Coal India?
Coal India, see, if I look at the metrics that I would track, right? I think, let me just quickly pull that up. See, Coal India, you're seeing that, actually there hasn't been like a lot of revisions in terms of the target price. There's not a lot of attention that the particular stock has been getting.
Sonam, but that's been again on the technical front. From a fundamental perspective, what is wrong with the Coal India according to you?
See, I think the company definitely has a very strong earning quality, and I think it's a high quality stock. But I won't say that it has the most attractive valuations as such, and the growth numbers that you're also seeing are pretty moderate compared to its peers, right? So that would be some of my fundamental concerns for this particular stock. But yeah, I think I can see some movement happen. But yeah, I think right now we would have like a moderate view on this particular stock.
A little bit of technical sell-off also coming, but remember, this is the first day of expiry, so positions are moving around, especially last series there was a good up move in Coal India, so of course positions are getting reversed. But moving on, ONGC has reported an operationally weak fourth quarter on lower production and higher costs weighing on the profitability. Somit is here with the details. Somit, what is it?
Well, operationally quite a weak set of numbers coming in from ONGC, and this is despite the fact that crude oil prices were on the higher side in the fourth quarter of FY26. Revenues were up 14%, EBITDA was up just 3%, margins slid to 49.5%, while the net profit fell around 21% on a Q-on-Q basis. Total production was down 4%, and that was the major reason why we are seeing this kind of a weak performance coming in from ONGC in the fourth quarter of FY26. And as I was mentioning that crude oil prices were higher, realizations were also up nearly 24% on a sequential basis to close to $78.3 per barrel. Now this is the 7th consecutive quarter where ONGC has missed its EBITDA estimates, and this miss was largely on the back of higher statutory cost and higher other operating expense. Production, as I mentioned, was weak, but one of the key concerns that have come in is the management commentary which suggests that which says that geological surprises arising out of reservoir complexities have affected production at one of its field. So what would be the impact of this on the future production plan is something that we need to watch out for, and we need to ask the management, and they will be holding their conference call today at around 11 a.m. And lastly, on the net profit front, that was lower, largely on the back of higher exploration write-offs. Overall, a weak set of numbers, some clarity required from the management on the conference call today.
Okay, thank you so much for that, Somit. So that's ONGC. In fact, some of the conference call highlights are already out. I know this was a recorded toss that we took, which was dated, but completely out of time. With that, it's a wrap on this edition of Trending Stocks from Sharad, the team that put the show together, and myself. Lots more lined up on the other side. Please stay tuned to NDTV Profit.
Investments in specialized investment fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy related documents carefully before making the investment decision.
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
And the award goes to
Tamanna Inamdar, Managing Editor, NDTV Profit.
Leading the newsroom, shaping the narrative, from stories to impact, a voice that matters. Tamanna Inamdar, among India's most influential, power, purpose and perspective recognized. NDTV Profit's editorial force gets industry-wide acclaim. He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11:30 a.m. to understand your next big bet. New year. New power panel. India market open. Now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth.
Good afternoon, you're watching Lunchtime Trades with me, Shreyanshi Singh, and this is the show that gets you a roundup of everything that is happening in the world of commodities, news and updates as well on the top buzzers at this hour, all while you grab lunch. But before we do that, let's take a very quick look at the markets right now, because when you talk about Nifty 50, you're seeing a little bit of a lackluster day of trade really coming in, and it's now slipped into the red, given up some of those early gains. Same can be said about Sensex as well, so similar picture is something that you're seeing coming in. Let's also quickly talk about the sectoral picture as well, because it is actually metals that are shining bright. So about a 1.7% uptake coming in there. Energy, auto, PSU bank, consumption, all of those sectors doing quite well for themselves. What's not doing so well from the sectoral basis is something like financial services, oil and gas, Nifty, IT, some of those counters, in fact, trading with a downtick as we speak as well. Let's talk about some of the gainers as well. When you talk about the broader markets as well, you're looking at something like a JP Power, Finlex Industries and Adani Gas that are buzzing away in trade, some of those counters. And when you talk about the Nifty 50 pack as well, what's doing quite well for itself is something like a Hindalco, Nalco, all of those counters buzzing away on the back of the aluminium price rise that we've seen up at this point right now. And when you talk about something like a Tata Steel, Power Grid, Bajaj Auto, NTPC, all of those counters in great shape right now. What's not doing too well right now is Coal India. After that OFS announcement, it was an NDTV Profit Newsbreak confirmed also there. And ITC, ONGC, Wipro and some of those other IT counters also a little bit on the back foot. That said, let's also talk about the entire commodity space as well, because that's also quite in focus right now. Let's talk about oil prices that are declining just a tad bit. So you do have the supply concerns that are limiting some of those declines, and looking at volatile trade also coming in. But when you talk about Strait of Hormuz, it remains effectively shut. Also something that reflects really in those elevated price levels when you talk about Brent as well, hovering near that $98 a barrel mark. And that's after an overnight rise also coming in, pull back just slightly when you talk about Brent and WTI. But it's the fifth of global oil flows that's still impacted, and that's also something that you're looking at. Volumes, mind you, are remaining below average levels, and that's also something that you're looking at. Let's also talk about gold as well, because there you do have that decline really being held. Not doing all that much, just a negative bias right now when you talk about gold prices. Traders are seeing some of those conflicts remaining largely contained. Inflation fear is also something that you're looking at, down about 15% since the conflict erupted. That's gold for you right now, and holding steady along those levels as well. Let's also get chatting with Vandana Bharti, AVP Commodity Research, SMC Global Securities, as well as Rakesh Arora, founder GoIndiaStocks.com. But before I get to you, Mr. Arora, I just wanted to try and understand, Vandana, what do you think about oil prices right now? Because you do have that pullback really reflecting through right now.
Yeah, hi Shanshi. Thanks for having me on the show. And the thing is that now the countries, they are opting for that other routes. India is importing from Venezuela, and we are opting from other routes, other countries as well. So there is no like a big relief for the oil market. But yes, we are getting some of the oil, and it is reflecting on the price. But yes, we are going through a geopolitical binary. I can say that on the one hand, we are talking about ceasefire. On the other hand, US is attacking on Iran. So the peace still, it is in dilemma still, and the prices are showing the impact, because we have seen like a downside in the crude oil prices. Again, the prices are moving up, but yes, we can see a limited upside this time in the prices of crude oil, but expect a kind of level of 90 to 93, 94 if the tension escalates again. And on lower side, we are expecting only 87, $86 kind of level, because on the ground, we are not getting so much oil in real, and in a derivative market, the fall is much steeper.
No, absolutely. And Mr. Arora, I also wanted to take it across to you, trying to understand a little better about some of the surge that we've been seeing for stocks like Hindalco and Nalco right now. You do have global aluminum prices that are very much in the spotlight right now and close to those multi-year levels as well. How are you looking into this entire situation in terms of the read coming in for some of those metal counters?
Hi, good afternoon. So aluminum prices went up on the news that China is likely to curb production. For the benefit of viewers, China had put a cap of around 45 million ton way back in 2017. And given the way, aluminum prices have moved up, all aluminum companies are highly profitable. So they are pushing to the edge of that limit, actually exceeding that limit now. And so China has come to reinforce that production limit stays at around 45 million ton. The result of this, high production and, high aluminum prices, that inventory in China for aluminum has doubled to around 1.3 million ton. And this inventory will find its way back into rest of the world. But currently people are worried about, Middle East conflict and, curbs on production in China. So both these things put together, the aluminum prices have moved up a little. But we are very much closer to a top rather than, a bottom. And the fair price for aluminum remains around $2,600, which is, $1,000 lower than the current price.
No, absolutely. And just in terms of the impact also coming in terms of financials or anything that you're penciling in, because you do have all of this happening against the backdrop of the supply disruptions, also some of those concerns that still linger because of the West Asia conflict. So how are you looking into all of this right now and the resultant impact?
So, this means that, there are this supply disruptions going to keep a bottom. At the same time, because the profits are so high and, demand is also getting a little bit destroyed, we are seeing, some negative news flow coming on AI, which is leading to kind of a bubble kind of a situation. So both these things put together, I think, aluminum prices can remain sideways because there's a lot of interest from supply disruption. At the same time, there's limitations from the demand side. So I think they can remain range bound and higher for slightly longer. And that is why, all the metal stocks, especially the aluminum stocks, are moving up because analysts and investors are building in a much higher aluminum for longer period.
No, absolutely, and thank you so much for helping us out in terms of understanding the resultant impact as well. And Vandana, I wanted to take it across to you since we're talking about metals. Let's also get chatting about gold as well. Are you looking at levels around the current levels? Are they attractive to you for a fresh buy? Is that the sense that you're gathering here?
Yeah, it is happening in gold ETF because on this correction, they are preferring to buy gold and silver ETF, and they were waited for this moment for since months, and this is very fair value to go for buying in gold and silver in terms of physical and ETF. But if we talk about the derivative market, still I'm expecting some kind of further correction in gold prices. If we consider the COMEX prices, I'm expecting 4,444 kind of level, and it will reflect near 1,55,000, 1,54,000 on MCX because rupee is depreciating, so it is eating up the downside. And in case of silver, I'm expecting $72, $73 kind of level in silver, and on MCX it should come near towards the level of 2,62,000. So on derivative market, sellers, they are dominating this time. But yes, in ETF market across the globe, the buying has started, and we have seen a better data from as compared to April. And the smart money, it is moving in equity market. So yes, the buying is limited in this counter, and gold silver ratio is depicting that this time gold is going to be dearer as compared to the silver prices.
No, absolutely. And thank you so much, Vandana, for helping us out in terms of understanding that as well. Mr. Arora, I also wanted to take it across to you and try and understand a little better, get your closing comments in when it comes to the entire metal space right now. Given that there's so much uncertainty that is looming large, is there anything about your assumption that stands to get changed here? Anything in terms of the fine print that you're looking at?
So, metal has been a star performer as a sector over the last 1 year. And as we have seen that there's still some momentum left, so probably another last 10 to 15% leg is still remaining. So investors who are holding on can continue to hold on for some more time. But the new purchases should be limited because the risk factors are starting to outweigh at these prices.
No, absolutely. And thank you so much, Vandana, as well as Mr. Rakesh Arora, for taking time out and joining us this afternoon. So there you go. That's the entire outlook coming in, not just for the entire metals pack, that too, but also oil and gold. But let's also quickly take a look at Just Engineering that is standing out on the back of its earnings. So you're looking at a strong Q4 recovery coming in. Margin expansion is something that you should be looking at as well because it's offset some of those global headwinds. And the margins are largely aided by operating leverage, tariff variation, and even improved execution. What you're also looking at is the profit being aided by the higher income. Let's also get chatting with the management. Prateek Patel, CMD Just Engineering, joining us on the show right now. Prateek, first things first, wanted to try and understand what are the key levers that you're looking at when it comes to an operationally very strong set?
See, on the pricing aspect, we were hit hard by tariff. Now that tariff issue is settled and the price of rupee, the rate of rupee also has depreciated, these two have resulted into now a stability in our business. And that gives a very high confidence in moving forward in the next year.
And that makes a lot of sense in terms of how we should be looking at it as well. Just also wanted to try and get a sense of what you think about your international orders as well, that particular confidence as well. Is there any impact that you're perhaps penciling in when it comes to Q1?
No, in international business has now stabilized. Whatever shocks we had faced were in the last year, also in the end of March because of the war. Now everything is getting stabilized, and as a result of that, we are quite bullish on this current year. For this current year, we think we'll again be on a path of growth. Rodney Hunt, our US subsidiary, is expecting growth of around 26%. Our UK subsidiary is looking for growth in excess of 75%. So I think we are back to our normal way of operations finally.
Absolutely, Mr. Patel, and point taken there. Just also wanted to try and get a better sense of the US tariff situation as well. Is there any progress coming in terms of the refund? Any timelines that you're then penciling in there?
We do not know about refund. We have filed our claims and we hope to get the refund soon. However, now the tariff issue has been settled. So whatever is there is going in our estimates. And since our estimate covers the increased tariff, now we have no more issues about facing loss on account of tariff.
No, absolutely. And I also wanted to try and get an update in terms of the manufacturing facilities. So US and Saudi Arabia, any update coming in there?
See, they are still on hold. I was in US last week and we have seen that the price of construction has gone staggeringly high. We have started to get the offers. Once we get final offers from our vendors, we will take a call on when to start the production of US plant. As far as Saudi is concerned, we have reached an advanced stage now and we have to go and select the plot and start with the construction of the plant. But both of these would be executed before end financial year 27. So by December 27, I hope to get both of these plants commissioned.
No, absolutely. And thank you so much for helping us out with that take also coming in. I also wanted to get a word in for your margin outlook as well as your outlook for the medium term as well, because the stock is doing quite well for itself. You're looking at some solid margin expansion also coming in. A lot of operating levers that are in the spotlight against this entire backdrop. How are you looking at the medium term growth?
So for the year FY 26 and 27, we are quite clear of achieving growth of in excess of 15%. For 2026-27, we are confident to achieve revenue of around 875 crore. With gross profit margin of, you can say, between after tax of between 12 to 13%. This is considering that the situation still remains like as it is. There is no great change in the situation. If the situation improves, then I am quite confident of achieving revenue in excess of 900 crore and profitability in excess of 13%.
Absolutely. And just right before we let you go as well, just wanted to understand if you think that the margin momentum from here on, you've given us the medium-term growth guidance, but for the long term as well, do you think that the margin momentum is going to remain sustainable? Is that something that you can provide us some more color with?
See, margin, if you see the past, we have maintained margin between 12 to 13%, and that is easily possible. What affects is only these geopolitical things. If these are all stable and the outlook remains stable as we have seen for last many years, then I am quite optimistic of getting margins, PAT margins, more than 14% in the long run.
No, absolutely. And thank you so much for helping us out with that entire outlook also coming in, not just for the medium term, but also the long term as well. So the margin momentum is really sustainable. That's the word coming in. Thank you so much for joining us on the show. With that in mind, let's also move on and talk about another earnings counter that's in focus. That's TVS Supply Chain Solutions. The company reported a strong fourth quarter with double-digit growth across revenue and EBITDA while returning to profitability on a year-on-year basis as well. In fact, Puneet caught up with the management. Let's go across and listen in to a slice of that conversation.
Being joined by Mr. Ravi Vishwanathan, he's the managing director of the company, as well as R. Vaidyanathan, he's the global chief financial officer at TVS Supply Chain. Gentlemen, both of you, thanks so much for joining in. Just firstly, before we get into the quarter gone by, as well as what's the outlook for the next year, Mr. Vishwanathan, we've spoken to you since the company got listed, and you've been always upfront at a very tough time for the global logistics industries as a whole, and you've put out an exchange filing, of course, via the company. This would be your last quarter as the managing director, and you would be resigning very soon. So firstly, many congratulations on a very great stint at the company. Just wanted to understand what has been some of the key highlights for you, as we come to this very, of course, a very good tenure for you at the company, especially given the uncertainty, and of course wishing you the best. But please go ahead, sir.
Firstly, thank you, and I've always enjoyed my conversation with NDTV. Thank you so much for your wishes. It's been a phenomenal, I would say 6 years in the company. I joined the company, and very soon we were with the world's first COVID situation. The supply chain obviously was disrupted then. We came through a recovery phase, and then we had significant challenges around wars, the Ukraine war, the Red Sea situation, and then more recently the geopolitical environment, which has been turbulent over the last year, and more recently the war in West Asia. But in between all of that, there have been moments of glory, moments of celebration. We listed the company. It was a very important landmark for the company. And, we've had phenomenal success in terms of customer acquisition. We have some fantastic leadership. And most importantly, a fantastic set of colleagues who have been part of this journey. And in many ways, I would say it reflects the character and the resilience of this organization. And today, I'm very proud to say that TVS Supply Chain Solutions is a world leader, a well-recognized supply chain solutions leader. And it comes on the back of the tremendous effort that each and every employee in the organization has put in. And that's reflected in our current year's numbers. In a very, I would say, up and down environment, to turn the company to deliver 100 plus crore profit is something which all of us are very proud of here at TVS SES.
Just one question, because and your presentation talks about quite a few of the aspects that you've given as well in this conversation. In terms of GFS specifically, you've seen the India business do very well. The growth has been almost 38%, while the global business is almost just up about 3%. It's a completely reverse picture for the integrated solution business. Is that something that the nature of the business is such that you are seeing that discrepancy, and do you expect that to continue forward as well, that GFS India business will continue to do well, or do you feel that some aspects will change for both of those businesses in FY27?
So clearly, GFS India will continue to do very well, but we're optimistic that the rest of the world business in GFS will do better than what we did last year. So our outlook for GFS is actually definitely better than our last fiscal, and that's going to come on the back of both India and rest of the world doing better than what they did in the fiscal that just went by. So we are fairly confident of that. In fact, we believe that GFS will definitely be a turnaround for us as we go forward. On the ISCS side, it's important to note that the India growth story is something which is spectacular. If you look at India as a geography, year on year we've grown 31%. The India business has been led, I would say, by both GFS, ISCS first and GFS. We see a sequential growth in India. That's Q3 to Q4. Our revenue has grown by 14.5%. I think that's a clear indication of what we see going into FY27. The third aspect is that if you look at our new business wins, we have about 524 crores of new business wins. And that is a record number. The first time ever that we got 500 plus crores of new business wins in a quarter, which is 20% plus of the quarterly revenue. And again, that's a very strong tailwind. So overall, I think FY27, we have every reason to be very optimistic at this point in time.
Just one final question, because you mentioned about this year being profitable. Of course, you had some of these exceptional items also that helped the adjusted profit number. But if I can look at, if you can give us some perspective of the medium term, because your revenue growth has been 10% for this year, profit growth, as you mentioned, that it was a turnaround year. But given the contribution for profit to revenue is just about 1%, could we see this business get into that 3 to 4% mark in the next 3 to 5 years? Could that be a fair assessment?
Look, our aspiration is to get to about the 3 to 4% PBT to start with, and we remain very focused. I think what's important to note is that while the business is at 1%, if you look at the trajectory of how we have been climbing, that is an important indicator for us. And we think that's the trajectory that will continue to grow. And I'll let Vaidi answer specifically on what are the things that we believe will make that trajectory continue. Right?
Sure. See, I think what is important to note is, as Ravi mentioned, the exit rate of Q4 is almost 524. The new business is about 524 crores. That gives us a very, very strong hit as we enter into FY27, and also a significant improvement in the adjusted EBITDA margin. Right? I think we moved the adjusted EBITDA margin, especially the ISCS business, from almost 8.5% to almost 9.3% in this quarter in Q4. So all this bodes well for us. When we look at the PBT margin, I think we should definitely be somewhere around, from an aspirational point of view, 3 to 4% is something which we definitely target from an aspiration.
Alright, then, so that's the word coming in for something like a TVS supply that's in focus as well. Let's also talk about Hitachi Energy. That particular counter is buzzing away in trade today as well. And when you talk about the brokerage verdict coming in here, you do have Jefferies that has maintained a buy rating. They've hiked the target price by quite a lot. And the multi-year structural growth story is something that they're highlighting. They're also raising the FY27 to 28 EPS by 10 to 27%. Now, in terms of the industry demand trends, they're talking about how these are remaining robust for the HVDC projects. They're talking about how these are margin accretive right now, and that's going to be helping the company going forward as well. They're also flagging how there's an announcement of an additional capex to meet the industry demand in terms of the key growth triggers as well. They're talking about data centers, exports that are high, that are going to be driving some of the demand as well going forward, and that's something that they've highlighted. Lastly, when you talk about the EPS CAGR as well, they're talking about 58% as something that they're penciling it out for FY26 to 28, and that improves some of that visibility as well. Quite the bullish view coming in there, but that's all the time that we have on the show for now. Thank you so much for tuning in.
Investments in specialized investment fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy related documents carefully before making the investment decision.
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
And the award goes to
Tamanna Inamdar, Managing Editor, NDTV Profit.
Leading the newsroom, shaping the narrative. From stories to impact, a voice that matters. Tamanna Inamdar, among India's most influential, power, purpose and perspective recognized. NDTV Profit's editorial force gets industry-wide acclaim. He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table-thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better.
Good afternoon, you're watching Small Cap Bazaars with me, Somit Sarkar. Well, if you look at the markets, not a great day. It's a dull day, in fact, for the markets. It has been consolidating near the 20,900 level. Not much of an action that we have seen. Yes, the Nifty Bank Index is down 200 points, but that is largely because of just one stock, that is HDFC Bank. That stock is down around 2.5%, and similar is the case when it even comes to the benchmark. It's HDFC Bank that has been pulling even the Nifty and the Nifty Bank Index down. HDFC Bank is down nearly 2.6% on media reports that had come in today early morning which were quite negative for HDFC Bank, though they have come out with this clarification where they are denying all these claims. If you look at the sectoral indices, the banking names are under pressure. Surprisingly, the Nifty Media Index has been in trade, followed by Nifty Metal and Nifty Auto Index, both up anywhere between 1 to 1.5%. Nifty Media Index is up nearly 4% in trade. Apart from that, it's energy and the PSU banking names which have been gaining in trade. But when it comes to the small cap names, a lot of stocks have been buzzing on the back of good numbers. Timex Group, that is up nearly 16% in trade on the back of numbers. Max India is up 15%. Gujarat Thymesis, that counter is up 15% after a very long time. We are seeing this counter moving up 15% in trade. Penar Industries, Coffee Enterprises, Delta Corp, all up more than 10% in trade. For Delta Corp, obviously there's a news that is expected to come in related to GST on gaming, and that could be one of the reasons why the stock has been buzzing in trade. On the flip side, we have Skoda Tubes, Lay Merit Exports, Be Right Real Estate, Transpac Industries, Insulation Energies down anywhere close to 8 to 11% in trade. But today, firstly, we'll be speaking with the management of Shriram Properties. Now, the company came out with its numbers in the fourth quarter, Shriram Properties has reported its highest ever revenue and profit, and this was largely driven by the record handovers that the company had done in the fourth quarter of FY26. Apart from that, if you look at the profit before tax was also up nearly 25% on the back of lower finance costs. Customer collections also reached a new high of 1,660 crore rupees. Let's get it, the management, Mr. Murli, the CMD of Shriram Properties, to understand more on what lies ahead for the company. Firstly, to start off with, sir, for FY27, how's the pipeline looking like? What is the gross development value? What are your targets when it comes to pre-sales number and collection numbers?
Fantastic. Thank you. Thank you for hosting us. As you've seen, FY26, we have done a fantastic performance, and we are looking ahead on FY27 from 2,350 crores in FY26. We are looking at growing to 3,500 crores sales value in FY27, which is roughly about 41% growth is what we are looking at. And we have got about 6+ million square foot launches. And the collection also, we are looking at about 1,600 to 2,000 crores collection to reach. So from 4.15 million square feet, we are looking at about 5.5 million square feet growth. So FY27 looks very, very robust, and we are aggressive, and we are extremely optimistic about the market potential what we have today.
And sir, if you could just also share with us, what is your long-term revenue and profit number that internally the company is eyeing for?
Can you come again?
Wanted to understand the long-term revenue and profit numbers that the company is internally targeting.
We are looking at the growth of, on the revenue side, at least about 30 to 35% growth in the next 3 years' time on the revenue. On the profitability, which will be slightly more than that.
Okay. And any debt concerns that you have, anything you plan to repay on that front, on the balance sheet front?
Ours is the, most appreciated company in real estate space in terms of debt equity profile. Our debt equity profile is one of the lowest in the sector. Ours is about 0.25, 0.28% at this point of time. And there is, in fact, there is a lot of leg space and leg room for us to, raise extra capital, which we are very cautious about it. We have been maintaining this 0.25, 0.3 debt equity ratio for a long period of time. And we also generated a good amount of cash flows last year, free cash flow, which close to about 250 crores of free cash flow generated, about 370 crores of free cash flow has been invested into new projects. As an organization, we are looking at generating at least about another 550, 600 crores of free cash in the next 2 years' time. So debt equity ratio is not at all a concern. In fact, we have got a much bigger leg room for us to expand our growth today.
Okay. So in FY27, are you planning to enter any new markets? And given the overall market scenario, the macro scenario, the war, because of which there are a lot of concerns on the economy, Indian economy as well, given the fact that crude is trading around $100 now per barrel and rupee has been depreciating. There is a lot of concerns on the economy as well. Are you seeing any initial signs of slowdown or lower bookings coming in?
Last May, we launched a project in Pune, one single project. That is the first entry outside South India, other than Eastern part, in Western part. As we speak today, we have got close to about 5 million square feet across 3 projects. There is a good growth momentum coming up in Pune. We are an established player in Pune, and our brand is well reckoned in the marketplace. That has given us encouragement to look at maybe Bombay. We should look at soon. We'll start exploring Bombay as a market, because we also wanted to look at Pune established first, then look at other markets. So results have been very good. On the overall thing, what we feel, government is doing a fantastic job in controlling inflation, controlling managing the oil crisis, and we have an exemplary example of how government has managed COVID, and we hope and expect government to manage this current situation also in the same way and come out with a flying color. With respect to the demand, I don't see demand coming down for real estate sector today, particularly in the space where we are operating, mid-market and mid-premium segment. We don't see the demand coming down at all. Also in the markets where we operate, whether it's Bangalore or Chennai or Pune or Kolkata or Bombay, when we look into it, so I don't see demand coming down at all in this space where we are operating. Demand is only going up further and further. Overall, on the cost is in good control today. on the selling price also, there has been a reasonable increase which is happening today. We, appreciate government, intervention from time to time in making sure that they give this positivity to the sector and as well as to the overall economic situation. We are extremely bullish on this.
And out of all the markets that you're present in, which is the fastest growing market and where we are seeing an highest improvement in pricing?
All the markets are doing good. If you need to prioritize, maybe Bangalore, then Pune, then Chennai, then Calcutta. Calcutta, as you see, we have got a large land bank. Now, new government has started pushing quite a lot of reforms. We are getting good signals. We are all getting good signals as a nation. A lot of new industries are likely to come up is our hope. And a lot of new infrastructure push is likely to happen in Calcutta. So Calcutta is the most important city for the country because that Northeast, Calcutta is an important city. If Calcutta grows well, entire Northeast will take a balanced growth. If Northeast grows well, entire country will have a right balance. So we hope government will push quite a lot of infrastructure growth and employment growth and also new industries to come up, which we are seeing good signs today. So our land bank, what we have in Calcutta, could be a big fortune. We are very bullish about Calcutta also.
And one thing I wanted to check with you on the pricing front, given the fact that you were also mentioning, in fact, it's a fact that retail fuel prices have started to move up, which could also lead to higher cement prices. Steel prices are already moved up on a YTD basis, and even PVC prices are moving up. So in fact, tile pipe prices are also expected to move up, given the fact that gas prices have become expensive. So any impact on the cost side that you're seeing?
Yes, construction cost, there could be an increase. We are conscious about it because of all this, impact on whether it's crude or oil, inflation, whatever the challenges, there is a possibility construction costs can go up. You should also not forget land price also gone up significantly. All that puts pressure on, margin, but growth will not be a challenge. There is a big demand, growth will continue to be there. On the construction cost, yes, there is a challenge. We are conscious about it and we are working towards that. Hope government has intervened in the past and ensured that inflation was in control and construction cost was in control. So it will continue to be in the same way as our wish and desire. And we have a lot of confidence in the government in making sure that this is in good control.
Well, thank you, sir. Thank you for joining us and giving us the way forward for Shriram Properties. Well, that was the management, quite confident on the growth path, and tall guidance is something that the management has given for FY27 and FY28. Now, before we move on to our next management, let's get in Sharad to understand what's been buzzing on the F&O side.
Well, largely we see HDFC Bank has been a drag, ONGC has been a drag, but that momentum has actually shifted. Not a lot, but definitely the metal names, they are doing well. Of course, look at Tata Steel, Power Grid, they are doing well. And we're seeing, of course, a little bit of concern in some IT names, but net, the technical strength is still towards, a positive momentum, at least on the medium-term basis. But yes, it's a stock-specific market, and action is much more there in the mid-caps, to be honest. But Excite, the top gainer in the F&O, and a good volume-based buying happening here. Swiggy also, we're seeing a good up move, with stock jumping almost 6% in the day's trade. If you look at it, short covering, we have Siemens and Sammaan Capital fresher positions are being made here. This is you could say one of the first days for the new series. For emphasis, we have PNB Housing Finance, and to be honest, there isn't much a major trade here. It's just there. ONGC, that concern is there. It's down 4.5%, while LIC also, last time we checked, it was almost 2% down, and now it's more than 3.5% down. So it has intensified a little bit of selling when it comes to that. But it's largely, you could say, a stock pickers market, and overall on the indices, no major trade to be made, honestly.
Thank you, Sharad, for that. Let's slip into a short break and we'll be back with more news and managements on the other side.
Investments in specialized investment fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy related documents carefully before making the investment decision.
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
And the award goes to
Tamanna Inamdar, Managing Editor, NDTV Profit.
Leading the newsroom, shaping the narrative, from stories to impact, a voice that matters. Tamanna
Welcome back. You're watching Small Cap Buzzers here at NDTV Profit. The next small cap buzzer that we are going to talk about is Meghna Infracon. Now, to take this conversation ahead, of course, we're joined by Vikram Lodha, the promoter and managing director at Meghna Infracon Infrastructure, joining us now. A very good afternoon to you, Mr. Lodha, and thank you so much for taking out the time. My first question to you is that when I was looking at your Q4 numbers, there's been good top line growth, but in terms of where margins go and EBITDA growth, that's largely been impacted because of higher input costs and in terms of project mix as well, in terms of approvals, and there were one-off expenses as well. Just want to understand as to what has fared in this quarter in terms of what has put pressure in terms of margins, and going forward, when do you think margins will recover and come back to a normative range, and what will be that normative range?
So there were little pressures because earlier it was known as we had a security business. So earlier it was known as NISA Securities. So we had a one-time share profit last year taken into consideration, which this year has not been. So that's the reason. And if you minus that figure, it is the profit is in line with the expectations.
What about margins? What is the normative range that you're expecting in FY27?
FY27, we are expecting the margins around 30% plus.
In terms of your overall development, I think if I'm not wrong, you're taking up the asset light approach. Just want to get a sense as to what is the breakup looking like right now and what is it going to be like in the next 2 years?
So it's going to be the same only. At the same time, we have around by September end, we are having around 4 launches expected. So we are looking at a good pre-sales number at this stage. That's what we are expecting.
Okay. Okay. Talking about FY27, if you could share some guidance on what is the kind of gross development value you're looking at, any new markets you're looking to enter?
So overall, so on June, our team has just confirmed June 22nd, we are launching Thane Meghna 1 IT Park, which is a pure commercial project. And by July first week, we are launching our Ju project. So we are expecting a good pre-sales number in next 2 quarters.
What is the number again in terms of GDV growth for FY27?
So GDP growth is around total, there'll be total, I guess, in June we are launching 300 crores, and by July first week we are adding another 100 crores, and total value of GDP would be by July as August first week should be in the market around 1,100 crore.
Okay, and then in FY27, what is the top line that you're aiming at? Because in March you've done around 46 crores. I mean, ending March you've done around 46 crores. So where does FY27 top line growth go, and the bottom line number as well, if you can give us whatever internal targets that you have?
So top line number we should look at around anywhere around 400 to 500 crores.
Okay, so.
And by bottom line, we are looking around 40 crores.
This is for FY27 that you're saying, from a 46 crore in FY26 to a 400 crore in FY27?
Yes.
Okay, all right. And if I'm not wrong, you've also said that you plan to do around 3 to 5 new projects annually. Is that correct? You plan to add at least 3 projects or up to 5 projects in FY27?
So right now the GDV is around 1,100 crore. We are expecting in another 1 year or 2 years to double the GDV.
Given that you have such great expansion plans, just wanted to understand, does the company have enough funds, any equity raise that you're looking at, or any debt raise?
As of now, nothing. We want to be as light as possible. We want to keep the company as debt-free as possible.
You fund this expansion?
No, we have not decided. We just not decided to take any debt on our books. We want to keep it as light as possible.
So are you saying that the internal accruals will
All
be...
internal accruals.
That
yes.
will be sufficient enough for such expansion plans?
Yes.
Okay.
Yes.
In terms of the South Mumbai market, that's, because a lot of people are taking up redevelopment in that space, especially in the luxury space. Just want to get a sense in terms of competition, what sets you apart?
So our location is always the key factor, and our pricing. So if you see in South Bombay, people, I guess, the Dadar project which we taken up, the rate around other people is around 120, 130,000 per square feet. We coming up with a good pricing where around 80 to 85,000 per square feet, which is, in that segment is a key benefit for us. The pricing is also a key factor to get our location sold out.
And lastly, sir, just wanted to understand, on the costing side, we are seeing an increase in petrol and diesel prices, which will lead to higher cement prices. Tile prices are increasing because of gas prices. Steel prices are already on an uptrend on a YTD basis. So what is the impact on cost side that you're seeing?
Yes, costs have increased by 10 to 15%, but we are trying to absorb as much possible and not pass on to our customers. So we are our team is well prepared, and in fact, all our orders and everything was all placed beforehand. But yes, 10-15% increase we see right now in the current scenario. And we'll try to get the costing as much as possible to the downside.
Okay. All right. Okay. Thank you so much, Ms. Lodha, for taking out the time and giving us answers for all our questions. Thank you so much. So, from a 46 crore to a 400 crore in FY27 is what the company is planning. But moving on to our next management, today's show is packed with managements, and Muffin Green Finance is the other one in focus, which of course did come out with its Q4 numbers. And to talk about it, the stock currently is trading 1% higher. And to talk about this, we're now joined by Gunjan Jain, who's the CFO of Muffin Green Finance, joining us now. Gunjan, a very good afternoon to you first of all. In terms of how Q4 has panned out overall, because on a year-on-year basis, your disbursements have almost tripled. Just want to get a sense as to what's worked here and what's the outlook going forward in FY27.
Hi, thank you and good afternoon everyone. So like Q4 was very good for us in terms of disbursement, in terms of equity raise, in terms of profitability. To start with the disbursement, we had made a disbursement of 700 crore itself in Q4 with 300 crore in March itself through our major disbursement in Mediclaim Premium Financing, which is our primary product at present. And we achieve a PAT of 11 crore in the quarter itself, apart from the equity raise of 265 crore, which we did in last quarter, which came in our account in the month of March itself, which also help us in increasing our profitability. Apart from that, like one more product which we started in last quarter is the loan to the employees of the state government, which also help us in increasing our profitability.
Okay, so 700 crore was a disbursement that we saw in Q4. Is that run rate sustainable over every quarter in FY27 as well? Or can that number be higher?
So the trend will continue, the number will be sustainable, and we are expecting our AUM to be somewhere around 2,300 crore by end of this financial year. For that, the respective funding is available with us, and all the tie-ups are working properly. Like we are active in our Mediclaim and the employee loan disbursement, and we'll achieve the target for sure.
So from 1,500 crore to 2,400 crore is the AUM target that you have for FY27, right?
Yes.
Okay. NIs have grown by 50%, and so is that number also sustainable? Is that kind of growth also sustainable in FY27?
The profitability?
Yeah. Yeah.
Yes, so the profitability will be sustainable. Reason being, the major disbursement which we did in March was 300 crore. The profit, the income of that disbursement is yet to come in the next quarter itself. Plus the equity which came in March, that will also help in increasing in our profitability, and the disbursement number, the leverage will also give us an advantage of the same. So the trend will continue. We'll achieve the profitability. If we'll compare from the previous quarter, we have increased our profit from 7 crore to 11 crore, and that trend will continue from next quarter itself. So yes, there will be a good jump in the net profit for next financial years.
Then overall, your gross NPA as well as net NPA has improved. Do you think these levels will be sustained in FY27? Do you expect further improvement?
Since we have pivoted from the EV financing to the Mediclaim Premium Financing and this employee loan financing, which is entirely digital product, and we are backed by the insurance companies and the government, somehow some comfort is there in terms of the recoverability. So that is why our gross NPA has improved, and it will improve a lot, because we are seeking somewhere around 60 to 70% of our portfolio will be in these two particular products, where like the portfolio quality is 98% zero DPD, and we are getting 100% digital collection. So OPEX and everything is very negligible in these two products.
Just one last question, Gunjan, from my end is your borrowing cost is already reduced to 12.17, and that's almost a 163 basis points cut. You've guided for a 10% in FY27, if I'm not wrong. Yes. If yes, what are the levers that are going to help you do that?
So what we are expecting is, so we are going for the rating upgradation really soon, giving our documentation to the rating agencies, which will further help us in reducing our borrowing cost across all the lenders. Apart from that, we did one PTC transaction from Aditya Birla, which was done at 11%, and we are expecting to improve the rate in terms of new PTC transactions going forward.
Okay, all right. Gunjan, thank you so much, for helping us answer all those questions and taking out the time and speaking with us at NDTV Profit. But with that, viewers, we are completely out of time on this edition of Small Cap Buzzers. But if you have stock-related queries, then do stay tuned, because Ask Profit is up next.
Investments in specialized investment fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy related documents carefully before making the investment decision.
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
And the award goes to
Tamanna Inamdar, Managing Editor, NDTV Profit.
Leading the newsroom, shaping the narrative, from stories to impact, a voice that matters. Tamanna Inamdar, among India's most influential, power, purpose and perspective
Welcome back. You're watching Ask Profit here at NDTV Profit, and this is the afternoon edition, and this is a show that gets all your stock related queries answered. For viewers who are just tuning in, you can either call us or send us your queries on the WhatsApp number that is flashing on your screen up there. But before we start taking that, and by the time you send us your queries, we'll take a quick look as to how the markets are doing at the moment. The Nifty 50 is trading almost flat, in fact just flat. It's trading around the 23,900 levels is what we're seeing, sustaining the 23,900 levels. Crucial levels, of course, to watch out for. When we'll see the 24,000 action coming in, we'll have to see whether that happens in the next 1 hour or not, but completely off from its day's high point for the Nifty 50. The Bank Nifty, in fact, has turned into the red. Now trading around 0.3% lower, below the 55,000 levels is what we've seen. So almost 180 point of a dip is what we've seen in the Bank Nifty. Let's try to pull up the Nifty 50 heat map and see if things have changed there. ONGC, the top loser, still now losing around 4.3% grounds. ITC is the other one, which is down 3% as we speak. HDFC Bank, yet another 2.5% of a downtick. Coal India, as well as HDFC Life, seeing a downtick of around 1% each. But on the flip side, you have Hindalco still holding up, still up around 3.5%. Power Grid up 2.6%. Interglobe Aviation ahead of numbers on Friday, up 2.6%. Tata Steel, Bajaj Auto, Eternal, Tata Motors, Tata Consumer are some of the names that are doing fairly well. So a lot of Tata names doing well in trade today and holding up the Nifty. But there's still more green on the screen, and that gives you at least some optimism. So let's try to pull up the advanced decline ratio as well and see as to whether things have moved there. Because overall, if you take a look at the broader end of spectrum, it's still holding up. of course, the tides have at least turned. We have narrowed in terms of where the advance decline ratio goes. Now around 1400 odd advances versus that of 1100 odd declines. So that gap between advance and decline ratio has narrowed, but the mid cap 150 is still up by about 0.3% and the small cap 250 is still up by about 0.4%, outperforming the benchmarks. Lastly, the BSE 500 quickly, if we can see that, and a lot of action there is still coming from numbers. 11% after a really long time. It's Z Entertainment which is seeing good gains. There's PNG Health on the back of strong 11% after a really long time. It's Z Entertainment which is seeing good gains. There's PNG Health on the back of strong Q4 numbers and good top line growth, up 10%. Adani Total Gas also doing fairly well now, 9.2% of an uptick. But on the flip side, you have something like a Sun Pharma Advanced Research which is down 7%, Easy Trip down 7% as well, GE Shipping, Polymedicure. Polymedicure has been taking a knock since the past 3 odd days since the numbers were out. AstraZeneca is the other one which is also seeing a downtick for around 5 odd percent. So that's with regards to where the markets go. But let's start taking your stock related questions, and to answer them today we are joined by Tapan Doshi, research analyst at catapan.in, and Osho Krishnan, Chief Manager Technical and Derivative Research at Angel One, joining us now. Welcome to both of you, gentlemen, and a very good afternoon to the both of you. I'll start taking the first question, which is from Roshni, who's writing us from Bengaluru. She's got around 200 shares of Fortis Healthcare, which she bought at the levels of 969. Wants to know whether she should sell or hold, and if sell, what other stocks can she look at in this particular space? Tapan, I'll come to you on this one. Any view on Fortis?
Well, Fortis is a good stock. Now, if you see the quarterly results are coming good, and the bed expansion is going to be there in the double digit. Again, average revenue per bed is almost, you can say that 20% and above. Occupancy is expected around 70% from here. But there are a lot many new hospitals are coming, so capex will be on a higher side, and also higher employee costs will impact the margins. But if you ask me for the long term, I think I'm much more demand on the healthcare demand. And so, of course, one can hold this stock for a little bit longer.
Okay, all right. So that's the view coming in on Fortis Healthcare. The next one that we have is from Rimple, who's writing us from Chandigarh. She has an open-ended question. She's saying she wants to know 2 stocks that she can invest in from a 1-year time horizon. Osho, very good afternoon to you. Any particular counter that you are looking at right now from a slightly long-term perspective where charts are looking attractive?
Very good afternoon to both of you and all the viewers. Yes, some of the counters are looking very positive. Some are having a kind of a reversal kind of a signal. Some are having a kind of a strong momentum. So first counter, which one may look for from a longer term perspective, is HDFC Bank. HDFC Bank has seen a strong correction, and from a longer term perspective at these levels, the counter can see some kind of a strong rebound. So near the zone of 720, it is a very strong valuation company. Right now, it is into a strong corrective zone as well, but 740, 720 will be a decent zone to start accumulating the counter. So this will be the first pick. The other counter which one may look to accumulate is from the defense space. HAL is looking very positive to me. After a very elongated period of consolidation, HAL have finally starting gaining some traction, and the defense overall space is looking very positive to me. So HAL can be seen from a investment point of view. The first upside target is nearly 4850. Once it breaches the zone of 4850, then from there onwards, 5500 can be seen from longer term perspective.
All right, the next one is on Jupiter Wagons. Ashish from Delhi wants a 2-year plus view on this particular counter, and whether right now does it make sense to invest into this or not, Tapan?
It's a good stock now. Suddenly the recovery you can see from in the stock perspective, and also the problem was the execution part, and actually there was a scarcity of one of the raw material, and that was wheel set. Basically, it was a wheel set, and that's why there was a delay in production and all that. But I think that matter is resolved, and brake system growth is accelerating. Again, the wagon demand visibility is quite good. And railway capex support the strong demand. This stock is not so expensive. Of course, it is dependent on the railway, so we have to see the orders coming on from the government on regular basis. But overall, I think strong railway policy is there. So I think much more tailwinds are there. So one can hold this stock. Even he can buy a stock at every dip.
All Right, the next one that we have is, by the way, before I start taking the next question, for viewers who are watching us, you can also give us a call on the number that's flashing on your screen up there and ask your queries